Good morning, everyone. How are you all? Fine. So, welcome to the Rocket Revision batch for November 24 exam. And so happy to see you all. And I don't want to see you thereafter. Yes. Why should I see you here? I should not see you. You understood what I mean to say? Yes. So, therefore, this November 24, by hook or crook, you all should clear somehow. Okay, because May 25 is not good time actually because there are a number of amendments for May 25. Already Finance Act amendments are there, and thereafter GST Council meeting also, and maybe someone has rubbed her on the wrong side. So because of that reason, a lot of amendments are there, and due to that reason somehow clear and no other go for you. And so a lot of students were asking me, will the amendments be covered in this? Of course, there are no much amendments from May 24 to November 24. That's what many students, I told them that don't go for any new books and all, because already whatever book that you are having, existing book, that will be sufficient. If you are having May 24 book, the same book can be used for November 24 as well. You don't have to buy any new book. And suppose if you are having like previous edition books and all, like say November 23 or May 23, etc. and all, then you should definitely have the new book. And next thing is that there are very few minute amendments that are there, and this video is also being recorded and it is streamed live right now in YouTube. We are streaming it, so it will be there in YouTube as well. So therefore, in case if you are not able to understand any particular thing, because the flow will be literally fast only, so please don't expect me to go slow, because this is rocket revision and they flag, and I am doing it mainly for the purpose of quick revision before the exam. So therefore, don't expect me to go very slow, etc. and all. And if you are attending this for the first time, so of course you might not be attending this for the first time, I know that, but suppose if you are attending it for the first time, so disclaimer, don't think that what he is speaking, I am not able to understand it like that, because definitely this rocket revision is for those who already attended my classes. They will only be able to understand what I am talking about, others will not be able to understand anything. Okay, then. So what is that we are going to do in the next 4 days starting from today? So we are going to complete this That's It book. So That's It book already you might be having. If you don't have, you have to buy that, because this is a last minute revision book. Suppose if you are already having a resource book, and in that resource book at the end of each and every chapter I have given the summary, so maybe you can make use of it. If you have revised book also, you can make use of it. So because the content will be more or less the same, extra points you can write, because see, if you buy a new book, it is like revenue for me only, but I myself I am telling don't buy. Okay, so because if you are already having, what's the point in buying all the books and maintaining a library in your home? So anyhow this portion will be changed, so it will not be useful for anyone else also in future. So whatever existing books that you have, you can make use of it. Any extra points, if you feel like, you can make note, because you can't keep on listening to the classes now, you will get sleep. Okay, so something writing also, if it is there, it will be nice for that reason. So whatever existing book that you have, you can make use of it. If you don't have any book, either resource book or revised book, etc., then you go for That's It book. And then even what we are going to do is that, because already I did for May 24 itself rocket revision, and that we have already given to all the students in the form of test series. So we have created a test series, and hope you are aware of the test series. Have you enrolled for the test series, etc.? Yes. Yes. So in the test series, what I did, I gave it like a schedule, and I have given week 1, week 2, week 3, what is the portion. In that itself, I gave the revision videos, plus I have given even the question paper, explanation video, suggested answers, etc. So already we have done the revision. So then compared to that May 24 revision to this revision, what is the difference, sir? So why we should attend? See, point number 1, this is not going to be something different from that, because I cannot teach some other subject now. I can teach indirect tax only, so the same indirect tax only, but only thing is that little bit we are changing the style. Plus in this rocket revision, we are trying to cover the MCQs as well. So that's the reason why Inquest, from Inquest book, we are going to solve the MCQs, because that's what I have felt like. Lot of students are good at descriptive questions, but when it comes to MCQs, they are not able to apply. So due to that reason, let's see what MCQs are like, how the MCQ questions are. That also I am going to incorporate in this batch. Is that clear? Then the flow will be like, today we will be starting with customs. So why customs, sir? Because generally that will come at the end. As it comes at the end, we will ignore it. So therefore, that's why I want to start the revision first with respect to customs. And so today I am devoting for customs, and tomorrow, day after tomorrow, and thereafter it will be for GST. And the weightage of customs will be for 20 marks. You all know that. In the 20 marks, so you will be having 6 marks as MCQ. Either 1 mark MCQ or 2 marks MCQ, 6 marks. So there won't be case scenario MCQs on customs. So customs MCQs are like to the point, like question, options, you need to able to arrive at the answer. And sometimes 2 marks MCQs or 1 mark MCQs will be there, but last time it was 2 marks MCQs, and 3 MCQs will be there, 3 into 2, 6 marks. And thereafter, first question, there won't be anything on customs, because question number 1, which is a compulsory question, is completely on GST only, which is a integrated question that covers lot of aspects. And then we have question number 2 to question number 6. In that question number 2 to question number 6, part C, that is 2C, 3C, 4C is actually customs portion. In that 4 marks only. So which means that you have to write any 4 questions out of 5 questions. So question number 2 to question number 6. And in these 4 questions, 4 into 4, 16 marks plus there. So we will be having some 4 marks or 6 marks like that. So that is about the weightage of customs. And FTP, of late what has happened, FTP weightage is actually now negligible. So reason being, entire customs and FTP they are asking for 20 marks. Due to that reason, so literally it is negligible only. So due to that reason, even if you skip FTP, it is okay now. But up to last attempt, so like old syllabus, skipping FTP is not at all an advisable thing. But now it's okay, fine, because anyhow FTP related question they will be in question number 6. Question number 6, I know that majority of you will not be interested to attempt question number 6, because question number 6 is a theory question, purely a theory question. Unless otherwise the question number 2 to question number 5 is so difficult, the practical questions are so difficult, then only you will be attempting the theory question. And my advice also, don't attempt theory question, because based on whatever papers that I have seen, this RTI papers and all, evaluated answer sheets. So I have not seen full marks given for this question number 6, that is theory question, how much ever the student is writing, but they are not giving full marks for that. So due to that reason, you have to write between 2 to 5. If say in this 2 to 5 the questions are so difficult, like one question is so difficult, you don't know that concept, etc., then you will be touching question number 6. Okay. So therefore FTP, rather than ignoring fully, so we should not ignore the chapter, rather than ignoring fully, we will make a selective approach. Like all important areas in FTP we will see, so that what will happen in exam, suppose if you are attending that question number 6, so that you will be able to attempt that. For that reason we will prepare. Okay. Then coming back to the discussion, so I told you that we will be starting with customs, and students were asking, sir, will this revision lecture be there in YouTube? It will be there. 2020 onwards it is there only. So I have not removed. Anyhow YouTube free server only, na? So I have just kept. And we have not removed it, it will be there. And our team will be adding the thumbnail so afterwards, so that if you want to read or revise any particular chapter also, you will be able to go and you can do that. So please look into That's It book, page number 183, segment 23, taxable event under customs. Yes. So in this, you can see there, first we are talking about the Customs Act. So when it comes to customs, you need to remember 2 acts here. Customs Act 1962 and Customs Tariff Act 1975. These are the 2 acts. And section numbers, you make an effort to remember at least few section numbers. So the section number will be of mostly Customs Act 1962, unless it is related to types of customs duty. For types of customs duty only, the section number will be Customs Tariff Act 1975. Whereas in all other chapters in customs, it will be Customs Act 1962. So first we are starting with the levy, that is basis of charge, section 12, which says that there will be customs duty if 4 conditions are satisfied. What are the 4 conditions? First, there must be goods. And customs duty is not on services, there must be goods, and that goods must be imported or exported. But such goods must be what type of goods? Dutiable goods. What are dutiable goods means? Dutiable goods means which are covered under the Customs Tariff Act 1975 is called as dutiable goods. Again I am repeating. So we have Customs Act 1962 and Customs Tariff Act 1975. These are the two acts that we have. So first we are talking about the levy, section 12, which says that 4 conditions should be satisfied. All the 4 conditions should be satisfied, then only there will be levy of customs duty. So what are the 4 conditions? There must be goods, and that goods must be dutiable goods. What are dutiable goods? Those which are covered under the Customs Tariff Act 1975. So we have some list of goods on which customs duty rates and all is mentioned. So those goods are called as dutiable goods, and that should be imported or exported. What is the meaning of import of goods? Bringing goods from outside India to India is known as import of goods. Taking goods from India to outside India is known as export of goods. This is the definition which is common between GST as well as customs. So import of goods and export of goods definition is same between GST and customs. Import of goods means bringing from outside India to India, and export of goods means taking goods from India to outside India. Is foreign exchange a relevant criteria to call the transaction as export of goods? No. For export of service only, foreign exchange is a relevant criteria. For export of goods, foreign exchange is not at all a relevant criteria to be called as export of goods. So once you are taking goods from India to outside India, it will be called as export of goods. However, if you are claiming any incentives, let it be under FTP or customs or under GST, if you are claiming any incentives, so that particular incentives, if you have claimed, you need to ensure that you are realizing the foreign exchange proceeds within the time limit specified under FEMA. So what is the time limit specified under FEMA? 9 months from the date of export, you need to realize the proceeds. So that is a condition given under FEMA. What will happen within 9 months if I am not realizing the proceeds? All these I am talking for export of services or export of goods? I am talking for export of goods. So why am I not talking for export of services? Because in case of export of services, realization of foreign exchange is inbuilt into the definition itself. So which means that only when we realize the consideration in foreign exchange, it will be called as export of services. The transaction will be treated as export of services. Whereas in case of export of goods, they did not keep realization is convertible foreign exchange as a condition to call the transaction as export of goods. If you are taking goods from India to outside India, it will automatically become export of goods. But there is a condition which says that if you have claimed any export incentives, ensure that you are realizing the profits within the time limit under FEMA, which is 9 months. If you are not realizing, any benefit which you have already claimed will be recovered from you along with interest and penalty, and this is actually called as erroneous refund. So this erroneous refund depends. If you are claiming the incentive under customs, it is erroneous refund under customs. If you are claiming the incentive under GST, it is called as erroneous refund under GST. So both the laws has the recovery mechanism and they will be recovering it from you. And thereafter RBI has given some time limit. What is the time limit given by RBI? 6 months is the further extended time limit given by RBI. So you have to remember 2 time limits. So what is the time limits? 9 months under FEMA and 6 months under RBI. Now, so coming back to this, is realization of convertible foreign exchange a condition to be called for the purpose of export of goods? No. So that is not at all a condition, but that condition is dependent upon the incentives if we are claiming. So that's why it is not there in the definition per se. So imported or exported, and such goods should be imported where? Imported into India or exported from India. So what is the meaning of India for the purpose of GST? For the purpose of GST, India is up to 200 nautical miles from the baseline. But for the purpose of customs, India is only up to 12 nautical miles from the baseline. So there is a difference between the meaning of India under GST and customs. So therefore you can see the definition below. So meaning of India, India means only territorial waters of India. So which means it goes up to 12 nautical miles from the baseline. That is called as territorial waters. And will the subsoil as well as air also covered in case of territorial waters? Yes. So both the subsoil as well as the airspace, both will be called as territorial waters. And there is some more waters called as exclusive economic zone. What is exclusive economic zone? Up to 200 nautical miles from the baseline. Then what is the purpose of this exclusive economic zone? So mainly for the purpose of empowering the customs officer, but the meaning of India as per Customs Act is only 12 nautical miles, but from 12 nautical miles to the 200 nautical miles, so the difference 200 minus 12, that is 118.8. that nautical miles, customs officer will have power in order to confiscate a vessel or in order to arrest a person, etc. and all. And beyond 200 nautical miles is known as high seas or international waters. So that is about this. Now, so therefore, such imported goods should be into India or export must be from India. The next point you need to know is that, is government also a person? Yes, government is a person both under GST as well as customs. So in indirect taxes, government is a person. So government is also required to pay GST. Government is also required to pay customs duty on the goods imported by them or exported by them. Government goods shall be treated on par with non-government goods for the purpose of levy of customs duty. And next here, there must be goods is the first condition. So what is the meaning of goods? Generally, goods means what? Any kind of movable property. So here also any kind of movable property is only coming under goods, but specifically they have given few things as goods. So general meaning goods means any kind of movable property, but goods means what? Here specifically given vessel, vehicle and aircraft. So that aircraft which are brought into India from outside India to India with passengers or with goods is also called as import of goods. For example, there is an aircraft, Lufthansa Airlines, which is bringing the passenger from outside India to India. So now that aircraft is called as import into India. Means, sir, on that aircraft are we required to pay customs duty? No, because that aircraft is now a foreign going vessel or aircraft. Due to that reason, we don't have to pay any customs duty. What if that aircraft is used for the purpose of domestic transportation in India? We imported an aircraft, and that imported aircraft we are using it for domestic transportation. Should we pay customs duty on that aircraft imported into India? Yes. Suppose if the aircraft is coming to India and again taking the passengers outside India, we don't have to pay any customs duty on that aircraft or vessel or vehicle. But if that vessel, vehicle or aircraft is brought into India and thereafter further used for domestic transportation, on that vehicle or vessel or aircraft we need to pay customs duty as if this is goods imported into India. Then stores refers to passengers, baggage refers to passengers luggage. So baggage is also treated as goods, like passengers who are coming from outside India to India can bring some goods along with their bag, and those goods which are contained in that bag is called as baggage, and on that also customs duty will be payable, and the rate of customs duty in that case is 38.5% is a customs duty that is payable on that. So that is also goods for the purpose of customs. Whereas stores refers to goods which are present in the vessel or aircraft, whether or not for immediate consumption. So what will come under stores? The food items, the water, the fuel, the spare parts or any other engine, etc. related items. All these including the life-saving equipments, life-saving jackets, all those things will be called as stores, which are for consumption during the conveyance is called as stores. So as stores also some goods can enter into India. For example, an aircraft which is coming from outside India to India, there is some leftover fuel in that aircraft. That leftover fuel in that aircraft is called as import of fuel. So there is an aircraft which is coming from outside India to India. There will be some ATF which is left over in that aircraft. That leftover fuel which is there in the aircraft is called as fuel imported into India, and we need to pay customs duty on that fuel. Same way, some goods which are contained in that aircraft as stores which are coming into India, we need to pay customs duty on those stores which are present in that aircraft as if these are imported into India. However, we have some relaxation. That relaxations we will be studying in stores chapter, but these are called as goods only. And next, currency and negotiable instruments. Related to currency and negotiable instruments, one important point, we are connecting it to GST. What is that? This currency and negotiable instruments are not treated as goods under GST. Not treated as goods under GST. So why it is not treated as goods under GST? Because goods definition under GST excludes money and securities. So as currency is money, it will not be treated as goods, which means that under GST, but it is treated as goods under customs, which means that on import of currency, are we required to pay customs duty? Yes, we are required to pay customs duty. So whenever we are required to pay customs duty, we will be paying so basic customs duty, then social welfare surcharge and IGST. These are the normal customs duties that we will be paying on import. So basic customs duty is payable on currency, social welfare surcharge is also payable on currency, but IGST will not be payable on currency because currency is not treated as goods under GST. So then next one, any other kind of movable property, that is the meaning of goods. Then next, so goods definition will not be tested in exam, but somewhere in the question they will be giving, so based on application or MCQ, so that's where it will be connected. Stores, already I told you, means goods for use in the vessel or aircraft and includes what? Fuel, spare parts or any other articles or equipment, whether or not for immediate fitting. And import, already we discussed. What is the meaning of import? Bringing goods from outside India to India. Export means what? Taking goods from India to outside India. And India definition already we have seen. What is customs area? Customs area means in the port or airport, so whatever is the area which is under the control of the customs department is known as customs area. So area under customs station and includes any area in which import goods or export goods are ordinarily kept. So unloaded goods and all is kept in one area, na? So that area is also called as customs area, and those unloaded goods are kept under whose control? There is a person called as custodian. So imported goods are kept under the control of custodian, and till the time the goods are cleared from the port or airport, the goods will be under the control of custodian. During that stage, if the goods are lost, then who will be required to pay the customs duty? Custodian is required to pay customs duty, and for the importer we call it as pilferage, and importer is not required to pay any customs duty on that pilfered goods which are lost when it was under the custody of the custodian. Then next, dutiable goods means goods which are chargeable to duty. I told you already. So how do we know whether the goods are chargeable to duty or not? We need to refer to the Customs Tariff Act. There we will be able to identify on which duty has not been paid. So once you pay, it will be called as duty paid goods. So far you have not paid, that's why it is called as dutiable goods. And once paid, so once paid it will be called as, once paid it is what goods? Duty paid goods, duty paid goods. Right now it is dutiable goods. Then Indian Customs waters, you tell me Customs Act extends up to how many nautical miles? 12 nautical miles or 200 nautical miles? 200 nautical miles. The meaning of India is only 12 nautical miles, but I told you the powers of the officers will go up to 200 nautical miles. That's the reason why Indian Customs waters is 12 nautical miles or 200 nautical miles? 200 nautical miles. So Indian Customs waters is up to 200 nautical miles from the baseline. And what is the meaning of export goods? Export goods means which are to be taken. Exported goods means already taken. English, just English only. Okay, export goods means to be taken. Exported goods means which is already taken out of India. And who will be called as exporter? The owner who is manufacturing the goods and exporting the goods is called as exporter. Suppose if I am manufacturing the goods and you are exporting the goods, so you will be holding yourself as a exporter. So you are also exporter, and I am the supporting manufacturer, beneficial owner. Actually, I am the owner of that goods, but I am not exporting. I appointed you as the merchant exporter or third party exporter. What you will do is that you will be exporting on behalf of me. So you are also called as exporter, I am also called as exporter. If I manufacture the goods and I am only exporting, so I am the owner of the goods. So that three words: owner, beneficial owner, or person holding himself to be exporter. Then beneficial owner means who? On behalf of whom you are exporting is known as beneficial owner. That's what I told you. I am the owner of the goods, but I am not exporting. On behalf of me you are exporting, so I will be called as a beneficial owner. A person on whose behalf the goods are being imported or exported, or who exercises effective control over the goods being imported or exported. So because if I am the owner of the goods, I will only have control over that goods now. Then I am just appointing you as a person to export. Why can't I do? Because I don't have the license. Generally, there are some goods called as restricted goods under foreign trade policy. Those restricted goods requires authorization under foreign trade policy. That authorization will be given to a person, and that person only can make an export. I don't have the authorization. You have the authorization. Authorization is like a license or permission. Who will be giving that authorization? Directorate General of Foreign Trade. Under foreign trade policy, they will be giving that license to you. And I don't have the license, you have the license, so therefore you will be exporting, but I am the owner of the goods, so that's why it will differ. Okay. Next, imported goods, already we know, goods which are brought into India already. And importer, same way how exporter is owner, beneficial owner, or a person holding himself to be importer. So for example, I am the owner of the goods and I am only importing, I will be called as owner, importer. Whereas I am the owner of the goods, but I am not able to import because I don't know the custom formalities or I don't have the license to import. So I am appointing you as the person to import on my behalf. So I am the beneficial owner and you are holding yourself to be importer. Then next, baggage already we know, so it refers to luggage, but it includes unaccompanied baggage also. Unaccompanied means which is not accompanying the passenger, means it comes either before the passenger's arrival or after the passenger's arrival, then it will be called as unaccompanied baggage. Unaccompanied baggage is also coming under baggage definition, but baggage definition does not include motor vehicle. No idiot will now bring motor vehicle as a part of baggage and all. So once upon a time when people used to travel in ships and all, they used to bring, but now no one is bringing, they will bring it like a cargo only. Then coastal goods. Coastal goods means what? Which is referring to the goods which are taken from a port in India to another port in India. Means it is not from India to outside India or outside India to India. From one port in India to another port in India, then it will be called as coastal goods. Means goods which are transported in coastal waters is known as coastal goods. What is coastal waters means? The moment you see coastal waters, it refers to sea, not land waters. Inland waters. So inland waters means specifically they will call it as inland waters, but coastal waters means it refers to seaways. Okay, mainly this will be useful for GST. Next, foreign going vessel or aircraft. What is a foreign going vessel or aircraft? Name itself it says any vessel or aircraft which is taking goods or people from where to where? India to outside India. That aircraft or vessel is known as a foreign going vessel or aircraft. Simple definition na. So any vessel or aircraft for the time being engaged in carriage of goods or passengers between any port or airport in India to any port or airport outside India, whether touching an intermediate port or airport or not, is called as foreign going vessel or aircraft. That is simple. But we have some more aircrafts or vessels which will be treated as foreign going vessel or aircraft that you need to remember. So any navy vessel of foreign government taking part in any navy exercises. So sometimes the Indian Navy will be conducting lot of naval exercises. They will be inviting so various countries to come and participate in the navy exercises. So they will be bringing their navy vessels. So that will also be coming under foreign going vessel or aircraft. It is not carrying any goods or people, but it is coming for participating in the navy exercise. That's why it is a foreign going vessel or aircraft. But it do not belong to Indian government. It belongs to foreign government. Any vessel engaged in fishing or other operations outside the territorial waters of India, because I told you, so India means what? 12 nautical miles territorial waters. So once the vessel crosses the territorial waters, it is called as a foreign going vessel or aircraft, and it is going for fishing operations. It is not carrying any goods or people. Even then it is a foreign going vessel or aircraft. Any vessel or aircraft proceeding to a place outside India for any purpose whatsoever. So any purpose whatsoever means if it is carrying people or goods, that will be anyhow coming under foreign going vessel or aircraft. Sometimes what will happen, say we will be taking one flight, one Rafale flight like that, we will take to catch one Pakistani terrorist. So we will take the flight outside India, catch the Pakistani terrorist, and we will be bringing, correct or not? So our hero will be doing. So that will be also coming under foreign going vessel or aircraft. You understood? So they are not carrying any people or goods, but they are going to catch a terrorist over there. So that is also foreign going vessel or aircraft. And next one. So whenever the goods are imported, what are the various options available to the importer? As soon as the goods are imported into India, that imported goods into India will be unloaded in the customs port or airport, and the importer is having two options. Option number one, either that goods will be cleared for home consumption, or the goods will be deposited in the warehouse without payment of customs duty, and thereafter from the warehouse on payment of customs duty the goods will be cleared from the warehouse. Okay, see, this is option number one, clearance for home consumption with payment of duty or without payment of duty? With payment of duty. But we need to file one bill of entry. What is the name of that bill of entry that we need to file? Bill of entry for home consumption. Option number two. Option number two, what we will do, we will deposit the goods in the customs warehouse with payment of duty or without payment of duty? Without payment of duty. But for depositing the goods in the warehouse without payment of duty, we need to file one bill of entry. What is that bill of entry? Bill of entry for warehousing, or in-bond bill of entry, or into-bond bill of entry. Anyway, you can call it as. So bill of entry for warehousing, or also known as in-bond bill of entry, or also known as into-bond bill of entry. And again, for taking the goods from the warehouse, whether we need to pay customs duty or no need to pay customs duty, we need to pay customs duty. At that time, what is a bill of entry called as? Ex-bond bill of entry for home consumption, and we need to pay customs duty at that particular point of time. That is this. And this warehouse, is it a warehouse owned by the customs department? No, we don't have any warehouse which is owned by the customs department. Warehouses are licensed by the customs. Means any person can own a warehouse for which they need to obtain a license. Then even importer can have his own warehouse. Yes, Importer can convert his own warehouse into a customs warehouse, thereby imported goods will be kept in his warehouse without payment of customs duty. Only when he clears the goods from his warehouse for manufacture, he will be paying customs duty, so he can defer the customs duty liability. And without filing bill of entry, can the goods be cleared either for home consumption or warehousing? Impossible. Bill of entry is a document that must be filed. Who will be filing this bill of entry? Importer. Importer will be filing, or any person authorized by importer. And remember always, the one who is filing bill of entry will be called as the importer. Remember this, the one who is filing bill of entry will be called as importer for the purpose of customs. So that's where I told you, sometimes we authorize another person to file the bill of entry. So now automatically he will become the importer and we will become the beneficial owner of that goods. We will not be called as importer. Even sometimes in case of sale on high seas, what will happen? I am the original importer. I will transfer the documents of title to the subsequent person. That subsequent person will go to the customs and he will make the clearance. I transfer the documents, which means I sold the documents of title. What is the documents of title? Airway bill or bill of lading, I will be transferring it to him. So he will go and do the clearances. So he is required to pay customs duty. That's where in GST we discussed that whatever money that I receive by way of transferring the documents of title, it is excluded from supply, because anyhow that the subsequent buyer will be filing the bill of entry and he will be regarded as the importer and he need to pay the customs duty. Are you understanding this? Then next one. So see this, without filing bill of entry, the unloaded goods cannot be cleared for home consumption or for warehousing, and goods can be cleared to warehouse without payment of duty, but thereafter for clearance to home consumption from warehouse, customs duty is payable. We know that. Bill of entry can be filed before arrival or after arrival also, but if you file the bill of entry after arrival, you need to pay the late fee, because what is the due date of filing bill of entry? Before the date of arrival. What if before the date of arrival is a Sunday or any public holiday? Even then we need to file the bill of entry. So because there is no working day concept for filing bill of entry. So today if the vessel or aircraft or vehicle has arrived, I need to file the bill of entry by yesterday midnight. I should have filed the bill of entry. Otherwise I need to pay a late fee. What is the late fee that I need to pay for delay in filing bill of entry? 5,000 rupees for every day delay, and in case of the delay is up to 3 days, and if the delay is beyond 3 days, the late fee will be 10,000 rupees per day. So what is the late fee for delay in filing bill of entry? The late fee is 5,000 rupees per day. 5,000 rupees per day. If delay is how many days? If delay is up to 3 days, Suppose if the delay is beyond 3 days, then 10,000 rupees per day if delay is beyond 3 days. If delay is beyond 3 days, we need to pay 10,000 rupees per day. For example, if the delay is somewhere like 8 days, so for 8 days, how much is the late fee that we need to pay? So don't take 8 into 10,000. First 3 days it will be like a slab only we need to create. So first 3 days it will be 5,000 rupees. So 5 into 3, 15,000. And thereafter 5 days, so 5 into 10,000, so that will be 50,000. 50,000 plus 15,000, that is 65,000 rupees will be taken as the late fee. But what is the maximum? Do we have any maximum late fee? Yes. So subject to maximum, how much? 100% of customs duty payable. 100% of customs duty payable is the maximum late fee. For example, my customs duty payment itself is 40,000. In our example, 8 days delay. 8 days delay means 65,000. But the customs duty payable itself is 40,000 rupees. So how much is the maximum late fee that we need to pay? 40,000 is the maximum late fee that we need to pay. That is with respect to this late fee point. Then next one you see, as clearance from warehouse is the taxable event, sometimes it so happens that, so one second here, some issue with this app. I'll open it in other place. Yes, say this. As clearance from warehouse is the taxable event, if the goods are exempted at the time of import. So what will happen? At the time I am importing, I have to pay some customs duty, say 10% customs duty. I kept the goods in the warehouse. After I kept the goods in the warehouse, So there is a budget notification which says that these goods which are imported is exempted from payment of customs duty, which means at the time when I clear it from the warehouse, should I pay the customs duty or no need to pay the customs duty? No need to pay customs duty, because what is a taxable event? At is, when will I pay customs duty? At the time of deposit or at the time of clearance? At the time of clearance. So at the time of clearance, the goods are exempted, so we don't have to pay the customs duty. But contrary is also there. At the time of import, I kept the goods in a warehouse, and that time it was exempted. And after depositing the goods in the warehouse, I cleared it from the warehouse. At that time, so it became dutiable. Should I pay the customs duty? Yes. But actually it is a hypothetical, illogical situation, because when the imported goods are exempted, why the hell a person will keep the goods in the warehouse? Mainly the motive behind keeping the goods in the warehouse is to defer the customs duty payable. At the time of import itself, if the goods are exempted, directly he will clear. But suppose if it is like a lower rate and higher rate, that could be possible. So at the time of import, he kept the goods in the warehouse, and after import the rate was 10%, and thereafter at the time of clearance the rate went to 15%. So should he pay 15% or he need to pay 10%? He need to pay 15%, because the taxable event or the event on which we need to pay customs duty is dependent upon the clearance, not at the time of deposit. That is this point. And customs warehouse, already I told you, is it a warehouse owned by the customs department or licensed by customs department? Licensed by customs department. It is not owned by customs department, licensed. And suppose if an importer has obtained a license for his own warehouse, he can import the goods, he can keep the goods in his warehouse without payment of customs duty. Again, he can pay customs duty as and when the goods are cleared from the warehouse, because only clearance from warehouse is the taxable event. And you need to know certain important documents involved. That is, in case of import, what will be treated what is the document to be filed by the importer? Always it is the same document. What is the name of the document? Bill of entry. So this is a document to be filed by importer. Let it be import by vessel or import by aircraft or import by vehicle. The name of the document is bill of entry. Suppose if it is person in charge, what will be the name of the document to be filed by person in charge? In case of vessel, it is import manifest. In case of aircraft, it is arrival manifest. In case of vehicle, it will be called as import report. Then in case of export, what is the document to be filed by the exporter with the customs officer for the purpose of export? So it is shipping bill in case of vessel and aircraft, whereas in case of vehicle, the name of the document will be bill of export. Whereas what is the document to be filed by the person in charge in case of import by vessel, that is export by vessel, etc. In case of vessel, import manifest, export it will be export manifest, similar. And aircraft, arrival manifest, departure manifest. You easily you can remember, usually in the context of aircraft, we use the words arrival and departure. So therefore arrival manifest, arrival means what it is coming. So therefore on import, arrival manifest, and departure means what it is leaving. So therefore the document name will be departure manifest. And in case of vehicle, it will be import report, export report. And who is person in charge of the conveyance? So in case of vessel, master of the vessel. In case of aircraft, it will be pilot. And in case of vehicle, either conductor or guard or any other person. Only after filing this import manifest, grant of entry inwards is given for the vessel to enter into India. That is, as soon as the vessel comes into the India, so before the vessel coming into India, they need to get a permission. So that permission is known as grant of entry inwards. When the grant of entry inwards will be given, and who will be giving grant of entry inwards? Customs officer will give grant of entry inwards. When it will be given? Only when the person in charge files the import manifest or arrival manifest or import report. But actually, the concept of grant of entry inwards is not applicable for aircraft and vehicle, because practically you think, until the time this person is giving grant of entry inwards, where we can keep the aircraft? We cannot hang it somewhere over there. In case of vessel, we can anchor it somewhere, outer space. But in case of aircraft, literally it is not possible. That's why for vessel only they are speaking about the grant of entry inwards. If you read that wording, I did not use the word aircraft there. I use the word only vessel. Read that point once again. Only after filing import manifest. I did not use the word arrival manifest or import report. Only after filing import manifest, grant of entry inwards is given for the vessel to enter into India. Means the concept of grant of entry inwards is applicable or not applicable to aircraft and vehicle? Not applicable to aircraft and vehicle, but they need to file the arrival manifest or import report for what purpose? Just for the sake of unloading the goods, not for entering. They can enter, but they need to file it for the purpose of unloading the goods which are brought into India. Along with bill of entry, So importer, who will be filing bill of entry? Importer will be filing bill of entry. What is bill of entry contains? The details of the goods which are imported, how much customs duty is payable, from where it is imported, what is the value of the goods, everything will be there in the bill of entry. Along with bill of entry, he need to prove that he is the owner of the goods. How he will prove that he is the owner of the goods? There is something called as documents of title. What is the document of title to the goods called as? In case of import by airways, that airlines will be giving a document called as airway bill. In case of waterways, that shipping company will be giving a document called as bill of lading. And in case of vehicle, they will be giving either lorry receipt or railway receipt. Apart from that, they should also prove that this is the value of the goods. How will they prove that this is the value of the goods? That exporter would have given them the one invoice, na? That invoice also they need to produce. So what are the three documents to be filed by the importer at the time of import? Come on. Bill of entry, document of title, that is airway bill, bill of lading, lorry receipt, railway receipt, and third one will be invoice. So commercial invoice which is raised to him by the supplier outside India. These are the documents to be filed by importer. Next, look into the taxable event and relevant date for determination of rate of duty. So as per section 12, what is the taxable event in case of import? As and when you clear the goods for home consumption. So which means as soon as the goods enter into the territorial waters, it is not import. As and when the goods are unloaded in the India, it is not import. Only when the goods are crossing the customs barrier, it is known as import. There are two landmark judgments that you need to remember, that is Kiran Spinning Mills case and Garden Silk Mills case. These two are Supreme Court judgments. So whenever you are writing anywhere in the answer sheet about import, ensure that you are quoting these two case laws. So you create the space, you understood? So space will not be there. You should create that space for the purpose of writing. You understood what I am telling? So you are writing somewhere about import. You write that, these two cases, because see, we have to ensure that we convince or we impress the valuer. So it is like, so whenever you are talking to one girl or one boy, so you speak lot of nonsense, cringe and all you do, na? Like, you know, many things you will tell. So to impress the other person. So think on the same lines, that valuer also you need to impress. And because here, if you are impressing, not impressing, it's okay. If not X, it will be Y. If not Y, it will be Z. No issue. But in exam and all, you cannot take that chance. Somehow you have to impress them. So due to that reason, you create the space. Wherever possible, you show your talent. Like how people will not have any stuff, but they will post in LinkedIn that they have achieved many things. You understood? So like that, you have to create that space. You understood what I am telling? So therefore, you have to write this. What is the meaning of import? Come on. Crossing the customs barrier. What is crossing the customs barrier? Barrier means customs control. So what is customs control? When the goods are deposited in warehouse, so is it still under the customs control? Yes. But sir, you said customs is not controlling the warehouse. I never said customs is not controlling the warehouse. What I said is, warehouse is not owned by the customs, but warehouses which are licensed by customs are still under the control of customs. So that's the reason why only when the goods cross the warehouse, customs warehouse, we need to pay the customs duty. So that is only the taxable event. So Kiran Spinning Mills case and Garden Silk Mills case. Then what is the taxable event in case of export? So what is India? Goods should cross India, then only it will be called as export. So what is India for the purpose of customs? 12 nautical miles. So that is territorial waters. So only when goods cross the territorial waters, it is called as export. And there are two cases, again landmark cases that you need to remember. That is, remember Rajendra dyeing and printing mills case. What is this Rajendra dyeing and printing mills case? There is a ship which has sunk within the territorial waters. As the ship has sunk within the territorial waters, the goods are not said to be exported. Remember? So ship sinking, Rajendra dyeing. You understood? So ship sinking, Rajendra dyeing and printing mills case. And then Sun Exports case. Sun Exports case says that goods are crossing the territorial waters and it returns due to engine trouble. So in that case, whether the goods are said to be exported, yes. As it crossed the territorial waters, even though it is coming back due to engine trouble, still the goods are treated as exported. So therefore, you remember sun rises in the east, sets in the west, going and coming back. You understood or not? So Sun Exports case, going and coming. Okay. So these two cases you remember, that is Rajendra dyeing and printing mills case and Sun Exports case. These are Supreme Court cases. And This also you remember, Kiran is playing in the garden and only when he come out of the garden it is import. You understood or not? So therefore garden here refers to what? Customs barrier. And therefore Kiran spinning mills case and garden silk mills case. So only when the goods cross the customs barrier it is treated as import. Then this is about section 12, section 15 and section 16. What is the relevant date for determination of rate of duty? So because rate of duty will be different on different days, then what should be taken? This is like time of supply under customs. So as per section 15, in case of option 1, what is option 1? Imported goods cleared for home consumption. At which time point you need to pay customs duty? At the time when you file the bill of entry, correct? Because in option 1, there is no deferment of customs duty. You have to pay the customs duty. So at the time of filing bill of entry, you need to pay. But sometimes the grant of entry inwards may be before. So then what we should do? They are telling grant of entry inwards or bill of entry date, whichever is later, not earlier, whichever is later. So it is not whichever is earlier. So keep in mind. So wherever we have whichever is later provisions, that alone you need to highlight and keep. Okay. So therefore this is the place where we have come across whichever is later. It's not whichever is earlier. And usually which will be later? Bill of entry date or grant of entry inwards date? Grant of entry inwards date is only later, because what happens? The due date of filing bill of entry is what? Before the date of arrival. And only when the grant of entry inwards is given, that will come. So means that comes before that itself we need to file the bill of entry. So usually 99% of the cases the bill of entry will be before and thereafter only grant of entry inwards will come. So whichever is later will be grant of entry inwards. It so happens that in bill of entry we have filed the bill of entry with 10% customs duty, but on the rate of grant of entry inwards it is 12%. So should we pay 10% or 12%? 12%. But already we filed the bill of entry with 10% customs duty. So what should we do? We need to do the amendment to the bill of entry. No need to file the new bill of entry. File the amendment to the bill of entry for correcting the rate of customs duty, because the prevailing rate now will be 12%. That only should be taken. Suppose if you are filing the bill of entry late, so already grant of entry inwards came, actually you should file the bill of entry before the date of arrival, but you file the bill of entry later. So then whichever is later is what? Bill of entry date. So now you don't have to do amendment, because you will file the bill of entry with the new rate, whatever is applicable only. So there is no need of amendment, but there will be something called as late fee. Why the late fee will arise? Because you have not filed the bill of entry before the date of arrival, that late fee will be payable. So either there will be amendment to the bill of entry or there will be late fee. So whenever there is a change in rate, so you keep that in mind. When aircraft or vehicle comes, whether the concept of grant of entry inwards is applicable to aircraft and vehicle? No. So then the words bill of entry or grant of entry inwards, whichever is later, the grant of entry inwards will not be there. So then we need to replace that with what word? Arrival. Because for aircraft and vehicle there is no concept of grant of entry inwards. So see this, date of presentation of bill of entry or grant of entry inwards, whichever is later. In case of aircraft and vehicle, presentation of bill of entry or date of arrival, whichever is later. And what is the relevant date for determination of exchange rate? For exchange rate, we need to take the date of presentation of bill of entry. So whenever you are filing bill of entry, on the date, whatever is the rate of duty, that only will be taken, that is exchange rate should be taken. But that exchange rate should be given by CBIC or market rate, or which rate should be taken? CBIC rate should be taken. So exchange rate as determined by CBIC should be considered. And here there is no confusion, because we will file only one bill of entry. But go to option 2. In case of option 2, what should be taken as relevant date for determination of rate of duty? So I told you, we need to pay customs duty in case of warehouse goods at which point of time? At the time of clearance from warehouse. So at the time of clearance from warehouse, which bill of entry we will be filing? Ex-bond bill of entry. So ex-bond bill of entry date only we should be taken as relevant date for rate of duty in case of warehouse goods. Whereas what should be taken as relevant date for exchange rate? For exchange rate, we need to take as the in-bond bill of entry, not ex-bond bill of entry. Keep that in mind. Why? Logic you remember, at the time when you keep the goods in a warehouse, you need to compute the customs duty payable for executing the bond, because it is called as in-bond bill of entry. If you need to compute the customs duty, or if you need to know the bond value will be in Indian rupees, means you need to know the exchange rate at the time of depositing the goods in the warehouse. But the rate of duty is prevalent at the time of clearance of goods from the warehouse. So that's why ex-bond bill of entry. So remember, for exchange rate it will be in-bond bill of entry. For rate of duty it will be ex-bond bill of entry. That is this. Then in case of export, so we need to bring section 16. So for relevant date for determination of rate of duty as per section 16, let export order. So whenever we are filing the let export order, so we will not file actually let export order, we will be filing, that is exporter will be filing shipping bill or bill of export. Then the customs officer will verify the shipping bill or bill of export and he will pass a let export order. On the date, whatever is the rate of duty, that should be taken. Then for exchange rate, what is the parallel document for bill of entry? In case of import, it is bill of entry. In case of export, what is the document name? Shipping bill. So therefore, we need to take the shipping bill or bill of export date for the purpose of determining the exchange rate. Okay. And in case of improper import and improper export, this discussion will not be applicable. Improper import or improper export means what? Smuggling. So in that case, we will not file bill of entry. There is no grant of entry inwards, etc. and all. So as and when the customs department catches, at the time the customs duty is payable, the date on which customs duty is payable, that is a relevant date for determination of rate of duty. So the date of payment of duty. So these are the points mainly. So two types of questions we will be getting on this. One is related to this practical question wherein they will give different dates. In the different dates, different rates will be there. So we need to take the appropriate date for the purpose of determination of exchange rate as well as rate of duty. Sometimes in MCQs also they can coin some questions based on this. Then we are moving on to valuation under customs. So look into valuation under customs, page 197. Valuation under customs. So we understood so far three sections, that is section 12 which talks about the levy, section 15 which talks about relevant date for determination of rate of duty, and section 16 talks about relevant date for determination of rate of duty. 15 is in case of import and 16 is in case of export. So there are two queries. Sir, if an aircraft is imported into India for domestic use, I should pay customs duty on aircraft separately and store separately, of course. So on aircraft also we need to pay customs duty, and the stores inside that aircraft also I need to pay customs duty. For grant of entry of vessel, should it be obtained before entering 12 nautical miles or 200 nautical miles? 12 nautical miles. So it's not 200 nautical miles, 12 nautical miles, they need to get the grant of entry inwards. If they are not obtaining grant of entry inwards, beyond 12 nautical miles, they need to anchor the ship. So, and they need to keep that ship there till the time they get the grant of entry inward. So many cases it so happens that the ship will be anchored. So in Marina Beach, I have seen any number of times wherein the ship will be anchored, and the moment ship enters into port, we will not be able to see, because Chennai port is such that it is actually concealed from the beach. And if the ship enters into the port, we will not be able to see. But if you are able to see the ship, means it is parked outside, that is anchored outside the territorial waters. And there may not be berthing accommodation available. Due to that reason, it will be anchored outside. Okay. So then how they will file the import manifestor to get grant of entry inwards? Will the captain swim and come and he will be able to get the grant of entry? No. So we have electronic data interchange, that is customs gateway is there. ICE gate, like how GST common portal, customs also is having a common portal called as ICE gate, Indian Customs Electronic Gateway, ICE gate. I for Indian, C for customs, E for electronic, gate. Gate is gateway. So that is the customs common portal. Okay. So look into this valuation under customs. So valuation under customs is given under section 14 of Customs Act 1962. Still we are in Customs Act 1962 only, read with rules, that is Customs Valuation Rules 2007. So what will be taken as the assessable value in case of import? In case of import, we need to take CIF price, and in case of export, we need to take FOB price. What is the difference between CIF price and FOB price? In total, we have 4 prices in customs. So one is CIF price, so which is the price prevailing at the time and place of importation is known as CIF price. And FOB price is known as price prevailing at the time and place of exportation. There are 2 more prices called as ex-factory price and free alongside price. So what is that we need to remember? So somewhere you make note of this equation. So how to arrive at these prices? Okay. First we need to take ex-factory price. What is ex-factory price? The price prevailing at the factory gate of the exporter, that is ex-factory price. To this ex-factory price, if you add transportation to this ex-factory price. So this is ex-factory price here, and this ex-factory price means price at exporter's factory. Price at exporter's factory is known as ex-factory price. To this ex-factory price, we need to add freight. From where to where? Freight from factory to load port or airport. Load port or airport, that we need to add. And then we need to add even the loading charges, but once you add this freight, it is known as free alongside. Free alongside, FAS price. Free alongside price. It will be called as free alongside price. So ex-factory price is price at exporter's factory. Freight from factory to load airport or port, if you add, it will be called as free alongside price, FAS price. So in exam they can give ex-factory price or they can give free alongside price also. Be careful, because already they tested FOB price AIF. So now if they want to confuse you, they can give the ex-factory as well as free alongside. To this free alongside price, if you are adding loading charges in port or airport. Whose port or airport? Exporter's port or airport. There only we do loading. So once you add the loading charges, it is ready for shipment or it is ready for transportation. So that will be called as free on board. Free on board, FOB price. So basically this FOB price means what? In the port or airport, the goods are ready for shipment. That is the meaning. The price prevailing at the exporter's port or airport is known as FOB price. So then to this FOB price, we need to add insurance. So this insurance is for which purpose? Insurance from where to where? Outside India to India. Insurance charges from outside India to India. From outside India to India. And also one more we need to add. What is that? Freight. Freight. Freight from where to where? Freight from outside India. Freight from outside India to India. So when we are adding, this will be called as CIF price. That is FOB is cost. FOB is cost. And I is insurance. F is freight. Okay, that is what CIF. So C for cost. What is cost? FOB is the cost. Plus I plus F. I for insurance and F for freight. So that is what CIF price we will be getting. This CIF price is also called as assessable value under customs. So this equation please keep in mind, so that whichever price is given in the question, accordingly you need to alter that. So either we may be getting ex-factory price or we may be getting, so either we may get ex-factory price or we may get free alongside price or we may get free on board price or we may get CIF price. So depending upon that we need to change. You understood? So what is ex-factory price? The price prevailing at the exporter's factory. What is free alongside price? The price prevailing before loading in the port or airport. And what is FOB price? The price prevailing in the port or airport of the exporter after loading the goods. And then CIF price is the price prevailing at the importer's place. That is CIF price. So what should be taken as assessable value in case of import? CIF price. What should be taken as assessable value in case of export? FOB price. So that is what I have given here. So assessable value in case of import is CIF price, that is FOB price plus insurance plus freight should be taken. But FOB price, whatever we have got is FOB price which is given in the invoice. But we need to derive at the FOB price as per the customs. So we need to make adjustments. After making the adjustments, we will get the FOB price under customs. There are two types of FOB price. FOB price given, that is in the invoice, and FOB price as per customs. So what is the difference between these two, sir? First we will take FOB price given in invoice. FOB price given in invoice we will be taking. And to that FOB price given in invoice, we will be making two types of adjustments. So primary adjustments we will be making. So this primary adjustments as per Rule 10 sub Rule 1, Rule 10, as per Rule 10 sub Rule 1 of Customs Valuation Rules 2007. So this is the primary adjustments. Once you make this primary adjustments, we will be getting FOB price, but this FOB price is as per customs, or also known as revised FOB price. So this will be taken. So these adjustments we need to make, and we get the FOB price as per customs, also called as revised FOB. To this FOB price, we need to make secondary adjustments. Secondary adjustments. This secondary adjustments is as per Rule 10 sub Rule 2 of Customs Valuation Rules 2007. So that is the secondary adjustments. And once you make the secondary adjustments, what are the two secondary adjustments? That's what? Insurance and freight. Insurance and freight. So we should make the secondary adjustments. So once we make this, we will be getting CIF price. CIF price. So therefore, actually from FOB price to CIF price itself, I just gave you little bit lengthy information. That is, this is actually at this stage only, FOB price to CIF price. But in that itself, what we will do? First we will take FOB price as given in the invoice. Then we will make primary adjustments as per Rule 10 sub Rule 1. After making primary adjustments as per Rule 10 sub Rule 1, we get the FOB price as per customs, and thereafter we make the secondary adjustments. That secondary adjustments is as per Rule 10 sub Rule 2. As per Rule 10 sub Rule 2, only two adjustments are there. Remember, Rule 10 sub Rule 2. 10 is adjustments. Rule 10 is adjustments. Rule 10 of which rules? Customs Valuation Rules 2007. Rule 10 sub Rule 2 has only two adjustments. What are the two adjustments that we have? Freight and insurance. So once we make those adjustments, what we get will be the CIF price. Is that clear? Now, so whenever we are taking this FOB price, we need to take the FOB price after adjustments. Means FOB price given plus adjustments as given below. So this is the FOB price as per customs. To that, we need to add insurance and freight. So insurance, if ascertainable, we will take actuals. If not ascertainable, we will take 1.125% of FOB. What is the meaning of not ascertainable? Not ascertainable means not known to the importer. Why it is not known to the importer? Sometimes a container, when we pay the freight and insurance, that container contains goods belonging to multiple importers. So this container cost and the insurance cost, that freight cost and insurance cost will be paid by the consolidation agents or logistics operators. There are many logistics operators. So these people, what they do is that they will pay the freight and they will pay the insurance, but in the same container they will transport goods belonging to 3 or 4 importers. So thereafter they will apportion this freight cost and insurance cost between the importers, and they will give a separate bill for that. So this separate bill, if I don't have from my consolidation agent or from my logistics operators, I don't know what is the insurance. So in that case, I will take whatever is the FOB value of my goods. In that container I have my goods, I know what is its value. So on that 1.125% will be taken as the insurance if not ascertainable, that is this. And if it is ascertainable, we will take actuals. But when we are computing 1.125% of FOB, so what will be taken? So as FOB, is it the given FOB or revised FOB we need to take? Revised FOB, which means FOB price as per customs, means after making the primary adjustments. And then freight, ascertainable or not ascertainable, we need to see. If it is not ascertainable, again why not ascertainable? Same reason, our consolidation agent or logistics operators have not yet given the invoice to us as to how much is the proportion of the freight that we have to pay. So in that case, we will take 20% of FOB. And suppose if it is ascertainable, we will take actuals. But even if it is ascertainable, if it is air freight, we have a restriction. What we need to do? We need to take actual or 20% of FOB, whichever is lower should be taken. That is in case of air freight, because in case of air freight, there will be huge air freight. That much air freight, if it is included unnecessarily, the customs duty computation value will increase and the custom duty will increase. So that's why they have restricted it to 20% of FOB. Then this freight, when you are taking, it shall include handling charges also. What is this handling charges? During the transit from there to here, some extra charges we need to pay for the purpose of handling the containers with care. So because these containers contain some glass articles or electronic items, etc. So these handling charges also part and parcel of freight, but unloading charges will not come. Which unloading charges? Unloading charges in the intermediate location will be coming in the freight, but unloading charges in the port of importation or airport of importation will not come. Sometimes what will happen, there is a concept of light dredge and barge. In case when a ship cannot come into India or Indian port because the depth of the ship is so big, but the port don't have that depth, the ship will be anchored at outer space. From there to port, they will be bringing the goods in the form of boats. So in boats they will be bringing. As this is unloaded in the port or outside the port, this unloading charges will come in the freight or will not come in the freight? Will come in the freight. Only unloading charges in the port will not come in the freight. Are you able to understand this? So not at the place of import. Any unloading charges or any handling charges will come in freight, but not in the port of import or place of import. Intermediate, on the midway or en route, any kind of charges is there, that will be included in freight. Ship demurrage charges. There are two types of demurrage charges, normal demurrage charges and ship demurrage charges. Normal demurrage charges are payable by the importer after the goods are imported. Concentrate, because in exam they will give both these demurrage charges. Ship demurrage charges also sometimes will be there, and normal demurrage charges, like demurrage charges like that they will give. They will not mention it as ship demurrage charges. So there are two demurrage charges. Demurrage charges versus ship demurrage charges. Ship demurrage charges payable by whom? Person in charge. For what reason? Because the ship is anchored in the outer space. So they need to pay that ship demurrage charges. But demurrage charges who will pay? Importer. When it will be payable by importer? After import. When, like, what is the reason? If the goods are not cleared within the permissible time, so then they need to pay this demurrage charges. As demurrage charges are payable after import, will it be included in the value or not included in the value? Not included. Remember, all post importation expenses will not be included in the value. So demurrage charges will not be included in the value. What about the ship demurrage charges? Will it be included in the value? Yes. Ship demurrage charges will be included in the value because it is payable before import or after import. Before import it is payable, so it should be included. So please try to remember with the logic. Ship demurrage charges are payable by the person in charge. It is payable before import. That's why it should be included in the value. But demurrage charges is payable by the importer. When is it payable? After import, for not clearing the goods within the time. So therefore that will not be included in the value. Are you understanding this? So, but I have not given here demurrage charges. I gave ship demurrage charges. So you keep in mind, demurrage charges payable by importer. Demurrage charges payable by importer not included in value. Not included in value. So shall include handling charges not at the place of import, ship demurrage charges, light dredge and bar charges. What is this light dredge and bar charges? Which are required for bringing the goods from where to where? Outside India, that is ship to shore. So from ship to shore, we need to pay to the boat some charges, na? That charges is known as light dredge charges and barge charges. Charges incurred for transportation of goods from ship to shore. All these are part and parcel of freight. So when you take this freight, 20% means all these are already included in this particular freight itself. Then related to this, there is one very important adjustment. Say this. So this you can make note somewhere. You already have few papers, na? Some rough sheets, etc. So there you write down. Okay. So parallelly you write down ex factory price. This is one question. Ex factory price is somewhere $1,000. Then transportation up to exporter's port. Ex factory price is $1,000. Transportation up to exporter's port is $200. Then loading charges in exporters port is $100, and thereafter freight from exporters port to India not ascertainable. Insurance from exporters port to India is somewhere like $50. Compute assessable value under customs. Compute assessable value under customs. When we have data like this, what will you do? First you will take ex factory price, and to that ex factory price, if you add these two, you will be getting FOB price, and we don't have any adjustment, so that itself is the FOB price as per customs. So first we will take ex factory plus freight plus loading charges, how much that will come to? $1,300. So this is actually called as FOB price, but this FOB price is under customs. Okay, ex factory plus freight up to which place? Freight up to the port of exportation plus loading charges 1,300, FOB price. To this FOB price we need to add freight, but this freight is from where to where? Freight from exporters port to importers port. So freight, is it ascertainable or not ascertainable? Not ascertainable. So we will take 1,300 into 20%. What is 1,300 into 20%? So it will be $260. So we will take $260. And insurance. So what is insurance? Insurance will be $50 because it's actual ascertainable. So we will take $50. So what will be the assessable value? 1,300 plus 260 plus 50, that is $1,610 will be taken as the assessable value. You will not get 1 mark also. So this is wrong. We should not do it this way. Okay. We should not do it this way. It is wrong. So why, sir? Because ICAI has taken an assumption, when you are taking the freight 20%, that 20% includes the freight from the factory gate of the exporter. So which means the ex factory price is correct. The ex factory price of first line is correct, no doubt in that. So we need to take ex factory price plus freight plus loading charges 1,300, that part is correct. But freight 20% is also correct. 20% is also correct. What is 1,300 into 20%? 260. That should be in the inner column, minus already considered in FOB. How much is already considered in FOB? Not 200. 300. What is already considered in FOB? See, when you take 20%, please concentrate, important assumption, when you take 20%, that 20% is from which place? Factory gate of the exporter. The moment when you take 20%, it is from the factory gate of the exporter. From the factory gate of exporter, what is the extra cost that you have added in FOB? How you got FOB? 1,000 plus 200 plus 100. You got 1,300, means in that 1,300, what is the factory cost? 1,000. What is the extra cost you have added from thereafter? 300, which is already added in FOB. But what is 20% of FOB? Only 260 minus already considered in FOB 300, which means you need to reduce $40. You need to reduce $40. This you would not have done. You would have seen only addition, but here we have a deduction, and then you need to add insurance, and that insurance as actually is ascertainable, we will take actual, that is 50. So what will be taken as the CIF price? the CIF price will be taken as 1300 minus 40 plus 50, that will be 1310. 1310 will be taken as the CIF price or assessable value. Sir, should we do it like this only, sir? Of course, we should do it like this only. You have to trust me, no other go. You don't have any other go, yaar. You have to trust me. Please trust me. This is the way in which we need to arrive at the answer. Okay. So what we need to do is that whenever we are taking 20% of FOB. So when we will take 20% of FOB, in two places we will take 20% of FOB. One is in case of air freight. And what is that air freight? Actual or 20% of FOB, whichever is lower. So when you take the actual, you need to take from which place? From the factory gate of the exporter. Yeah, 20% is compared with what? 20% is compared with what? Freight. From which place? Factory gate of the exporter. So therefore, in case of air freight, we will take actual or 20% of FOB. Actual will be from the factory gate of the exporter. Everything you take in actuals. Be 20% of FOB. But sir, factory gate of exporter to the place of exporter, that load port or airport, we will add that in FOB. Yes, it will be part of FOB. That's what here we have taken. This 300 is part of FOB. Definitely we need to add this as part of FOB. On that only we need to compute the 20%. So why should we do this way? This is how it is given in the law. We have to follow this way only. And if you follow with your logic, you follow with your logic. Better we will meet in May 25 exam. So therefore 1300 into 20%, that is 260. But in the 260, already whatever is considered in FOB we should take out. So remaining only should be coming, and then insurance will be 50. So 1310 will be taken as the CIF price, or it will be taken as the assessable value. Is it clear? Now there is one question related to this in exam. We will see that study material question it is. Not everything in study material I can discuss, that much time I don't have, but to the extent possible, some critical questions like this we will see. So this is a question on valuation under customs. There is one question. Question number 19. Have a look into this in the screen. Product Z was imported by Mr. X by air. The details of import transaction are as follows. Price of Z at the exporter's factory. What is the price of Z at exporter's factory? $8,500. Means what is this price known as? X factory price. Freight from factory of the exporter to the load airport, that is exporter's airport, that is $250. Will it be added to get the FOB price? Yes. Loading and handling charges at the load airport, will it also be added to get the FOB price? Yes, 250 and 250. Freight from load airport to the airport of importation in India is 4,500, but we need to restrict it to 20% of FOB. And insurance charges actually is ascertainable, so we will take. Though the aircraft arrived on 22nd August, the bill of entry for home consumption was presented by Mr. X on 20th August. The other details furnished by Mr. X are 20th August, 22nd August. What is 20th August? The date, bill of entry for home consumption. So arrival of the aircraft is 22nd August. So which should be taken as the relevant date for determination of rate of duty. So presentation of bill of entry or arrival, whichever is later. What is the later date? 22nd August. On 22nd August, what is the rate of customs duty? 10% should be taken, and exchange rate notified by CBIC should be taken or RBI should be taken. CBIC should be taken. So CBIC rate, but prevailing on which date? On the date you are filing the bill of entry. What is the date on which you are filing the bill of entry? 20th August. So on 20th August, what is the exchange rate that we have? 70 rupees per dollar. So the exchange rate element is 70 rupees per dollar. You understood how whatever we have discussed is being applied. And then for IGST also, just like basic customs duty only we need to take. So basic customs duty prevailing on which date you have taken? 22nd August. IGST also prevailing on that date only should be taken in this case. Now let's proceed to the valuation first. So for valuation we need exchange rate. That's why I discussed this point. So what is the relevant exchange rate? Respond. 70 rupees per dollar. So first we need to take FOB price. For that FOB price we need to start with the X factory. So you do the calculation. Come on, start with me, along with me. So price of Z at exporter's factory, that is X factory price. Write down X factory price. X factory price will be taken as $8,500. So X factory price will be taken as $8,500. To this X factory price, we need to add two things. What are the two things that we need to add in this question? Freight. Freight from where to where? Freight from factory to load airport. Load airport. How much is that? $250 in the question. And then loading charges. So loading charges is $250. So if you add this 8,500 plus 250 plus 250, $9,000. This $9,000 is what? FOB price, and we don't have any adjustments in the question. So this FOB price we will take. This is the FOB price as per customs. And to this we need to add insurance. Insurance, actual ascertainable, yes. Should we compare with 20% of FOB? 1.125% of FOB? No. When insurance actually is ascertainable, we will always take the actuals. What is the actual insurance charges? 2,000. So we will be taking 2,000 as the insurance charges. Then freight. How much will be taken as freight? Freight will be air freight. No. So air freight will be actuals or 20% of FOB. How much will take as actuals? See the question. How much will take as actuals? Wrong answer. 4,500 if you are taking, it is a wrong answer. We should take 5,000. Why we should take 5,000? I told you start from the factory gate of the exporter. So starting from factory gate of exporter, how much is the freight? 250. Sir, loading also part of freight? Yes, I told you na. Loading, handling, everything will be part of freight itself. So therefore 250 plus 250. $250 plus $250 plus $4,500 should be taken as the actual. So what is the actuals in this case? 5,000 or 20% of FOB. So what is the FOB? You have got 9,000. 9,000 into 20%. So that will be 1,800. So whichever is lower. What is whichever is lower? 1,800. Everything is inner column only. Minus, less, already considered in FOB. What is already considered in FOB? Already considered in FOB is $500. How $500? This 250 and 250 already considered. So therefore, how much should be coming in the outer column? $1,300. Now this will be called as CIF price or assessable value. That will be 9,000 plus 2,000 plus 1,300. That comes to 12,300. Now to this 12,300, we need to multiply with the exchange rate. So what is the relevant exchange rate? Relevant exchange rate is ₹70 per dollar. Therefore, assessable value will be 12,300 into 70. That will be ₹8,61,000. That will be taken as the assessable value. So 8,61,000 should be the answer, correct? Now see this. 8,61,000. You understood? Now will you believe in me? This is study material. Yeah, ICA study material. You have to. Okay. So this is how you need to arrive, and this is only for CA final exams. You don't follow this in reality. In reality and all, if you follow this, so customs department will kick on your face itself. Okay, because you are actually reducing the value. You are not increasing the value. So actually, no. Reality is that this 1,300 will not be taken, 1,800 will be taken in reality. In reality, 1,800 is taken. So which means to the extent of $500, the value will get increased. On that you need to pay customs duty. This is only for CA final exam. In reality, no one is following this. So why CA is doing like that? Always they are different, na? Okay, so they are different. They have to be different. So that's why. And basic customs duty. Thereafter, we need to proceed to the customs duty computation. So you understood up to this assessable value. So assessable value 8,61,000. Now how to compute the customs duty payable on this? So the steps involved in computation of customs duty. So we will do this continuation so that we will learn how to compute customs duty also. Customs duty computation will be made in 3 parts. So part 1, so total 9 customs duties we have, total 9. In that, the first one is basic customs duty. That basic customs duty will be at the rate of, it will be given in the question itself. So what is the rate at which we need to pay the customs duty? Always it will be given in the question. We don't have to remember any rate for this purpose. But only thing, they will give different dates and different rates. From that we need to ascertain how much should be taken as the rate of basic customs duty in this case. 10% or 20%? 10%. So basic customs duty at 10%. On what it will be computed? On assessable value. What is the assessable value in this case? 8,61,000 into 10%, that will come to 86,100 is the basic customs duty. And then social welfare surcharge. But in the question we don't have social welfare surcharge. Always we should take social welfare surcharge on import at the rate of 10% on what? Basic customs duty. What is the basic customs duty? 86,100. So 10% will come to 8,610. That is social welfare surcharge. Then number 3 called as CVD, countervailing duty. This countervailing duty will be at the rate, that will be depending on whatever rate that is given in the question. In this question we don't have CVD. But sir, if there is CVD, it will be computed on what? CVD will be computed on assessable value plus basic customs duty plus social welfare surcharge. That should be taken, okay. And assessable value, basic customs duty, social welfare surcharge on what? CVD is applicable right now on what goods? You tell me what are the goods on which excise duty is applicable even today. GST is not applicable, but excise duty is applicable. In the sense, excise duty is applicable on domestic sales today. What are the goods on which excise duty is applicable? Alcoholic liquor for human consumption, and then petroleum products, and then tobacco and tobacco products. On these 3 only CVD will be applicable. Only if these 3 goods are there in the question, then only we need to take CVD, but the CVD rate should be given in the question itself. But only computation, you remember, it is on assessable value, basic customs duty and social welfare surcharge. But in this question it is not there, so we don't have to take it. And once you add these 3, we call it as customs duties excluding additional customs duties. Customs duties excluding additional customs duties. So that will be 86,100 plus 10%, that is 8,610, 94,710. And after this 94,710, we need to take second part. So we have 3 additional customs duties. What are the 3 additional customs duties? That is step number 2, we have 3 additional customs duties. So point number 4, safeguard duty. Safeguard duty. That safeguard duty is not applicable in this question, but if we have, we need to take that. And number 5, that is anti-subsidy duty. That anti-subsidy duty also, if it is there in the question, we need to take, otherwise not required. Then anti-dumping duty. These are the 3 additional customs duties, but in this question we don't have, so we don't have to take that. What are the 3 additional customs duties here? Safeguard duty, anti-subsidy duty and anti-dumping duty. So this will be called as customs duties excluding IGST and cess, compensation cess. So 94,710. Thereafter, in the third part, we are having 3 more. So number 7, IGST. IGST is at the rate of, so that will be given in the question itself. What is the rate at which we need to take IGST? 12% or 18%? 12% only, because 22nd August, whatever is the date relevant for basic customs duty, the same rate is relevant for IGST also. So therefore we need to take 12%, because IGST is also under customs. IGST is not under GST law. IGST is under customs. So due to that reason, we need to follow the basic customs duty rate, whichever you are following as per section 15, the same thing should be taken, that is 12% should be taken in this case. So IGST at the rate of 12% on what? On assessable value plus step 2. What is assessable value plus step 2? That is assessable value 8,61,000 plus 94,710 into 12%. So that will come to 8,61,000 plus 94,710 into 12%. That comes to 1,14,685.20. Round of errors lot of students are doing, because of which many marks are being deducted in exam. So don't do round of error. So we have to take after decimal like 2 digits, but the last final answer you get na total customs duty, that only should be rounded off to nearest to 1 rupee, not nearest to 10 rupees, nearest 1 rupee. So therefore IGST at 12%, and next we have something called as GST compensation cess, but this GST compensation cess at the rate, it will be given in the question. So on what? On same assessable value plus step 2 total. But why not we are taking step 1, sir? So step 2 total itself includes step 1 total also, so we don't have to take both, okay? And this is not there in the question, so we don't have to do that. Finally, the last one, SAD, special additional duty. Special additional duty. This special additional duty will be at the rate that will be given in the question itself, and it will be computed on what? Same assessable value plus step 2, and SAD is applicable on what goods? So only on one product SAD is applicable. What is that? Petroleum products. So we have some petroleum products, 5 petroleum products, that is crude oil, petrol, diesel, aviation turbine fuel and natural gas. These are the 5 petroleum products for which SAD will be applicable. So what are the 5 petroleum products? Crude oil, petrol, high speed diesel, then aviation turbine fuel and natural gas. In this case it is not there, so we will not take that. And when you add this, so this total will be called as total customs duties payable. Total customs duty payable, and you round off to nearest to 1 rupee in this case. What is that? 94,710 plus 1,14,685.20, that is 2,09,395. This is customs duty payable. 2,09,395. You can see the answer. Yes, 2,09,395. Okay. So this is how customs duty computation will be made. So remember, these are the 9 customs duties that we have. Depending upon which customs duty is given in the question, accordingly you need to insert in the respective place. Okay. So still some trust I need to create. Sir, the available fuel which is in the foreign going aircraft or vessel is not dutiable, right? Yes. So I told you the fuel which is left over in the aircraft or vessel which is coming into India treated as import of fuel, and we need to pay customs duty. But if the same vessel or aircraft is a foreign going vessel or aircraft, on the leftover fuel we don't have to pay any customs duty. That's correct. Then sir, in the SM question, if actual freight in India is $100, lower of 2 will be actual freight 600. In this case also we have to deduct 500 already considered. Always we need to deduct. That's what I told you while creating a question which I have given to you. I gave you negative freight. Usually freight will not be negative, but because of the ICA assumption, the freight will become negative. So because of this, because something which is already there in FOB, we need to reduce it. Okay. So then, sir, if the question, it is not given the freight from where to where, can we deduct already considered freight from factory gate to the load port? No. So remember, this assumption, whatever is given, whatever we are doing will be applicable in 2 places only 2 places. First, condition number 1, X factory price should be given. X factory price should be given, and we need to take freight as 20% of FOB. In these cases only we need to do. What are the 2 conditions for application of this assumption? What price should be given in question? If FOB price is given in the question, don't touch. Don't do like this. If FOB price is given in the question, don't do like this. In the question, what price should be given? X factory price should be given. And if the freight is actual freight, don't touch this. So the freight should be 20%. When you will apply 20% freight? When you will apply 20% freight, if the freight is not ascertainable or if the freight is air freight. In these two places only you will be applying this. Got it? If the freight is not ascertainable, you will take 20% of FOB, or if it is air freight also we will take actual or 20% of FOB, whichever is lower. There only we will do this assumption. So condition number 1, what price should be given? Ex-factory price should be given. Condition number 2, you should be applying freight as 20% of FOB. Okay, when we will apply freight as 20% of FOB in two cases. Case number 1, so when the freight is not ascertainable, or case number 2, when air freight is given, we will take actual or 20%. So I gave both. Actually, first case, first question which I made you write is actually sea freight, port. And in that sea freight, we did not compare. Directly we have taken 20% of FOB, but here also ex-factory price is given. One more question which we did from study material is actually ex-factory price, but air freight. So we are comparing between actual or FOB. So these two cases we discussed actually, okay. Now coming back to this. Adjustments to FOB price. This is adjustments. Which adjustment? Primary adjustment or secondary adjustment? Primary adjustment. Secondary adjustments already we have completed, insurance and freight. That is only as per Rule 10 Sub Rule 2. Now we are looking into primary adjustments as per Rule 10 Sub Rule 1. The first adjustment is related to commission. Commission is divided into two. Buying commission and selling commission. Buying commission is the commission payable by the importer to his agent. So who is buying? Who is buying? Importer is buying. And so he appoints an agent. That commission is called as buying commission. Who is selling? Exporter is selling. So he will appoint an agent to sell, and that commission is known as selling commission. So buying commission, who will pay? Importer will pay. To whom he will pay? His agent he will pay. Means it is his expenditure. And is it an indirect benefit to the exporter? No. His own expenditure, that will not be included in the value. So don't include buying commission. Whereas selling commission, actually selling commission, who should pay to whom? Exporter should pay to his agent. And where is his agent located? In India. Where is importer's agent located? Outside India. Why importer's agent is outside India? Importer is in India. So one person should represent the importer. So he is outside India. That is, agent of importer is outside India. Same way, exporter is outside India, but his agent will be in India. So that's why this selling agent commission is also known as local agents commission in many places. So therefore, whenever they use the word local agents commission, don't get confused. It is not buying commission, it will be selling commission. And selling commission generally payable by the exporter to his agent. So definitely that will not be included in the value. But if the commission of the exporter's agent is paid by the importer, it's an indirect benefit to the exporter, so that should be included in the value. So selling commission paid by importer to whom? Exporter's agent is an indirect benefit to the exporter, so that should be included in the value. That is this first part. Second part, material which is sent by the importer to exporter. So importer is sending some material to the exporter, and using that material, exporter make the finished goods, and those finished goods are being sent. Either material can be sent, or capital goods can be sent, or intangibles can be sent. Anything can be sent by the importer to exporter. So three things which are sent by importer to exporter. What are the materials, capital goods and intangibles? Using these three, exporter is making the finished goods, and that finished goods are being imported into India. Now in that finished goods, exporter will not charge for these materials which are sent by the importer or capital goods or intangibles, because he is not spending that. So exporter will charge only the conversion cost. But we need to ascertain the value of the imported goods that contains the material which is sent by the importer also. So this material cost should be included in the value of imported goods either at actual or at the apportioned cost. Then apart from this, any other expenses which is recovered by the exporter, from whom? From the importer. And is it before import or after import? If it is before import, no doubt it should be included in the value. If it is after import, then we need to check, is it as a condition of sale or not as a condition of sale. If it is as a condition of sale, as per the contract, it should be included. Example, installation charges. Installation charges is payable for the imported goods as a condition of sale of imported goods to India, which means that exporter will only do the installation and we need to pay for this installation. Is this installation charges payable as a condition of sale as per contract? Yes. So even though we are paying this after import, we need to include it. Whereas at the importer's request, some customization charges. Customization charges which are payable by the importer to the exporter is not as a condition of sale. So it is a post-import expenses. So it should not be included in the value. Already I told you this logic that post-import expenses should not be included in the value. So but only exception to that is what? If that post-import expenses is payable as a condition of sale as per the contract, then it should be included in the value. So these are the adjustments that we need to make for the FOB price given, and we get the FOB price as per customs, and to that we need to make the secondary adjustments. Sometimes it is not possible to determine the transaction value. When it is not possible to determine the transaction value, if the price is not the sole consideration or the importer and exporter are related, in that case, so we will not take transaction value. Or sometimes the value is rejected by the customs officer on the grounds of undervaluation. Usually imports we do undervaluation to pay lesser customs duty. In that case, the value declared by the importer will be rejected. So tell me, usually what should be taken as the assessable value as per rule 3 of customs valuation rules? Transaction value. What is transaction value? In case of import, what is the transaction value? CIF price. Just now we discussed now CIF price. And the above adjustment shall be made as per rule 10. Customs officer shall not have any doubt as to truth and accuracy of the declared value. What if he has a doubt with respect to the declared value? He has a suspicion that the value declared by importer is undervalued. In that case, what he will do? He will reject the value. When he rejects the value, we need to determine the value as per rule 4, rule 5, rule 6, like that. Okay. So now, 4 conditions should be satisfied. It should be unrestricted sale, and it should be unconditional sale. It should be unrelated sale, and price must be the sole consideration. What if price is not the sole consideration, or it is a sale between related parties, or it is a conditional sale, or it is a restricted sale, or if the officer is not satisfied with the value? In all these cases, transaction value not applicable. When transaction value not applicable, we need to determine the value as per other rules. You understood? So tell me, when transaction value not applicable, come on. Conditional sale. Conditional sale means exporter is selling to importer and he is telling that you have to sell to these people only. Conditional sale. Or restricted sale, or related party transaction, or price is not sole consideration, means some other consideration is flowing from the importer to the exporter. Or if all these are not there, but customs officer not satisfied with the value declared, in this case the value will be rejected. When this value is rejected, the value will be determined by the officer, and that value here in this case, remember, this value is not determined by the importer, it will be determined by the officer. We have rule 4, assessable value in case of imported goods, assessable value of identical goods. So first transaction value, remember this, TISDCR, first transaction value. If transaction value fails, identical goods. If identical goods fails, similar goods. If similar goods fail, deductive value. If deductive value fails, computed value. If computed value also fails, then residual value. Okay. So transaction value, identical goods, similar goods, deductive value, computed value, residual value. But between D and C, it is interchangeable. First can be C, next can be D. Either deductive value first and then computed value, or it can be computed value or deductive value. But we need to apply it in the sequence only. So first, when transaction value fails, we need to apply which value? Identical goods. All this valuation will be done by the importer or the customs officer? Customs officer. Identical goods means that is also imported goods. So you need to know the definition of the identical goods first. What is the meaning of identical goods? That also imported. And imported having the same physical features and quality. And that is also imported from the same country from where you have imported, and that should also be imported from the same producer, preferably, not necessary from the same producer, preferably same producer. For example, you are importing LG washing machine, and this LG washing machine when you are importing from Japan, so what is comparable identical goods? That is also washing machine only. And if you are importing top load washing machine, that comparable is also top load washing machine only. As you imported from Japan, that also should be imported from Japan. And if you are importing LG, can the Samsung be taken as identical goods? Yes. Samsung can be taken as identical goods, not necessary same producer preferably. Samsung can be taken, but that Samsung also should have the same physical features and quality, which means if you are importing top load, and in that top load if it is a steel drum, Samsung also should be top load steel drum, and if you are importing 6.5 kg, that should also be 6.5 kg. Everything should be same, but the brand name alone can be different because the producer need not be same. Preferably the same is only they are telling. Suppose if they imported from Taiwan, so can that be taken as identical goods? No, because it should be from the same country. Come on, respond. What is the meaning of identical goods? Imported goods, same physical features and quality, and same country and same person preferably. And we need to make 3 adjustments to this. What are the 3 adjustments? Number 1, adjustment with respect to the quantity. Suppose if you have imported 2000 units and the other person has imported 3000 units, had he imports 2000 units, whatever is the value, that should be taken, because it should be comparable at the equal stage. Suppose if there is a difference in the quantity, we need to check what if he imports your quantity, what will happen to the price. Maybe he will not get the discount, so that adjustment we need to make. Then adjustment with respect to the transportation cost. For example, you imported to Chennai port, whereas he imported to Mumbai port. Suppose if that is imported to Chennai port, there will be some extra freight, so that should be added. So that is how we need to make the adjustment. And next, number 3, adjustment with respect to difference in the commercial level of importation. Say you imported from manufacturer and that person imported from a distributor. Had he imported from manufacturer, the distributor margin will not be there, so the distributor margin should be taken out. So that is called as difference in commercial level of importation. After making these adjustments only, it will be perfectly comparable. First it should be identical goods, and then we need to make these 3 adjustments. And if you get multiple values, which value should be taken? Lowest of such value shall be considered. So by making this, maybe some 4 identical goods values we might be getting. So in that, the lowest of such value should be taken for valuation. Then suppose if this identical goods fails, then what we need to do? We need to go for similar goods. What does similar goods says? Similar goods has a slight difference. Similar goods should also be imported goods, but commercially interchangeable. Can a front load washing machine be taken as a comparable to top load washing machine? Yes, that can be taken because it is commercially interchangeable, but washing machine only. Fridge and all we cannot take a comparable, okay, under similar, because commercially interchangeable. The purpose should be the same, but it can be commercially be interchanged. Maybe semi-automatic also can be compared with automatic like that, okay, but it should be washing machine. That is the meaning, commercially interchangeable. But other 2 points are same, produced in the same country, produced by the same person preferably, but not compulsory. Country should be same. And we have to make 4 adjustments now. What are the 4 adjustments? The first 3 adjustments same, difference in quantity, difference in transportation cost, difference in commercial level of importation is same. But what is the extra adjustment we need to make? Difference in the material and engineering work. So that is like we are comparing a top load with a front load. So usually there is a difference between top load and front load to the extent of 15,000 rupees, there will be a difference. So that adjustment we need to make. And what if we get multiple comparable values? We need to take lowest of such value. Then rule 6, when the above rules are not applicable. Rule 3, transaction value, that is AF price. Rule 4, identical goods. Rule 5, similar goods. And rule 6, suppose if it is not possible, you can decide between either deductive value or computed value. I told you this already, that either we can follow rule 7 or rule 8 in any order. So therefore, deductive value, what does deductive value says? Deductive value is like a bottom up approach, whereas computed value is like a top down approach. So usually under bottom up approach, we need to take the sale price in India after importation. From that you do all the back working and go to price at the time of importation. Usually how we will get the price in India, selling price in India, price at the time of importation plus all post importation expenses you will add, you will get the selling price in India, na? So you take the selling price in India and minus what? All post importation expenses. So selling price of imported goods or identical goods or similar goods to unrelated buyers in India minus post importation expenses including the customs duty. If you deduct, you will get the value at the time of import. This is known as deductive value. Whereas computed value will be top down approach. Top down approach means we will take the cost of production, that is at which stage? Factory of the exporter, material cost, labor cost, conversion cost or etc. Cost of production, profit and general expenses plus freight and insurance from where to where? Freight and insurance from the exporter's port or airport to importer's place. So that is freight and insurance as referred above. Then this will be called as computed value method. But sometimes when there is a deductive value as well as computed value, you can choose whichever is lower. Why you can choose whichever is lower? That's what rule 6 says, that value can be determined as per rule 7 or rule 8 in any order. Okay. And rule 9 talks about best judged value. So when it is not possible to determine value as per any of the above rules, then customs officer, based on the principles of valuation, so he will be determining general principles of valuation, he will determine the value and that will be taken. Okay. Suppose if you don't want to pay that particular value, based on that value you can go for appeal against that. So they will pass an assessment order, against that you can go for appeal. That is up to this. You understood? Next, what will be taken as a valuation in case of export? You tell me what is a value in case of export. FOB price should be taken as value in case of export, and any adjustments required? No. In case of import only adjustments required. In case of FOB, everyone will declare more value. So customs officer will try to reduce the value. Why we will declare more value in case of export? Because of export incentives. In case of import, we declare lower value because we need to pay the customs duty. So he will add the value. Whereas in case of export, we declare a higher value. So officer will try to reduce the value. So there is no adjustments in this case. Just the FOB price declared will be taken. But sometimes this FOB price declared will be rejected. If the officer is of the opinion that we have inflated the export value to claim more benefits, they will reduce this value. So look into the next page, rule 3. But this is also customs valuation rules. Sir, same rule how we will have? No, not same rules, actually it is. Customs valuation rules itself, we have two rules. Customs valuation for imported goods rules 2007. Customs valuation for exported goods rules 2007. Same year. The year of the rules is same, but we have two separate set of rules. In this rule 3 says assessable value, transaction value. What is a transaction value? FOB price will be taken as a transaction value. Here if you want, you write down. So in case of import, what is a transaction value? CIF price will be taken as a transaction value. But here what should be taken as a transaction value? FOB price will be taken as transaction value. But the proper officer should satisfy that the declared transaction value is genuine. Even in case of related party, transaction value may be acceptable. Then suppose if it is not possible to take this transaction value because of the, I told the officer is of the opinion that the value declared is not correct, then rule 4, transaction value of goods of like kind and quality. They did not use the word identical goods, they use the word like kind and quality. Like kind and quality means what? That should also be exported goods. For example, you are exporting a machinery from India. So comparable should also be a machinery exported from India. So exported goods having same physical features and quality. For example, you are exporting a LED TV. So that should also be a LED TV. That should not be LCD TV or OLED TV. That should also be a LED TV and produced in the same country. So if you are exporting goods from India, that LED TV is also exported from India and produced by the same person. So suppose if you are manufacturing it, so that should also be manufactured by you, but preferably not compulsory. You understood? And then we need to make 3 adjustments. Actually, this is similar to that rule for identical goods. Okay, and adjustments, 3 adjustments we need to make. What are the 3 adjustments? Difference in quantity, difference in transportation cost, and difference in commercial level of exportation. Suppose if we get multiple values, what we need to do? Lowest of that value should be taken. And as per rule 5, computed value. Computed value means what? Cost of production plus profit and general expenses. Why we don't have freight and insurance and all? Because if you see previous case, computed value, cost of production, profit and general expenses plus freight and insurance we have taken, because we need to take the price prevailing at the importation. Whereas in case of export, we need to take the price prevailing at the exportation. In that case, so we will not add freight and insurance. So just cost of production, profit and general expenses. Then if suppose it is not possible, we need to determine the value as per best judgment value, wherein customs officer considering the various principles on valuation, he will determine, that is known as best judged value. Then finally, we have valuation in case of second hand goods. So in case of second hand goods, what we need to do is that first we need to check whether we need to get the report of overseas chartered engineer, because second hand goods basically will not have a uniform value. because at which stage it is second hand. 1 year used is also second hand, 3 years used is also second hand, 5 years used is also second hand. So because of that, there is no proper value for this. So we need to get a chartered engineer certificate from outside India. If we get a chartered engineer certificate from outside India, that value declared by the chartered engineer outside India only will be taken as a value for payment of customs duty. Whether report of overseas chartered engineer submitted by importer in Form A, yes, that declared value will be based on Form A only, and we need to pay customs duty based on that. Suppose we are unable to get the chartered engineer certificate from outside India, then we need to produce the chartered engineer certificate from India, but that will not be directly be taken by the customs department. That will be compared with the value declared by the importer and the depreciated value of that goods. So comparison between value declared by importer and value as per report of Indian chartered engineer and depreciated value of the goods. If there is no much difference, more or less all these three values are same, then the value declared by importer only will be taken. If there is a huge difference, say the depreciated value is 5 lakhs, but the value declared by the importer is 1 lakh, like that, if there is a huge difference, then in that case, proper officer shall seek an explanation from the importer, and importer should provide the explanation. If the explanation is satisfactory, then also declared value will be taken. Otherwise, officer will determine the value as per the above rule 4 to rule 9. Okay. That's it. These are the points that we have in valuation, and we will see one more question related to rule 7. That computed value method is there, na? Say this. Question number 22. Mr. X imported certain goods from a related person, Mr. Q of US, and transaction value has been rejected. So it is import. Import, transaction value rejected. Rule 4 and 5 of the imported valuation rules are found inapplicable. So identical goods also failed, similar goods also failed, as no similar or identical goods are imported into India. Mr. X furnishes cost related data of imports and requests customs authorities to determine value accordingly as per rule 8. The relevant data are cost of materials incurred by Mr. Q is 2000. So we need to take the computed value. In computed value, we need to start with the material cost and add everything, but ensure that post importation expenses you are not taking. Got it? So whether it is pre-import or post-import, cost of material incurred by Mr. Q is pre-import or post-import? Pre-import, before import. So we need to take that 2000 we will take. Next, fabrication charges incurred by Mr. Q, pre or post? Pre. So therefore we need to add this 1000. And other chargeable expenses incurred by Mr. Q, pre or post? Pre. So therefore 400. Q is exporter here. Q is exporter. Other indirect costs incurred by Mr. Q, 250, pre-import. And freight from Q's factory to US port. Yes or no? Should it be taken in FOB? Yes. So plus 250 plus loading charges at US port. Is it also his cost? Yes. So plus 100. Now what we got? 4000. Is 4000 FOB? No. Still we have not added profit. Still we have not added profit. 4000 is his cost. Whose cost? Q's cost. Q's cost. Now we need to add the profit. Sir, what about air freight and insurance? This is afterwards. Afterwards we will get the air freight insurance after ascertaining the FOB, correct or not? So therefore we should not take it now. So we need to take the profit. So how much is the profit? 20% of FOB. But what we got is cost. So after you add profit only you get the FOB. So if 20% is on sales, FOB is selling price. If 20% profit is on sales, then how much will be on cost? 25% on cost. Let sales be 100, profit is 20 on 100. So but cost on cost means 20 by 80. 20 by 80 is what? 25%. So therefore what is the cost that we have got so far? $4,000. For this $4,000, add 25%, that will be $5,000 is taken as the FOB price. Are you understanding this? So $5,000 is the FOB as per customs. To this, we need to add freight and insurance, because everything should be taken up to the importation place, correct? So what is the insurance? What is the insurance? Ascertainable or not ascertainable? Ascertainable. So we will take 50. So far we have got in this $5,000 as the FOB, correct? FOB price we got as $5,000. And insurance we need to take. What is the insurance? $50. And air freight also we need to take. What is air freight? Don't take fully. We have to compare actuals. What is actuals? What is actuals? How many times should I tell you? Air X factory price is given. Air X factory price is given. We have calculated from the factory gate. So we need to take actuals as freight from factory gate of the exporter, that is 250 plus 100 plus 1500. 250 plus 100 plus 1500. How much it will be? $1,850 or B 20% of FOB. What is 20% of FOB? $1,000. Whichever is lower, which is lower? Whichever is lower, that is $1,000. And to this 1,000 minus already in FOB. What is already in FOB? 350. This 250 and 100, 350. Then how much will be taken as air freight? $650 will be taken. Now what is the CIF price? Because we don't have any other cost. In the question we don't have any other cost. So therefore how much will be taken? 5,700 into what is the exchange rate given in the question? 70 per dollar. So into 70, that will be 5,700 into 70, 3,99,000 is taken as the assessable value as per deductive value method. But see the point below. The customs authorities are of the opinion that since a value as per rule 7 can be determined at 4 lakhs, that is deductive value can be determined at 4 lakhs, there is no need to apply rule 8. True or false? False. So even if the deductive value is applicable, it is up to the importer to choose either computed value or deductive value. But in this case, as the computed value is less than the deductive value, 3,99,000 only will be taken as the assessable value for payment of customs duty. Is it clear? So see the answer for this. Question number 22. Clear? 3,99,000 is taken as the answer. Understood? And that paragraph we need to write. What is that paragraph? So as per rule 6, the importer can choose either deductive value or computed value. Okay? Fine. So we completed taxable event and valuation under customs. We will take a break and then we will proceed to types of customs duties. Okay? So we will meet after 15 minutes. Take a break for 15 minutes. And online students, if you have any doubts, just post your doubts. I'll clarify after break. Even if you guys have any doubts in the break, you can ask me. Okay, we'll start. Look into page 191, segment 25, classification of goods and types of customs duty. In that classification of goods under customs, actually we have only these rules related information that will be tested. So that's why I have just given this much only. So general interpretative rules or rules for interpretation of tariff. So tariff is like we have list of goods on which we need to pay customs duty. Different goods are there and different rates are there. And this particular tariff, whenever we are unable to identify the product that we have imported or exported in the tariff, how to interpret this tariff? For that we have rules. Rule number 1, which says that titles are for reference only, which means, so we should not classify based on the headings or any title, etc. We need to read the relevant section notes and chapter notes, and then only we will be able to do the classification. For example, so prima facie, when you see the heading, it appears that the product will be coming under that heading, but read the relevant section notes and chapter notes, then you will get an idea as to whether this product what you have imported is really coming under this heading or not. That's what rule 1 says. The titles are for reference only, classification based on headings, read with section and chapter notes. Then 2A says, if you are importing a car without tire, or if you are importing a car without seat, where will you classify that? You have to classify along with the car only, because even though incompleted goods are imported, that incompleted goods are classified along with the completed goods, provided the incomplete goods are having the essential characteristics of the completed goods. So when you are importing a car without tire, still it is a car. When you are importing a car without seat, still it is a car. So therefore that should be classified along with the car only, but not under parts of car. But when you are importing really the parts of the car, say engine you are importing or any parts of the car you are importing, that will only come under parts of the car. But when there is an incomplete product, it should not be classified as parts, it should be classified along with the completed product. So any reference to completed goods also includes incomplete or unfinished goods. That is, completed goods equals to incomplete or unfinished goods. And 2B says, any reference to a material includes combination of that material with the other material. For example, you are importing coffee. Coffee is having a separate heading. But if you are importing coffee with chicory, so you are not importing coffee per se. You are importing coffee which is mixture of coffee with chicory, where you should classify under coffee only. Same way you are importing gold. You have to classify it under gold. What if you are importing a gold article which is partly made up of gold and partly made up of copper? Where will you classify? Under gold only. So any reference to material includes combination of that material with other material. Then next one says, whenever there are two headings, one is a general heading and one is a specific heading. Generally we need to prefer specific heading over general heading. For example, you are importing a shaving machine, so electric shaving machine, and there are two headings. One heading says electromechanical domestic appliances with self-contained electric motor, like that one heading is there. Another heading says shavers and hair clippers. When you are importing electric shaver, it will come under both the headings because it is a domestic appliance with a motor. So it will come there also. And it will come under shavers and hair clippers also. But which is specific heading? Shavers and hair clippers is specific heading over the general heading. So we need to prefer specific heading over general heading. Then whenever you are importing articles, that is like when you are importing a product, that product is containing multiple articles. For example, you are importing a mobile. When you are importing a mobile, that mobile comes with charger and the mobile comes with headset, like that. So when you are importing a geometry box, the geometry box contains drawing instruments, eraser, pencil, sharpener. These are all different headings. So where we should classify? So a product contains multiple articles. We need to classify it based on essential character. So in the geometry box, what is the essential character? We have total 5 in the geometry box. Box, metal box, one heading. Drawing instruments, one heading. And then pencil, one heading. Eraser, one heading. Sharpener, one heading. So where we will classify? What is the essential character in this? Drawing instruments is essential character. So we need to classify based on that. So you can see classification shall be as per essential character. If a particular product is mixture or composite of goods containing different materials. Suppose if both the headings are specific, which should be taken? So we need to take which comes last in the numerical order. For example, 8702 is motor vehicle for transportation of persons. 8703 motor vehicle for transportation of goods. You are importing a motor vehicle that can be used both for transportation of goods also, for transportation of persons also. For example, this Isuzu vehicle is there, na? That Isuzu vehicle on the back, so there will be a very big space wherein you can use it for transportation of goods. The same vehicle can be used for transportation of persons also. Even Tata Ace kind of vehicles, it can be used for transportation of goods also, transportation of passengers also. When both the headings are specific, which heading should be taken, which comes last in the numerical order. What is last in the numerical order? 8703, 8704. 03 is passenger vehicle, 8704 is goods vehicle. So therefore we need to put it under goods vehicle, which comes last in the numerical order. The latter the better. Then rule 4 talks about akin goods. Akin goods means similar goods. For example, you are importing this sun glare protector film, car or vehicle, sun glare protector film you are importing. That sun glare protector film, we don't have any separate heading, but it will be classified under blinds and curtains, because blinds and curtains is also for the same purpose, to filter the sun glare. Same purpose we are using this also, microfilms also, sun microfilms. Due to that reason, it will be classified under that, similar. So when you are not having exact goods, you classify it under similar. So akin goods, last rule of classification, wherein goods under question can be classified under that heading which is most related to the said goods. Rule 5 talks about packing containers. So whenever you are importing some packing materials or packing containers, and if that packing materials or packing containers is used only for that particular product, it should be classified along with that product. For example, you are importing a violin box. Violin box cannot be used for keeping anything else, only violin. So therefore, what is the rate applicable to violin box? The rate applicable to violin only will be taken. Same way you are importing jewelry box. Jewelry box can be used only for the purpose of keeping the jewelry. So whatever is the rate applicable to jewelry, the same thing should be taken for jewelry boxes also. But what if the articles, packing materials is general, means not specific, then we should see the separate heading for it. Rule 6 says goods can be compared for classification at the same level only, which means under the chapter one heading and another heading can be compared, but one heading in one chapter whereas another heading in another chapter cannot be compared. So within the chapter only the comparison can be made. That is the meaning of goods can be compared for classification at the same level only. That is, so headings are subheading, but one heading with chapter cannot be compared. So one heading in this chapter cannot be compared with heading in another chapter. So mainly for MCQs or somewhere this will be helpful. Okay. Next one, what we have is types of customs duties. Already we have discussed how to compute the customs duty payable. So we have basic customs duty. That basic customs duty will be given in the question itself, and it should be computed on what? Assessable value. And we have two types of rates, standard rate and preferential rate. Look out for the question. In the question, if they give standard rate as well as preferential rate, apply preferential rate only if we are importing from some countries with which India is having trade agreement. So that point should be given in the question. In the question, they give standard rate as well as preferential rate, but the statement should be given. So these imports are made from the countries with which India is having a trade agreement. Like that, somewhere if the line is given, then don't take the standard rate, take the preferential rate. And social welfare surcharge, always social welfare surcharge is 10% of basic customs duty. And there is something called as agriculture infrastructure development cess. Mostly that will be asked to ignore, so we will not take. Suppose if we have AIDC, agriculture infrastructure development cess, it should be computed on what? It should be computed on assessable value, and it will be coming in the step 1. So in step 1 we discussed na basic customs duty, social welfare surcharge. In that step 1 itself it will come. Okay, AIDC, agriculture infrastructure development cess. You just write down agriculture infrastructure development cess, AIDC, at notified rate on assessable value. So it will be part of step 1. It will be part of step 1. Only if it is given in the question you take, otherwise don't take. Okay, only it should be given in the question. So that's what I said, notified, not on all goods, only on notified goods that will be applicable. Then mostly in almost every question they will be giving ignore AIDC, like that only they will give the questions. But suppose if they give AIDC, then you need to take it this way. Then we don't have education cess and secondary and higher education cess at present, so that is omitted. Then IGST and GST compensation cess. Again, if it is given in the question only, you take, and that too it should be computed on what? Assessable value plus all the customs duties. Why all the customs duties? Because in GST we have one point, section 15 subsection 2 clause A, which says that all taxes and duties and cess other than GST should be included in the value. Due to that reason, while computing GST we will add all customs duties. Then next, see this note 1. In the past, on imports there used to be CVD, countervailing duty, under section 3 subsection 1 to counterbalance what? Excise duty. But at present, excise duty got subsumed into GST. So CVD also got subsumed into GST. So was levied in order to counterbalance excise duty. And special additional duty under 3.5 was levied in order to counterbalance the sales tax. However, now on account of GST, its applicability is limited to few goods. What are the few goods for which its applicability is limited? Already we discussed. CVD is limited to 3 goods. What are they? Alcoholic liquor for human consumption, petroleum products, tobacco and tobacco products. Whereas special additional duty is restricted only to petroleum products. Then in case of exports, the basic customs duty is only applicable. Social welfare surcharge is not applicable. You understood? So only basic customs duty is payable, and if exports are chargeable to duty. So just like that exports is given, don't compute the customs duty, check for the rate in the question. Only if rate is there, we need to pay customs duty, because not all exports are chargeable to customs duty. There are only few exports which are chargeable to customs duties. Then note 3, in case of warehoused goods sold by way of transfer of warehouse receipt, IGST under customs will be computed on assessable value plus basic customs duty plus social welfare surcharge, or sale value of such warehouse receipt, whichever is higher. Let's try to understand this with a small example. Say Mr. A has imported the goods. Mr. A has imported goods and imported for $10,000. Mr. A has imported for $10,000, and what Mr. A did, he kept those goods in the customs warehouse. So those goods are deposited in customs warehouse. When these goods are deposited in customs warehouse, Mr. A would have paid the customs duty or not paid customs duty? Not paid the customs duty. Now what A is doing, A is transferring this warehouse receipt to Mr. B. So A transfers warehouse receipt. Warehouse receipt A has transferred to B, and for which B has paid to A $11,500. You understood up to this? A has imported for how much? $10,000. A has deposited the goods in the customs warehouse and he got a warehouse receipt. That warehouse receipt is the document of title to the goods. So A has transferred this warehouse receipt to B, for which B has paid $11,500 to A. Is this sale made by A to B is covered under GST? No, it is excluded from supply. So which means this $11,500, Mr. A is not required to pay any GST. So this particular transaction is not a supply, it is excluded from supply, that is under GST. So where sale of warehoused goods under customs is excluded from GST. Now who will file the bill of entry for clearance of goods from the customs warehouse? Mr. B will file bill of entry. Which bill of entry? Ex-bond bill of entry, correct or not? So ex-bond bill of entry will be filed by Mr. B for payment of customs duty. Now what is the customs duty payable? If basic customs duty is 10%, social welfare surcharge is 10% and IGST is 18%, how much is the customs duty payable? Customs duty payable by Mr. B. You understood the question? Again I am repeating. Mr. A has imported for $10,000, he deposited the goods with the customs warehouse and for which he got the warehouse receipt, that is a document of title. He transferred that warehouse receipt to Mr. B and for which Mr. B has paid $11,500 to Mr. A, and this particular sale is excluded from supply. This is excluded from supply under GST. Under GST. Now B will file the export bill of entry and B is required to pay the customs duty. So the question is, how much customs duty is payable by B? If the basic customs duty is 10%, social welfare surcharge is 10% and IGST is 18%. Simple. First, what should be taken as the assessable value? You understood this question? Please respond here. What should be taken as the assessable value in this case? The assessable value in this case will be taken as 11,500 or 10,000. 10,000. The assessable value will be taken as 10,000 only. So even though B is clearing, the assessable value will be 10,000 only, not 11,500. Don't forget this. So in case of warehoused goods cleared from the customs, the assessable value will be the original assessable value only. What is the original assessable value? 10,000. That should only be taken. And let's take the exchange rate. The exchange rate as 80 rupees per dollar. So how much will be taken as assessable value? 10,000 into 80. That will be 8 lakhs will be taken as assessable value. Now we need to compute the basic customs duty. How much will be the basic customs duty? At 10% of rupees 8 lakhs, that will come to 80,000 rupees is the basic customs duty. Social welfare surcharge at 10% of rupees 80,000, that will be 8,000. And next we need to take IGST. Related to this only, this note 3 is given. What is it they are telling? IGST at the rate of 18% on A. A will be assessable value plus basic customs duty and social welfare surcharge, that is 8,88,000, or B. What is the price at which these goods are sold? 11,500 into 80. What is 11,500 into 80? Sir, what is the price at which these goods are sold to Mr. B? Transaction value at which these goods are sold to B? 11,500 into what is the exchange rate? 80 rupees per dollar. That will be 9,20,000. Whichever is higher. Whichever is higher. Which is higher? 9,20,000 will be higher. On that 9,20,000 you take 18%. What is 18% of 9,20,000? 1,65,600 will be taken. This is the customs duty payable. So what is the customs duty payable? So 80,000. Who will pay? B will pay. 80,000 plus 8,000 plus 1,65,600. That is 2,53,600 is the customs duty payable. Understood? So even if you are not able to write all these things in the speed in which I am writing, don't worry. I will share all these notes, handwritten notes, as a G Drive link in the description to this video. So in YouTube video is there na? In that today evening, once the class gets over, day wise whatever notes is there, that will be uploaded, so you can just track whatever is that information. Okay, don't worry about this. But if possible, you write so that you keep yourself engaged for that reason. Okay, so now this is the customs duty payable, 2,53,600. Are you understanding this? Now read that note once again. What does it say? In case of warehoused goods sold by way of transfer of warehouse receipt, correct? A is transferring the warehouse receipt. Now IGST under customs, not assessable value. IGST under customs shall be computed on what? Regular. Regularly, how you will compute IGST? Assessable value, basic customs duty, social welfare surcharge, or sale value of such warehouse receipt, whichever is higher. So due to that reason only we are taking it this way. Suppose in this question, what will be your answer? If A is clearing the goods and thereafter A is making sale to B. Okay, what will happen? If Mr. A clears from warehouse, if Mr. A clears from warehouse and later sell it to Mr. B, for 11,500, then what will happen in this case? Who will pay customs duty? A or B? Customs duty payable by Mr. A. Customs duty payable by Mr. A. What will be the assessable value? $10,000 into rupees 80 per dollar, that will be rupees 8 lakhs. And what will be the basic customs duty at the rate of 10% on 8 lakhs? That will be 80,000. And social welfare surcharge at the rate of 10% on 80,000, that will be 8,000. And then we need to take IGST. Should we do the comparison? No, don't do the comparison. IGST at the rate of 18% on 8,88,000. That is normal. Don't do the comparison. Normal you take. So that will be 8,88,000 into 18%, 1,59,840. So therefore customs duty will be, so 2,47,840 customs duty payable will be this. Now thereafter what A will do? Mr. A shall avail ITC of, Mr. A shall avail ITC of rupees 1,59,840. Should it be reflected in GSTR 2B? Answer. Should it be reflected in GSTR 2B? No, because this particular customs duty IGST paid need not be reflected in 2B. Even if it is not reflected in 2B, this can be taken as ITC. Okay, so this is called as GST paid under RCM. So therefore no need, but mostly it will be coming in 2B. I am not telling that it will not come in 2B. It will come in 2B, but even if it is not coming in 2B, we can still take the ITC. Keep that in mind. Okay. So Mr. A shall avail ITC of 1,59,840. Now A is making sale to B. Whether that will be treated as supply under GST? Yes. Sale by Mr. A to Mr. B is supply under GST. Why is it not excluded from supply? What is excluded from supply? If A is not clearing, the warehouse receipt is transferred to B and B is going and clearing, then A is not required to pay a GST. That is excluded from supply. But in this case, A has cleared the goods from the customs. As A has cleared the goods from the customs, so it will become supply under GST. It is not excluded from supply. Then what is the gross GST payable by A? Gross GST payable. How much here? Value 11,500 into what is the exchange rate? 80 rupees per dollar into, sir, but for GST why are you taking 80 rupees per dollar? My dear, for the purpose of time of supply also we need to take exchange rate as per CBIC only. Rule 34 of CGST rules. Rule 34 of CGST rules 2017 says whenever we are determining the GST computation, we need to convert the foreign currency into Indian rupees using the same CBIC notified rate for goods. For service only we need to take GAAP rate. Here what is the CBIC notified exchange rate? 80. For customs, what is the CBIC notified rate? 80. The same CBIC notified rate we take even for GST computation also. You understood? So therefore, into 80 rupees per dollar. So 11,500 into 80. How much that comes to? 9,20,000 into what is the rate of GST? 18% into 18%. 1,65,600. But this ITC is there na? Minus ITC utilized. What is that ITC utilized? 1,59,840. But you need to always check this point. What is that? There is one rule called as Rule 86B, which says that if your taxable turnover exceeds 50 lakhs in a month, concentrate, if the taxable turnover in a month exceeds 50 lakhs, not total turnover, taxable turnover. It excludes exempted, it excludes non-taxable, it excludes zero rated. You should see the taxable turnover. If it exceeds 50 lakhs, you cannot use full ITC. So out of the liability, 99% only you can use from electronic credit ledger. 1% you have to pay through electronic cash ledger. Okay. But that point is not applicable here. Why not applicable? Remember, when you will apply Rule 86B, you know, whenever you have sufficient balance in ITC, then only you apply Rule 86B, which means you have an ITC in this case more than or equal to your gross liability. What is ITC in this case? Less than your gross liability. Don't apply rule 86B. You know, when you need to apply rule 86B, in the question, you see the gross liability and you see the ITC. If the ITC is more or equal to the gross liability, then rule 86B of CGST rules you should apply. And here you don't have to, because your gross liability is more than your ITC, so fully you can use. And balance will be the net GST payable. So what is a net GST payable? 1,65,600 minus 1,59,840, that will be 5,760 will be taken as net GST payable. Are you understanding this? Now, this is about in case of warehoused goods sold. Second one, cleared from the warehouse and then sold. You understood? Now, let's take another combination. What will be your answer if Mr. A transferred documents to Mr. B even before deposit in warehouse? Even before deposit in warehouse. Then what will happen? It is called as high C sale. And in case of high C sale, so whether any GST payable by Mr. A? No. So GST not payable by Mr. A. Why GST not payable by Mr. A? Because it is excluded from supply. As it is excluded from supply, GST not payable by Mr. A. Then who will pay the customs duty? Who will file the bill of entry? Mr. B. Bill of entry for ex-bond bill of entry or bill of entry for home consumption? Bill of entry for? Very good. Bill of entry for home consumption. Keep it up. Because we are not depositing the goods in warehouse, Mr. B is going to clear it for his place. So he will not file in-bond bill of entry or ex-bond bill of entry. He will file bill of entry for home consumption. Bill of entry for home consumption filed by Mr. B. So what is the customs duty payable? And customs duty payable by Mr. B. How much will be taken as the assessable value? Come on. Assessable value equals to $11,500, not 10,000. Are you understanding the difference? In case of high C's, the assessable value is the last purchase price, not the original import price. The last purchase price should be taken. What is the last purchase price? $11,500 into rupees 80. So 11,500 into 80 will be 9,20,000 will be taken as assessable value. And after this, we need to take basic customs duty. What is the basic customs duty? Basic customs duty at the rate of 10%. Basic customs duty at the rate of 10% on what? 9,20,000. Previously we took on 8 lakhs, but now customs duty will increase. So now itself you tell me what is a better option. So deposit in warehouse and then sell, or before depositing warehouse itself you sell? Before depositing in warehouse itself, if you sell, you are going to pay higher customs duty. So better to keep it in the warehouse and thereafter you sell it, so that Mr. B will be paying the lesser customs duty, because basic customs duty itself you see somewhere it is going, correct or not? So 9,20,000 into 10%, 9,20,000 into 10% will be 92,000. Social welfare surcharge at the rate of 10% on 92,000. That will be 9,200. IGST at the rate of 18%. Should we do the comparison or no need to do comparison? No need to do comparison. Normal assessable value, basic customs duty, social welfare surcharge. What is that? Assessable value how much? 9,20,000. Basic customs duty 92 and social welfare surcharge 9,200. That is 10,21,200 into 18%. That is 1,00,000. 83,816. So what is the total customs duty payable? Total customs duty payable 92,000, 9,200, 1,83,816. That will be 2,85,016. This will be taken as the total customs duty payable. Are you understanding this? So there is a difference in the total customs duty payable. Here it will be first case 2,53,600. But in case of high C sale, it will be 2,85,016. So small differences only. You need to appreciate these differences. What is that? Assessable value in case of sale of warehoused goods is the original import price only will be taken. Whereas in case of high C sales, the last purchase price will be taken. But for computation of IGST in case of warehoused goods, we will take the regular assessable value, basic customs duty, social fare surcharge, or transaction value at which these warehoused goods are sold, whichever is higher. But in case of high C sale, normally we will do the computation of IGST. That comparison is not there. Is it clear? And sir, what if the price at which these goods are sold is less than, less than the price at which it is imported? For example, they are importing for $10,000 and they are selling it for $9,000. In that case, what will happen? In case of high C's, they are importing for 10,000, but they are selling for 9,000. How much will be taken as the assessable value? $9,000 only will be taken. So the last purchase price will be taken. Not necessary that the last purchase price should be more than the original import price. If Mr. A is originally importing for 10,000 and thereafter Mr. A is selling to Mr. B for $9,000. So $9,000 only will be taken, but customs officer will definitely question as to why the price has been reduced. So if there is proper justification, that will be taken. Otherwise, rule 3, rejection of value, transaction value declared and value determined as per identical goods, similar goods, etc. that will come into the picture. Understood? Next. So this is that note 3 which we discussed elaborately. Then note 4, where basic customs duty is nil, social fare surcharge is also nil. And of course, because social fare surcharge is 10% of basic customs duty, basic customs duty is 0, social fare surcharge is also 0. Then we have some additional customs duties. What are the 3 additional customs duties? I told you on import we will pay safeguard duty, anti-subsidy duty and anti-dumping duty. But we have protective duty. Protective duty is not actually additional customs duty. It is enhancement of the basic customs duty. Means it will not come anywhere in the computation steps. So basic customs duty, regular basic customs duty, if it is 10%, means wherever protective duty is there, the basic customs duty will go to 30% or 40% like that, which means it is not a separate line item. In the regular basic customs duty itself, inbuilt in the basic customs duty, there will be an increased rate, that is this protective duty. And protective duty is given under section 6 of Customs Tariff Act. Safeguard duty section 8B of Customs Tariff Act. Anti-subsidy duty, sometimes anti-subsidy duty also called as countervailing duty in the questions given in the exam, but that is under section 9. So why it has been separated? Because we have already one countervailing duty under section 3 subsection 1. This countervailing duty is to counterbalance the excise duty, but this is under 3 subsection 1. This is countervailing duty under section 9. So both are countervailing duties only, but then the confusion will come. So that's why we remember it like anti-subsidy duty. Even in study material also they use the words anti-subsidy duty only, but under section 9 of Customs Tariff Act. Then anti-dumping duty will be section 9 of Customs Tariff Act. Now first we will try to understand why there will be these duties. So number 1, protective duties. All these are mainly to protect the domestic manufacturer, but against what? So normally to protect the domestic manufacturer, they will be bringing protective duty. For example, you are importing some staple goods of India. What are the staple goods of India? Usually it is already produced in India. Rice, wheat, etc. are the staple goods. If you are importing, what will happen to the domestic production? Will it get affected or not affected? Affected. So therefore protective duty will be levied in order to discourage the import. Okay. And next we have safeguard, anti-subsidy duty, anti-dumping duty for same reason, to protect the domestic industry. But safeguard duty is to protect the domestic industry against large imports. When you are importing in large quantities, in order to stop you from importing in large quantities, they will be levying something called as safeguard duty. You can see this. So protective duty is to protect the interest of any industry established in India against imports. But safeguard duty is for what reason? serious injury to domestic industry on account of what? Large quantities, import in large quantities. Anti-subsidy duty is also to protect the domestic industry on account of what? Anti-subsidy duty in order to compensate the subsidy on the exported article to India. So like for example, China is giving subsidy to a manufacturer in China. China government is giving subsidy to a manufacturer in China that if they sell to India, they enjoy that subsidy. As they enjoy subsidy, what manufacturer in China will do? He will sell to India at a lesser rate. So which means that the imported article is cheaper. Why it is cheaper? Because it got the subsidy. So now we will levy anti-subsidy duty by adding the subsidy so that the price will increase. So serious injury to domestic industry on account of subsidy enjoyed in export pricing. Anti-dumping duty for what reason? Manufacturer in outside India, what he will do? He will manufacture in large scale. When he manufactures in large scale, he will sell in his country at a normal selling price, but he will export to India at a lesser price just to recover his variable cost, marginal costing. So because whenever we study marginal costing, we would have studied export order means accept if the contribution is positive. He will also learn marginal costing. So therefore, he will also sell to India whenever the contribution is positive, which means he is selling to India at a price less than his selling price, means he is trying to dump the goods in India at a cheaper rate. So then in India, there will be something called as anti-dumping duty that is levied by the Indian government to increase the price of these goods. So serious injury to domestic industry on account of what? On account of import of goods at a cheaper rate. How we know that it is imported at a cheaper rate? Compared with their selling price. Whose selling price? Exporter selling price, not import like in India. So exporter selling price, compared to exporter selling price, he is exporting to India at a cheaper rate. That is this point. Are you understanding? When which duty will be coming? So tell me, in case of large quantities, safeguard duty. And if subsidy is there in the product X price, anti-subsidy duty. If they are selling to India at a price less than their domestic selling price, anti-dumping duty. Normally, to protect the domestic industry, protective duties. You got it? Now, whether the exports made in case of safeguard duty is fair export or unfair export, it's a fair export. You are importing in large quantities, that is not the mistake of the exporter or the exporting country. It's a fair export only, and you are importing in large quantities, so that is not their mistake. So due to that reason, in case of safeguard duty that is levied, it cannot be levied for a period beyond 10 years. As it is a fair export, there is no mistake of the exporter or exporting country. So in India, you can levy safeguard duty, but for a maximum period of 10 years. So means it will be levied for a period of 4 years and it can be extended for a further period of 6 years, but the maximum will be 10 years. But anti-subsidy duty and anti-dumping duty is on account of fair export or unfair export? Unfair export. So what is happening? Unfair export by whom? Exporting country. So country is doing a trade war with us. So they are giving subsidy to the exporter, so that exporter is selling to India at a cheaper rate. So it is a mistake of the exporting country. Whereas anti-dumping duty also, fair export or unfair export? Unfair export. In the other market, they are dumping at a lower rate. You understood? So mainly for the purpose of creating sales in other market, they cannot spoil the domestic manufacturer in this market. Are you getting this? So therefore it is unfair export by whom? Country or exporter? Exporter. So due to that reason, in these two cases, as it is an unfair export, there is no time limit. It can be levied for a period of 5 years and it can be extended for a further 5 years at a time after review. Means there is no time limit. For every 5 years they will conduct the review, and if required they will be extending this. So maximum will be unlimited time. Are you understanding the time limit logic? Okay, so safeguard duty will be levied for 4 years plus 6 years, maximum 10 years. Whereas anti-subsidy duty and anti-dumping duty will be levied for a period of 5 years plus 5 years plus 5 years, like that, but the maximum is unlimited time. Then next point, who is the authority to levy? Protective duty will be levied by central government, even these also levied by central government, but a slight difference is there. So these three are levied by central government based on receipt of complaint from the domestic industry. Which three? Safeguard, anti-subsidy, anti-dumping. But protective duty, as it is general, so there is a tariff commission which is appointed by the central government. That tariff commission will give recommendations to the central government. Based on that recommendations, so central government will be levying this. No need of making any complaint, etc. for protective duty. Are you getting this? Then here, what is the extent of relief? So once protective duty is levied, what they will do? They will increase the basic customs duty. For example, on import of atta, at a time they went for 40% basic customs duty. Atta is there na, atta, to make chapati, okay. Wheat flour pa, not wheat flour. For import of wheat flour, so they have levied customs duty of 40%. Here everywhere wheat flour is available, and like an idiot you are importing, so what is the need of it? So they have increased, that is called as protective duty, okay. So increase in basic customs duty. Whereas safeguard duty to the extent adequate to prevent the remedy. So therefore they will give a percentage. That percentage you need to multiply on the assessable value or landed value depending upon the question, okay. So rate shall be specified in the question, but we need to compute it on what? Either assessable value or landed value. And so see this, what is the difference? Even anti-subsidy duty also same, like a percentage rate shall be specified in the question. For these two cases, you just write down computed either on assessable value or landed value. What is landed value means? Landed value means assessable value plus basic customs duty plus social welfare surcharge. Sir, if the question is silent, we need to compute it on what? Assessable value. Okay. So note, compute on AV if question is silent. Usually they will give, whether it is an assessable value or landed value, like that it will be given in the question itself. But if the question is silent, you compute it on assessable value given in the question, okay. Whatever you do the computation, assessable value on that itself. And landed value will be what? Assessable value, basic customs duty and social welfare surcharge. This is common point for both safeguard duty as well as anti-subsidy duty. But anti-dumping duty is not like that. Anti-dumping duty will be lower of dumping margin or injury margin. So we need to take whichever is lower, okay. Now concentrate. Who is dumping? Exporter is dumping. So you tell me what could be the dumping margin? The price at which he is selling in his country minus the price at which he is exporting to India. Are you understanding? So what is dumping margin? Normal selling price in exporter's country minus export price to India. Then what is injury margin? Who is getting injured? The domestic manufacturer is getting injured. So what will be injury margin? So normal selling price in India minus landed value of the imported goods. Whatever is the import price, so that difference will be taken. So whichever is lower. So dumping margin is sale price in exporting country minus export price to India. Injury margin means normal selling price in India minus landed value, that is AV plus BCD plus social welfare surcharge of imported goods. Sir, what if the exporter is not selling in his country? Exporter is only exporting, he is not selling in his country. Then what we should do? So exporter is exporting, he is not selling in his country. See the price at which he exported to a third country, not India. See the price at which he exported to a third country. He is only exporting from his country. For example, exporter is in Germany, he is selling to India, he is also selling to US. See the price at which he is selling to US, and that you take as the normal selling price in his country. You got it? And suppose if he is not exporting to any country, he is exporting only to India, then in that case what we need to take as a normal selling price? There will be some usual cost of production in his country plus usual profit margin, cost plus pricing, understood? Cost of production plus profit margin, that you take as a normal selling price over there. Is it clear here? So say this, what we need to do whenever we are importing but we don't have the information. Okay, so somewhere you write down this sale price in exporting country, and suppose if this sale price in exporting country is not available, sale price not available, sale price not available, consider export price to third country, export price to third country, or cost of production plus usual profit margin, okay. Sale price not available, consider export price to third country or cost of production plus usual profit margin, anything. First you need to take export price to third country. If that is also not available, then cost of production plus usual profit margin. This is whenever we don't have the sale price in the exporting country. For that, this special point, okay. So these are all I could not give in the book. Book size itself you can see. If I give all these things, the book size will increase. So that's why I am telling some extra points, you make note of that, okay. Now, because this point is tested in exam, in one attempt they have tested this, that's why I gave you this information. See this. So this question they have tested in November 20 attempt. This is there in our solved workbook also. So, but you have to open that. That's why I am showing you the question directly here. Messrs PCB Limited has imported printed circuit boards for sale in India from country X, which are liable for anti-dumping duty. You are provided with the following details. Country X does not sell these goods in its domestic market. However, it exports the same printed circuit boards at $200 to another third country. Now that will be taken as the usual selling price in the exporter's country. Are you understanding? They are not selling there but exporting to a third country. So that will be taken as the normal selling price in their country minus what is the price at which they are exporting to India. Directly they have not given. So the printed circuit board is sold in domestic industry at 175 per piece. Domestic industry means in India. So normal selling price in India. And PCB Limited has imported the printed circuit board at 100 per piece. If they are importing at 100, means exporter is exporting at 100. Correct or not? So what is the export price at which they are exporting to India? 100. What is the normal selling price in exporter's country? 200. Minus what is the export price to India? 100. 200 minus 100? 100. Then what we need to compare with normal selling price in India. What is the normal selling price in India? 175 minus what is the landed value of the printed circuit board? 100. 175 minus 125, landed value 125. So 175 minus 125, 50. So 100 or 50, whichever is lower. What is lower? 50. 50 into how many circuit boards? 1000. So 50 into 1000 into 75. So 50 into 1000 into 75, that comes to 37,50,000 will be taken as the anti-dumping duty. That much only. We need to just compute the anti-dumping duty, direct application, but only thing, this special point we need to remember, when we don't have the price at which they are selling in their country, you take the price at which they are selling to a third country. So this is already tested. Now they may ask one more question. What if this is also not there, but their usual cost of production plus profit margin is there, that you take as the normal selling price? That concept is not yet tested. They may coin a question on that. Next. See the next point. Investigation. Is investigation required or not required in case of protective duty? No, because first of all, they will not receive any complaint and take the action. It is a suo motu action which is taken by the central government. But in the other three cases, we need to make a complaint. That's why investigation required. Until completion of the investigation, they will be levying a provisional duty. What is the period for which they will levy? If it is safeguard duty, they will levy it for 200 days, and anti-subsidy duty 4 months, anti-dumping duty 6 months. Means by this time they need to complete the investigation, Until that point of time, provisionally they can levy some duty. What will happen upon final determination? Suppose the final amount is more than the provisional amount, we need to pay the difference. If the final amount is less than provisional amount, then we will get the refund. So refund allowed or differential duty payable. Duration already we know. Exemption. So we don't have exemption for protective duties, but we have exemption from these 3 additional customs duties. If it is imported by a 100% EOU or a SEZ, they are not required to pay the special additional duties, that is additional customs duties, safeguard duty or anti-dumping duty or anti-subsidy duty, not payable. Not payable by whom? Come on. Imported by 100% EOU or a unit in special economic zone. However, if that 100% EOU or unit in SEZ is importing and then clearing it in DTA, are they required to pay this? Yes, because they are trying to circumvent, that is they are trying to escape from this indirectly by importing in SEZ or EOU. So, however, if imported and cleared to DTA, it is applicable. Retrospective levy. So, last 2, that is anti-subsidy duty and anti-dumping duty can only be levied retrospectively up to 90 days prior. So, today they can levy, so within 90 days prior import also they can levy this. So, retrospective date is possible up to 90 days before the date of such notification. Now, here this 5-year time limit is there, na? So, for anti-subsidy, anti-dumping duty 5 years plus 5 years after review. What if 5-year over, but the review was not conducted to extend it or not extend it? There is an automatic extension for 1 year if not decided whether to extend or not within the expiry of 5 years. Then next, in case of import in large quantities, what is the duty that is applicable? Please see the table and tell me what is the duty applicable for import in large quantities? Safeguard duty. There is an alternative to safeguard duty called as tariff quota method. What is this tariff quota method? It is not fair to levy the safeguard duty on flat on whatever quantity that is imported once a safeguard duty is applicable on that product. Concentrate, once a safeguard duty is applicable on that product, if you import that product from any country, you need to pay the safeguard duty. Now, sir, I am not importing large quantities. Yes, safeguard duty is applicable on that product, but I am importing only 2000 units. Why should I also pay safeguard duty? That's where they are bringing tariff rate quota, wherein up to this much quantity, like say up to 10,000 units, no need to pay anything. Beyond 10,000 units, you need to pay extra 10%. Beyond 20,000 units, you need to pay extra 20%. Like that, they can create a tariff rate quota method. Okay. So, that is fixing the maximum quantity of imports as safeguard measure instead of safeguard duty. But if there is a tariff rate quota method, all the provisions what we are learning for safeguard duty, the same will be applicable for tariff rate quota also. Then, anti-subsidy duty and anti-dumping duty is mutually exclusive. There cannot be both. So, it's like, because both if levied, already we are increasing the price under anti-subsidy duty. Again, if anti-dumping duty is levied, the price will be more, which is not at all acceptable. See, by levying these additional customs duties, the price should be on par with the import price. So, the price should not be, that is local selling price, the import price should be on par with the local selling price. But the import price should not be more than the local selling price. If the import price is more than the local selling price, it is not acceptable, because other countries also will start practicing the same. So, our exports will get affected. Okay. So, that is why these two are mutually exclusive. Then some special points and above, see the first one, non-applicability of safeguard duty. Already we know one non-applicability of safeguard duty. What is that? See the table, non-applicability of safeguard duty. One case it is not applicable, imports by 100% EOU or unit in SEZ. Apart from that, we have two more points where safeguard duty is not applicable. Articles originating from a developing country, so long as the percentage of import of that article into India does not exceed 3% of the total import into India. So, we are importing from one developing country or more than one developing country? One developing country. Say we are importing from one developing country and many developed countries. Okay. So, concentrate. So, we are importing goods, say product X, product X. This product X, we are importing from developing country and developed countries. Developed countries. Say from developing country, we have imported 300 metric tons, And from developed countries, we have imported somewhere like 27,000 metric tons. Okay. Now, what is the percentage import? What is the percentage share? 300 divided by 27,300 into 100. You understood? Percentage to total. Total imports is 27,300 na. What is the percentage? 300 divided by 27,300 into 100, that will be 1.098%, which does not exceed 3%. So no safeguard duty. Even though product X has safeguard duty, but when you are importing from this developing country, there is no safeguard duty because the percentage does not exceed 3%. Are you understanding? Sir, what about this? Don't see. Always safeguard duty applicable. Okay. Always safeguard duty applicable. Why always safeguard duty applicable? The exemption is not for import from developed countries. The exemption is only for import from developing countries. Okay. So therefore, we are importing from only one developing country, and the percentage of import from that developing country does not exceed 3% of the total import. In that case, safeguard duty not applicable. Then see the next point. We are importing from more than one developing country, and percentage from each developing country with less than 3% group does not exceed 9%. Then also there is no safeguard duty. For example, same product X, we are importing from developing countries as well as developed countries. From developed countries, how much we imported? Say 27,000 metric ton. And from developing countries, say we have A, B, C, D, like that 4 developing countries. And from A, 300 metric tons, and B, 2,000 metric tons, C, 600 metric tons, D, 800 metric tons. Now see the percentage from each developing country. Percentage import from each developing country. So total 300, 2,000, 600, 800 and 27,000, that is 30,700. So 300 divided by 30,700 into 100, 2,000 divided by 30,700 into 100, 600 divided by 30,700 into 100, 800 divided by 30,700 into 100. Quickly do this. 300 divided by 30,700 into 100, that is 0.97%. This is 2,000 divided by 30,700 into 100, that will be 6.51%. 600 divided by 30,700 into 100, 1.95%. 800 divided by 30,700 into 100, that is 2.60%. Now which and all you should group? A, C, D. A, C, D you take. Okay. So will there be safeguard duty on B? Yes. Safeguard duty applicable. Why safeguard duty applicable? So which you should group? Less than 3% you should group. Okay. But greater than or equals to 3%, safeguard duty applicable. Safeguard duty applicable. What about import from developed countries? Whether safeguard duty applicable? Yes. Safeguard duty always applicable. Now you see these 3 countries. These 3 countries taken together. What is these 3 countries taken together? 0.97 plus 1.95 plus 2.6, that is 5.52, correct? Country A, country C, country D taken together 5.52%, which does not exceed 9%. So safeguard duty applicable or not applicable? safeguard duty not applicable. So that's how whenever you get a question you need to do. First you need to see what is the percentage of each country import to total, and you group less than 3% together. If that together does not exceed 9%, no safeguard duty on import from those countries, those grouped countries. Whereas 3% or more than 3% you should take out. Always safeguard duty applicable. Here it is not less than or equals to 3%, it is less than 3%. But for the first point it is less than or equal to 3%. Okay. So that is this. So tell me what are the two cases. Articles imported from a developing country, does not exceed 3% of the total imports of that article into India. Import from more than one developing country with the developing country less than 3% taken together does not exceed 9% of the total imports of that article. Then circumvention of anti-subsidy duty and anti-dumping duty. Circumvention means escaping from payment of anti-subsidy duty or anti-dumping duty. How we will escape? Sometimes we will change the description of the articles. If anti-dumping duty and anti-subsidy duty is applicable on some product, we will try to change the description of the product in the bill of entry, or we will import it in unassembled or disassembled condition, or we will change the country of origin. For example, if anti-subsidy duty is applicable for import from China, but we will not import from China, we will import it from Singapore, so that we will try to escape from anti-subsidy duty. In that case, they will not give a new notification. The same notification which is already given for anti-subsidy duty, anti-dumping duty will be extended for you import from Singapore also, will be extended for imports of unassembled goods also, will be extended for imports by changing the description also. You understood? Read this. So it's important for theory, where the central government on inquiry, as it considered necessary, is of the opinion that circumvention of anti-subsidy duty or anti-dumping duty has taken place. Circumvention means escaping. So either of the following ways. What you will do? First you will change the description, alter the description, or you will import it in unassembled or disassembled form, or you will change the country of origin, or in any other manner wherein you will make ASD or ADD ineffective. So it may extend ASD, ADD to such other article also from such date not earlier than the date of initiation of inquiry. Then there is something called as absorption of anti-subsidy duty, anti-dumping duty. Absorption is taken place whenever they reduce the export price. For example, exporter is selling to India. In the same this case we will see anti-dumping duty case. What is the price at which exporter is selling to India? $100. And what is the normal selling price in his country? $200. And what is the anti-dumping duty levied in this case? $50. Because of which, what happened to the price in India? What is the import landed value? What is the landed value? 175. 175 plus 50, how much it came to? 225. So 225, which is the normal selling price in India also, correct or not? Again I am repeating here, what is the landed value of the goods in India? 125. For that 125, what is the anti-dumping duty in this question? 50. So 125 plus 50 will be 175. What is the normal selling price in India? 175. Means import price also equal to the normal selling price. Then is import, there is any excitement? No. So people stop importing because normal selling price is also the same. Now the exporter will question the importer. Why are you not importing? Because sir, normal selling price is also the same in India. Why should I import? Okay, I will give you a deduction. I'll give you $20 discount. So I'm already selling to you at 100. Now I'll give you $20 discount. So when I give $20 discount to you, which means the landed value will be minus 20, correct? 175 minus 20, 155. You got it? 155, but the normal selling price in India will be 175. So I will import, correct or not? This is called as absorption of anti-dumping duty or anti-subsidy duty. Whenever government comes to know that exporter has absorbed by reducing the export price, here anti-dumping duty will be increased by $20. Understood? They will not give a new notification. Using the same notification, they will increase it by $20. Means already what was the existing anti-dumping duty? $50. Now they will make it as $70, means plus 20. So 175. The normalcy is restored. You understood? So this is called as absorption. So when the absorption has taken place, absorption of ADD is said to have taken place if there is a decrease in the export price of an article without any commensurate change in the cost of production of that article. Then when the central government, as it may consider necessary, is of the opinion that absorption has taken place and the anti-dumping duty or anti-subsidy duty became ineffective, they can increase the anti-dumping duty. It may modify such duty to counter the effect of such absorption from such date not earlier than the date of initiation of inquiry. Then old customs duty. So these two concepts, circumvention or absorption, can be tested in exam as a theory part. Okay. Next, old customs duty is relevant in current scenario. Already we discussed what are the goods for which CVD is applicable. CVD, alcoholic liquor for human consumption, petroleum products, tobacco and tobacco products. So SAD is applicable only for petroleum products. Computation of customs duty already we discussed. Now look into one last area in this chapter, that is whenever you are importing articles, a set of articles. Set of articles means what? That is, I am importing in a package more than one product. So in that package there is more than one product. Now how to determine the rate of duty? So we will take the essential character, that drawing instruments example, but that is not applicable here. We are not talking about one product imported. We are importing multiple products as a package. The geometry box example is we are importing one product that contains multiple articles. One product that contains multiple components. Okay, but here we are not importing a product with multiple components. We are importing multiple products as a package. Like composite supply, mixed supply in GST, we need to apply this. What we need to see? First, you are importing as a set of articles. Example, you remember camera, DSLR camera, you are importing that. Tripod you are importing as a package, and you are also importing one extra lens as a part of package. Then one SD card also you are importing as a part of package. That's what in Amazon, when you try to buy something, when you scroll down, so frequently purchased together, like that it will come, na? So it will only tempt you to buy other things also. Like that, when you buy the camera, you are also buying all these three things and you are importing it like a package. Now, whether these articles are chargeable to duty at same rate or different rate, you need to check. So we are paying customs duty on ad valorem basis. Ad valorem basis means what? When customs duty is payable as a percentage of value, that is ad valorem. Somewhere you write down there, ad valorem means customs duty payable as a percentage of value. Then it is known as ad valorem. What is the opposite of this? What is the opposite of ad valorem? Specific duty. Specific duty. Specific duty means customs duty payable based on units of measurement. Based on units of measurement. So example for this ad valorem is like value will be 10 lakhs, on that customs duty will be 10%, that will be 1 lakh. This is known as ad valorem method. Okay. Whereas in specific duty method, what will happen is that we will not see the value. So that is on cigarettes 0.85 per centimeter is payable. Okay. So 0.85 per centimeter we need to pay. Means if you are importing a cigarette with 20 centimeters, so 20 centimeters will not be there, but for example I am telling, so 20 centimeters means 20 centimeters into 0.85, we need to pay the customs duty irrespective of its value. Okay. Irrespective of its value, when we pay customs duty based on the units of measurement, that is known as specific duty method. So here the confusion will come only in case of ad valorem method. Correct or not? Because if it is specific duty method, there is no confusion. That article, whatever rate of duty, that we will take. But if it is ad valorem, which is multiplied on the value, but there also if the rate is same, there is no confusion. All the camera, DSLR camera, lens, tripod, everything same rate means we will not have confusion. So we will just take the rate and we will apply, correct or not? But when there will be confusion, if it is liable to duty at different rates, for example, camera at 12% and lens at 10%, tripod at 5%, like that different rates are there. Which rate should be taken? Whether the price is single or separate, price is separate. Then also no confusion, correct? You will take the respective rate for the respective value. Separate values can be ascertained. Camera 30,000, so 30,000 into 10%, and lens 12,000, 12,000 into 12%, like that. Respective values for respective rate, chargeable to custom duty accordingly based on the separate values. What if there is a single price? Okay, again see whether these are all compulsory accessories supplied along with the main article. If yes, you treat it like composite supply, means principal supply rate you will apply on the entire goods, which means camera is the principal supply, correct? So camera rate will be applicable on entire price. So entire consignment chargeable to duty at the rate applicable to main article. What is the main article in our example? Camera. That rate only we will take for all the goods. If it is, come on, if it is compulsory accessory, if it is a compulsory accessory supplied along with the main article for a single price. What if it is not a compulsory accessory? Means you are trying to bundle it, but it is not like naturally bundled, you understood? So it is not a compulsory accessory, you are trying to add it, then in that case you will treat it like a mixed supply. Highest rate you will take. What is the highest rate out of this? You will take that. So entire consignment chargeable to duty at the highest rate of such goods, okay? So this is about section 19. Articles liable to different rates. Yes, okay. Then, so we completed 12 levy and 15 relevant date for determination of rate of duty, 16 relevant date for rate of duty in case of export, 14 is transaction value. So whenever you come across valuation, you need to write section 14. Valuation chapter will be section 14. So 12, 14, 15, 16. Okay. And next 19 we discuss. That is this articles liable to different rates of customs duties. Okay. So we'll take a break and then we will continue after break with warehousing provisions, baggage provisions. Little interesting area we will see just to kill our sleep. And then we will complete the remaining aspects, procedures and other things, okay? Fine. And at what time we will meet? 2:15, 45 minutes. Enough, na? We'll meet at 2:15. Okay, welcome back. So there are few queries. Let's complete those queries and then move on. Sir, if foreign aircraft is foreign going, but before that it goes to 2 or more destinations in India, then how to consider the stores? If it is going from India to outside India, whether or not it is touching any intermediate port or airport, it is still a foreign going vessel or aircraft. That is the definition. So definition says if it is starting from India going to outside India, in between it may go to any airport, that is irrelevant. Still it will be considered as a foreign going vessel or aircraft only. For safeguard duty, etc., should it be computed on assessable value, basic customs duty, social welfare surcharge plus CVD? No. Plus CVD we will not take. Landed value will be always assessable value, basic customs duty and social welfare surcharge, no doubt. That's it. Book is amended for November 24. That's what I said. Whatever May 24 book, the same thing can be used. You don't have to buy the new book. The same will be applicable for November 24 as well. If the aircraft uses the same fuel for domestic flight, customs duty will be payable. To avoid paying customs duty, aircraft will remove the foreign ATF and use the same domestic ATF. Correct. So for example, if a flight is coming from outside India to India, there is some 20 liters of fuel that is left over. Now on the 20 liters of fuel, they have to pay customs duty. But that aircraft, they are using it for domestic. So what they will do, the 20 liters, they will remove it from the aircraft and they will keep it in the warehouse. And already they would have imported some aviation turbine fuel. Now regularly some import would be there. That one will be used in this flight for domestic transportation. That's why every flight, when it completes the international journey, so for some time the flight will be staying in the airport, and thereafter at least like 1 hour, 1.5 hours, then only that flight will be used for domestic transportation. Then in that 1.5 hours, what will happen? Whatever the fuel that is left over in that flight will be removed and deposited in the warehouse, so that they don't have to pay customs duty on the fuel left over in the tank. Okay, so that is correct. Sir, whether the identical goods and similar goods should be for the same time period? Yes. They did not specify for the same time period, like same day like that. They did not specify, means at or about the same time. At or about the same time means any nearest time can be taken. Maybe last 1 week or last 1 month, that can also be taken. Why exporter computes assessable value for customs duty? So could you please brief on the incentives? So that incentives we will come across in foreign trade policy. So there we will see that. Would the exporter be liable to pay customs duty and claim ITC similar to GST? Exporter will be liable to pay customs duty only on certain goods, and ITC concept will not be applicable there because he is paying the customs duty. He is not like an importer who pay the customs duty on import. Here it is exporter. Okay, so therefore there is no ITC concept over there. Design and development license fee are treated as intangibles and should be included in the value. Correct. These are to be included in the value. Will engineering and design charges paid in India as a condition of sale be included in assessable value? Actually related to that, there is one exam question, recent exam question only. So we have, so which says that design and development charges or engineering charges, etc., undertaken elsewhere than in India only should be included. But whenever these design charges are not incurred by the importer but incurred by the exporter as a condition of sale of goods, then it should be included in the value. So if I show you exactly what is that, you will understand. So see this, I am taking the May 24 exam suggested answer to explain that point. So there is a question on valuation which is given in May 24 exam. Yes, this part. Calculate the assessable value rounded off to nearest to 1 rupee under the Customs Act with appropriate working notes from the following particulars related to import of machine by sea by Daksh Industries from USA in the month of October 2023. Cost of the machine at the port of exportation. What is this cost of machine at the port of exportation means? FOB price. FOB price is $8,200. Freight from port of export to port of import, 1,800 directly given. So we are not taking any 20%. And this is air freight or normal freight? Sea freight. So we will not compare it with actual or 20% FOB, whichever is lower. Daksh Industries has paid to seller. Who is Daksh Industries? Importer. Okay, Daksh Industries is the importer, and importer had paid to the seller the cost for packing, not as a condition of sale, but included in the cost of machine at point number 1 above. So packing cost should always be included in the value, and whether it is paid as a condition of sale or not paid as a condition of sale, so packing cost should be included. 3 expenses which are incurred by the importer should be included: packing cost, container cost, and the selling commission paid by importer. These 3 things should always be included, whether it is as a condition of sale or not. And in this case, it is to be included, and it is already included. So should we add it again? No. So that's where in this, if you see, they have taken the FOB price 8,200, and they did not add these charges because it's already included. Okay. Next, another point, if you see, actual selling commission paid by Daksh Industries to local agent of the exporter. Actually, to local agent of exporter, who should pay? Exporter should pay. But who is paying? Importer is paying. So that's an indirect consideration. So take your calculator. 8,200 plus that is 8,200 convert into Indian rupees. What is the exchange rate? 80 rupees. So that is 8,200 into 80 rupees, 6,56,000. 6,56,000 plus 6,56,000 plus local agents commission 20,000, that is 6,76,000, correct? And next one, freight later we will add. Freight later we will add. Insurance also later we will add. Ship demurrage charges is part of freight, correct? So whenever we are adding freight, ship demurrage charges also will add. Actually, the 7th point, engineering charges paid by Daksh Industries. Paid by whom? Daksh Industries to a consultancy firm in Mumbai as a condition of sale. Okay. Whether this 1,25,000 to be included or to be excluded is a confusion. Now, I just wanted to show you. So, customs valuation rules that we have. So, in the study material itself, I will show you. Rule 10, we have certain inclusions. Rule 10 sub rule 1. In that rule 10 sub rule 1, so see this point, point B, hope it is visible to all of you. The value apportioned as appropriate of the following goods or services were supplied directly or indirectly by the buyer free of charge or at reduced cost for use in connection with production and sale of export of imported goods, to the extent such value has not been included in the price actually paid or payable. See the last point, engineering work, development work, art work, design work and plans and sketches undertaken elsewhere than in India and necessary for the production of imported goods. So, but in this question, where the engineering work is carried out? Where the engineering work is carried out? Engineering charges paid by Daksh Industries. So, paid by importer to a consultancy firm in India. So, it is not sent to the exporter. Actually, we are not referring to the correct point. We are referring to point number B. We are referring to point number B. Please listen to the point number B, what it says. The value apportioned as appropriate of the following goods or services were supplied directly or indirectly by buyer free of charge or at reduced cost for use in connection with the production and sale of export of imported goods. Is the buyer in India giving this work to the exporter for use in production? No, this is not that. Because if you observe here, engineering charges paid by Daksh Industries to a consultancy firm in India as a condition of sale. So, many students are referring to this and they are telling that it should be included in the value. But actually speaking, it will come in point number E. So, read point number E. All other payments actually made or to be made as a condition of sale of imported goods by the buyer to seller, or by the buyer to a third party. Here it is buyer to a third party, correct? Where is it given that the third party should be outside India? It's not given. Buyer to a third party to satisfy an obligation of the seller to the extent such payments were not included in the price actually paid or payable. So whenever it comes as a condition of sale, we need to refer to point number E. So this point is actually point number E, which means it should be included in the value or not? Yes, it should be included in the value. But I say study material, so and the suggested answer is contradiction. So suggested answer says this 1,25,000 should not be included. They have not included this 1,25,000 in the answer. So see this, they have not included 1,25,000. 6,56,000 plus 20,000, 6,76,000. They have not included, and they are telling engineering charges are not included in assessable value as engineering work is undertaken in India. You understood which point they are referring to? I don't know who drafted this suggested answer. Might be, you know, something they would have drunk and they would have drafted this. No, really. Now they played with the life of the student. I posted this in my YouTube also. Mistake in suggested answer. Okay. Now because of this point, 1 or 2 marks would have been lost. Okay. So already people are finding it difficult to clear. In that, if suggested answer they are preparing like this, I don't know what to do. I show you the proof also. So why it should be included? Again, I am showing you the proof. All other payments actually made or to be made as a condition of sale, correct? Of imported goods by the buyer to seller. In this case, buyer is not paying. Buyer is paying it to whom? Third party. That is also there. Or by buyer to a third party to satisfy an obligation of the seller, to the extent such payments are not included. So it should be actually included, but they are telling it should not be included. That is the differential point. Then because of that, the answer will be different, and freight will be normal, insurance will be normal, ship demurrages, charges and all we will take. So we will get the assessable value. This also okay, agreeable. So 1 point they have missed. So because there is a conflict, whether it will come in B point or E point, because of which they have missed, it's okay. Not necessary that people who are preparing the suggested answer need to be knowledgeable. Okay. But you know, RTP one question I will show you. So these people and all will not have good death. I am telling you now, will not have good death. Definitely they will suffer all the type of diseases like AIDS, something, etc. Whatever is there, everything they will get. You know, because they are playing with the life of the student. What should I do? And the students are thinking that, you know, I am teaching wrongly to them. Okay. Thank God, not at any faculty. Other faculty who is taking indirect tax has posted video on me that Tarun sir, so teach properly like that and all. Okay. So I have only this subject, no other. Okay. So I am teaching properly only. Maybe for you it is one of the subject. For me it is the only subject. Okay. So no other go. See this question which is given in RTP. See this. Paramjit Limited imported a machine. This is RTP November 24 question. Paramjit Limited imported a machine from Oliver Equipments UK. The FOB price of the machine was settled at 6,000 UK pound. The machine was shipped on 1/10/2023. Meanwhile, Paramjit Limited renegotiated the price of the machine with Oliver Equipments, which agrees on a reduced price of 5,000 UK pound on 10/10/2023. The machine arrived in India on 18/10/2023. As on 18/10/2023, what is the price prevailing? 5,000. So 5,000 should be taken as the FOB price. Other details pertaining to machine are as under: license fee that the buyer was required to pay in UK as a condition of sale was 500 UK pounds. Should we add this or not? It is also payable to the exporter, so that we need to take. So therefore 5,000 plus 500. Buying commission paid in India 20,000. Will it come or not? Buying commission will not be included. Due to deep drought at the port, machine was not taken to the jetty in the port, but was unloaded at the outer anchorage. So jetty means, so it is a place which is far away from the port. So they will construct one structure. Deep into the port they will construct one structure. So there it will be anchored. From there through boats only it will be coming. The charges incurred for such unloading and transport of the machine from the outer anchorage. So I told you, sometimes the ship cannot come. Outer anchorage to the jetty in barge. This is only called as barge charges. So small boats were 50,000. This 50,000 will come in the freight or not? Yes. Date of presentation of bill of entry was 1510 and rate of exchange notified by CBIC on this date was 100 rupees per pound. Rate of basic customs duty was 10%. Date of entry inwards 1810, which should be taken as the relevant date for rate of duty. Rate of duty, 1510 or 1810, whichever is later, that is 1810 should be taken. As on 1810, what is the rate? 15%. But for exchange rate, we need to take bill of entry date. What is the bill of entry date? Exchange rate 100. So rate of duty will be 15% and exchange rate will be 100 rupees per pound. Insurance premium details were not ascertainable. Compute the assessable value and basic customs duty payable rounded off to nearest to 1 rupee by Paramjit Limited. Can we do this? Please. First you take FOB price 5,000 pounds. FOB 5,000 pounds. Convert into Indian rupees. You need some additional sheets. It's okay. If you want, you can go to ground floor. You ask the admin, they will give. Okay. So 5,000 into, what is the exchange rate? 100. 5,000 into 100, 5 lakhs. 5 lakhs you take as the assessable value, that is FOB price. FOB price 5 lakhs. License fee 500 into 100, that is 50,000 license fee. Buying commission will not come. Correct? Now if you add these two, you will get the FOB price as per customs. What is the FOB as per customs? 5,50,000. Add freight. Add freight. How much is the freight? How much is the freight? Given in the question or not given in the question? So 20% of FOB. What is FOB? 5,50,000 into 20%. How much? 1,10,000. 1,10,000. When you take 1,10,000, that itself includes this 50,000 also. Correct or not? When you take 20%, that is for overall freight. Don't add this 50,000 again. You understood? Per freight is from the factory of the exporter till the place of import. That includes all the charges. When you take 20%, it is equal to all the cost. So 20% you are taking. How much is the 20%? 1,10,000. Insurance. How much will be the insurance? 1.125% of FOB. What is FOB? 5,50,000 into 1.125%. That is 6,187.5. So how much it will come to? CIF price. Come on, do the computation. 6 lakh. So rounded off to 188. So CIF value or assessable value will be 6,06,188. Okay. So you did 5,50,000 FOB, correct? Plus freight, how much you have taken? 1,10,000. That is 6,60,000. 6,60,000 plus 6,187.5. 6,66,187.5. But they got 6,06,187.5. Why? So they are telling as freight not given in the question, freight not there. You understood? So they are taking only 50,000. I don't know what should I do, pa. Now 50,000 should be taken, correct? But where is freight in the question? Not there. When freight is not there, we need to take 20% of FOB, na? Correct or not? So I did not tell that. Rules only says. So if you see valuation, study material, same study material I will show. Book will teach how to make rice. Question paper, how to make chicken biryani. I don't know. So here if you see rule 10, sub rule 2. Where it went? Say this. Rule 10 sub rule 2. Can you read this proviso where the cost referred to in clause A is not ascertainable? Okay. Actually clause A is what? Cost of transport, loading, unloading and handling charges. Where the cost referred to in clause A is not ascertainable, such cost shall be 20% of FOB value of goods. That's what we have taken. What is the cost referred to in clause A? Cost of transport, loading, unloading, handling charges associated with delivery of the imported goods to the place of importation. And look into the explanation. The cost of transport of the imported goods referred in clause A includes ship demurrage charges, light rate charges and bar charges, correct? When you take 20%, the 20% is inclusive of light rate charges, bar charges and ship demurrage charges. So no need to add that separately. Is it clear? So that's why we have taken. So whatever answer that we did is correct only as per law. But what they have done is, up to them only. It's not correct. So there is a mistake in RTP as well. RTP November 24, there is a mistake because freight they have taken only 50,000, but when freight is not ascertainable, we need to take 20% of FOB. That point they have missed. Okay. Maybe recently qualified CA students, they would have asked them to prepare a question paper or RTP. So because of that only it happened like that. They should spend money. They are collecting donations every 6 months in the form of exam fees. So they should spend money. If they spend money, good people will come and set the RTP questions, etc. and all. So fine, coming back to this, some more questions. In rule 5, computed value, why aren't freight charges from factory of exporter to port not considered? So in rule 5, we will not consider all those things. That's what difference we are already making. We are taking the price prevailing at the importer's port and we make the adjustment with respect to this. Then basic customs duty, social welfare surcharge, IGST applicable to imports by 100% EOU or SEZ? No. So import by 100% EOU or SEZ is exempt from payment of customs duty. That's the reason why they are not even required to pay safeguard duty, anti-dumping duty and anti-subsidy duty also. Fine? Yes. Then, now we will move on to the next area, that is baggage. So look into baggage provisions. Baggage refers to passengers' luggage. So any goods which are imported into India, we need to pay customs duty. Even if it is imported in the form of baggage also, we need to pay customs duty. So look into page number 216, baggage provisions. And we don't have any section, etc. and all here, but you need to just remember the rules. So what are the duty-free allowances? These duty-free allowances is given in rule 3 and rule 4 of baggage rules 1998. So any article which is brought into India in the form of a baggage, if it is dutiable article, we need to pay customs duty. Okay, if it is dutiable article, we need to pay customs duty. We need to pay full customs duty on the dutiable article. No, we have certain allowances. After these allowances, on the remaining amount, we need to pay baggage duty. But what are the exempted articles? We have only two exempted articles. Number one, used personal effects is exempted. What is exempted here in baggage? Used personal effects. Used personal effects meaning what? You can see used personal effects and travel souvenirs irrespective of value is freely allowed, which means it is exempted. Used personal effects means things required for satisfying daily necessities but does not include jewelry. Jewelry will not come under used personal effects, and it should be required for satisfying the necessities. Then second, laptop will not come under used personal effects. Why laptop will not come under used personal effects? Because laptop is not coming under necessity. So then what will come under used personal effects? Dress and footwear or wallet, perfume, watch. This will come under used personal effects. That's the reason why people who are coming from abroad, they will remove the tag, they will remove the stickers, etc. and all they will bring. So they consider it under used personal effects. So they will not be required to pay baggage duty. And necessities only will come. So as laptop is not a necessity, it will not come under used personal effect. That's the reason why for laptop there is a separate exemption that is given. A person more than 18 years of age can bring one laptop, so which is allowed as duty free. So person more than 18 years of age, they can bring a laptop. One laptop is only allowed. Say this. Passenger of 18 years and above coming from anywhere, one laptop computer or notebook computer, anything, only one will be allowed. These are the two exemptions that we have. So can you tell me what is the first exemption? Used personal effects. Second exemption, laptop. Laptop for whom? 18 years and above, greater than or equals to 18 years. And travel souvenirs also exempted along with used personal effects. What is travel souvenirs? When you visit a particular country, as a memory of visit of that country, you will be purchasing something. So as a memory, this fridge magnet is also a travel souvenir, or something of the importance in that country will be coming under travel souvenir that you can bring. You don't have to pay any customs duty on that. Then we have allowances. In that allowances, the first allowance is general free allowances. General free allowance, easily remember. So first general free allowance divide into two. The passenger is coming from Nepal, Bhutan, Myanmar. And if they are coming by land route, there is no general free allowance. So general free allowance for a passenger coming from which place here? Nepal, Bhutan, Myanmar. If they are coming by land route, it will be nil. Suppose if it is coming by any other cases, then it will be 15,000 general free allowance. If the passenger is coming from other countries, then if the passenger is a tourist of foreign origin, then it will be 15,000. All other cases it will be 50,000. Can you remember these 4 points? JFA divide into 2, passenger coming from Nepal, Bhutan, Myanmar, again divide into 2, land route, other cases. Land route will be nil. Other cases will be up to 15,000. Whereas coming from other than Nepal, Bhutan, Myanmar, again divide into 2. What is that? Tourist of foreign origin. Then it will be up to 15,000. All others it will be up to 50,000. And for infant passenger, general free allowance is not applicable. For infant passenger, only used personal effects. There is no general free allowance. Who is an infant passenger? Child not more than 2 years of age. Up to 2 years, what general free allowance we can give to them? So there is no general free allowance. And apart from general free allowance, we have jewelry allowance. So jewelry allowance is like for male passenger 20 grams with a value cap of 50,000, female passenger 40 grams with a value cap of 1 lakh. What is the meaning of that? Value cap, that is weight and value cap. For example, there is a female passenger. So Mrs. A bringing 48 grams of jewelry, 48 grams of jewelry with a value of 1,25,000. Okay. What is dutiable value? Tell me what is dutiable value after allowance. How to calculate? Simple. First, we need to take total value. What is the total value? 1,25,000 minus allowance. How much will be the allowance? A will be towards the weight. How much weight is allowed? 40 grams. So 1,25,000 divided by 48 grams into 40 grams is allowed. How much is that? 1,25,000 divided by 48 into 40. How much? 1,04,167. Or B, value. Value wise how much? 1 lakh. Whichever is lower. Whichever is lower. So therefore, how much is the allowance? 1 lakh. So what is the dutiable value? Dutiable value will be 25,000. Hope you understood how to calculate. And on that the baggage duty will be payable. And what is the baggage duty? 38.5% baggage duty. So 25,000 into 38.5%, that is 9,625 is the baggage duty payable. Okay. So first you need to take the value and the allowance. Allowance will be total value divided by total weight into what is the permitted weight. What is the permitted weight for male passenger? 20 grams. What is the permitted weight for the female passenger? 40 grams. So that much value, or value wise 1 lakh, whichever is lower is only allowed. So remaining will be the dutiable value on which they need to pay baggage duty. Is that clear? Suppose if it is male passenger, what we will do? Allowance will be total value divided by total weight into 20 grams, and B point will be 50,000. Whichever is lower is only allowed, and remaining will be the dutiable value on which they need to pay baggage duty. Now my question is, on this 25,000, can she claim general free allowance? There is a general free allowance. How much is the general free allowance? 15,000, 50,000, like that it is there, na? Can she claim general free allowance? Yes. Jewelry allowance also can be claimed, and after jewelry allowance for the remaining amount, general free allowance also can be claimed. But general free allowance is not possible in case of certain articles. What are those articles for which general free allowance is not possible? Please see there. Total 6 articles for which general free allowance is not possible, called as Annexure 1 articles. Number 1, firearms. Number 2, cartridges of firearms exceeding 50, means up to 50 can we claim allowance? Yes. Then cigarettes exceeding 100, means up to 100 can we claim the allowance? Yes. Cigars exceeding 25 and tobacco exceeding 125 grams. So tell me what are the first 3? Firearms, cartridges of firearms exceeding 50, cigarettes exceeding 100, cigars exceeding 25, tobacco exceeding 125 grams. Next 3, alcoholic liquor in excess of 2 liters, means up to 2 liters can we claim general free allowance? Yes. And gold or silver in any form other than ornaments. So other than ornaments means for ornaments can we claim general free allowance? Yes. What is gold or silver in any form other than ornaments? Means gold bars, gold biscuits or gold coins, etc. We cannot claim general free allowance. But for ornaments we can definitely claim. Jewelry we can claim. Then LCD, LED and plasma TV also we cannot claim general free allowance. So comparing this, so now in this case for this 25,000, can Mrs. A claim general free allowance? Yes, possible. If she is coming from other than Nepal, Bhutan, Myanmar, entire 25,000 she can claim. Suppose if she is coming from Nepal, Bhutan, Myanmar, other than land route, only 15,000 can be claimed and remaining 10,000 will be dutiable. Are you understanding this? So first we saw 2 exemptions. The 2 exemption is used personal effects, travel souvenirs, and second exemption is laptop 18 and above. And then we saw general free allowance. Then we saw jewelry allowance. And the next allowance and jewelry general free allowance is not applicable in case of Annexure 1 articles. Then one more point you have, see that the free allowance of one passenger cannot be pooled with the free allowance of another passenger. What does it mean? Say Mr. A and Mrs. A, they are going abroad, each carrying one laptop, and they purchase one gaming laptop for their son, and that laptop is 90,000 rupees, and they are not bringing any other articles. Both are eligible for 50,000 general free allowance. If you accumulate 50 plus 50, 1 lakh, and the laptop is only 90,000 rupees. So can they claim the allowance? No, because allowance of one passenger cannot be clubbed with the allowance of another passenger, which means one article will be dutiable in one baggage only. So therefore out of A and B, any one can keep that in their bag. So 50,000 will be allowed and remaining 40,000 they need to pay baggage duty. Understood or not? So pooling is not possible. And what is the rate of duty on baggage? Come on, respond. 38.5%. However, for 3 articles, the rate of duty will be 110%. What are the 3 articles? In general free allowance, not applicable Annexure 1 we saw na. In that first 3 articles are there na. Firearms, cartridges of firearms exceeding 50, cigarettes exceeding 100, cigars exceeding 25, tobacco exceeding 125. For this, the rate will be 110%. For annexure 1 items 1, 2 and 3 beyond the limits, customs duty rate is 110%. And next, what are the entitlements to a passenger who is transferring their residence? So, transferring residence means they are in abroad, and please look into jewelry allowance. For jewelry allowance, is there any condition? For jewelry allowance, is there any condition? Yes, there is a condition for jewelry allowance. What is that? Indian passenger who has been residing abroad for more than 1 year. And like that, for transfer of residence also under Rule 6, we have limits. What is that limit? So, a person has went abroad and stayed in abroad for 3 to 6 months. 3 to 6 months. So, 6 for 60,000. You understood? And 6 months to 1 year. 1 for 1 lakh. Got it? Easily remember, yeah? 3 to 6. Last number 6 are 60,000. Then 6 months to 1 year. Last number 1, 1 lakh. Minimum 1 year in the preceding 2 years, 2 lakhs. And beyond 2 years, it will be 5 lakhs. So tell me the limits, 3 months to 6 months. Up to 3 months, no allowance. No allowance under transfer of residence, this rule. But the general free allowance, applicable. Okay. And then 6 months to 1 year, 1 lakh. 1 year, minimum 1 year in the preceding 2 years, 2 lakhs. And 2 years or above 2 years, then it will be 5 lakhs. What are the ineligible articles? All annexure 1 articles is ineligible in this case. Even annexure 2 articles also ineligible. That is color TV, video home theater system, dishwasher, refrigerator above 300 liters. Up to 300 liters can we bring? Yes. Up to 300 liters means single door. And beyond 300 liters means double door. Okay. Deep freezer, video camera, cinematograph film of 35 mm and above, gold or silver in any form other than ornaments, which is already there in annexure 1. Now, I will give you an example. Tell me whether they can claim this allowance under transfer of residence. There is a person who went abroad. He is working in a software company. He went abroad for a training for 6 months. And when he went abroad for training, he did not carry anything with him, just the rice he has carried, because outside India, in US and all, rice is not available. So he need to cook the rice and he need to eat. So he took the rice. And there he purchased one rice cooker, one kettle and one iron box and one sandwich maker, because he need to make the food, and laundry and all costly, so he only should press. So he purchased these 4 items. What are the 4 items he purchased? Rice cooker, kettle, iron box, sandwich maker. And at the time when he is returning, he is bringing these articles. Now, on these articles, can he claim general free allowance? No. General free allowance is for his necessities, not household articles. These are all household articles. On that general free allowance, not possible. I told you, general free allowance is only on the garments or watches, perfumes, etc. for his purpose, not for his household articles. But for his household articles, we can claim allowance under transfer of residence. Now come to Rule 6. In this Rule 6, can he claim any allowance? Yes or no? How many months he is staying? Means 60,000. Definitely 4 items will not be more than 60,000. And whether these 4 items are mentioned in annexure 1 and 2? Check. Is it mentioned in annexure 2 anywhere? No. It's not mentioned. Which means, can he claim the allowance? Yes. So his used personal effects, anyhow he can claim. And normal dutiable articles, general free allowance is there. For household articles, he will be able to claim under this point. Okay. And next, all other points you see, all the above provisions are equally applicable to unaccompanied baggage. What is unaccompanied baggage? Back coming before his arrival or after his arrival. But what is the time limit? Remember, A for after, B for before. A for after, B for before. Alphabet A will be first number. Alphabet B will be second. So tell me, what is the time limit by which the unaccompanied baggage should come? 1 month after arrival and 2 months before arrival. Then it is called as unaccompanied baggage. Is it clear? All the above provisions are equally applicable to unaccompanied baggage. Baggage that arrives 1 month after passenger's arrival, 2 months before passenger arrival. So A, B, 1, 2. You remember this. Then For member of crew, whether baggage provisions is applicable during the time when they are in service. During the time when they are in service means contract. So they cannot bring 50,000 rupees worth of articles and all. They can bring only petty gifts up to 1,500 rupees. But once they complete their contract and finally they will be coming now, at that time the regular provisions are applicable. Passenger carrying non-dutiable and non-prohibited articles will walk through green channel, and if they are carrying any dutiable or prohibited goods, they should walk through the red channel. And every passenger who is getting down has to make a true and full declaration of what are the goods that they are bringing, and that is called as baggage declaration. Passenger has to make true and full declaration regarding contents of the baggage. Suppose if he is not required to pay baggage duty, is there any relief available to him? Yes. So temporarily those dutiable articles can be detained in the customs area, and again when this person is returning, he can carry those goods, so he is not required to pay baggage duty on those goods. That is called as temporary detention of baggage, where the baggage of the passenger contains any article which is dutiable or the import of which is prohibited, and in respect of which a true declaration has been made. Proper officer may, at the request of the passenger, detain such goods for the purpose of being returned to him. When it will be returned to him? Whenever he is leaving India. Suppose if he is not able to collect, he can authorize any other passenger also to collect and go. If that is also not possible, he can request the officer to courier that bag in his name. So through any other passenger or as cargo consigned in his name. But remember, this temporary detention of baggage is possible only when he makes the true declaration. Suppose he is bringing some cocaine powder and he is walking through the green channel. Officer stopped him and he is telling, okay, temporary detention of baggage, at the time when I am going, I will take and go. Not applicable, because he did not make any true declaration. So therefore, temporary detention of baggage point will not be applicable to him. Is it clear? So what are the customs duty rate on baggage? Okay, so you should tell me, don't see your book. You tell me for firearms, what is the GFA, available or not available? Not available. Rate 110%. Cartridges of firearms, up to 50 GFA available? Up to 50 GFA available? Yes. Rate 38.5%. Beyond 50 GFA available or not available? Not available. And what is the rate? 110%. Very good. Cigarettes up to 100 GFA available. Rate 38.5. Beyond 100 GFA not available, rate will be 110%. Cigars up to 25 GFA available? Yes. Rate 38.5%. Beyond 25 GFA not available, 110%. Tobacco up to 125 grams GFA available and 38.5%. So wherever GFA available, the rate is always 38.5%. Sir, when GFA available, why 38.5% we need to pay? That is what? Beyond 50,000, for example, 60,000 worth of articles means 50,000 we will claim general insurance, remaining 10,000 we need to pay 38.5%. That is the meaning of that. So tobacco beyond 125 grams, GFA not available and the rate will be 110%. Then alcoholic liquor up to 2 liters, GFA available, rate beyond 2 liters, GFA rate 38.5% only. The rate is not 110%, 38.5%. Then gold or silver. So other than ornaments. So if it is ornaments, GFA available, rate 38.5%. Other than ornaments, GFA not available, still the rate is 38.5%. LED, LCD, plasma TV, GFA not available, rate will be clear here. So this is about baggage that you need to remember, and let's see one question related to this. See this question number 27. Gregory Pegg of foreign origin has come on travel visa to tour in India. he carries with him as a part of baggage the following: travel souvenir 85,000. What is your answer? Exempted. Exempted. Travel souvenir is exempted. Other articles carried on in person, dutiable. How much? 1,50,000. Dutiable. Thereafter we will get the allowance. Okay, but dutiable. Okay. Then 120 sticks. But for this 1,50,000, can they claim general free allowance? Yes, no issue. 120 sticks of cigarettes of rupees 100 each, 12,000. We need to divide into 2. 100 will be eligible for GFA, 38.5%. Remaining 20 not eligible for GFA, 110%. So firearm with 100 cartridges, value includes the value of cartridges at 500 rupees per cartridge. So 100 into 500 is how much? 50,000. 100 into 500, 50,000, but the value given is 1 lakh. So in that 1 lakh, if 50,000 is cartridges, what is remaining 50,000? Firearm. So firearm 50,000, cartridges 100, but in that 50 eligible for GFA, remaining 50 not eligible for GFA. Determine customs duty payable if the effective rate of customs duty is 38.5% inclusive of social welfare surcharge with short explanations where required. Ignore agriculture infrastructure development cess. Whether we need to pay any IGST? No. Just the 38.5% only. On the top of that, we don't have to pay any IGST. Now tell me, by reading this question, what is the general free allowance that is applicable in this case? What is the general free allowance? 50 or 15? He is coming from Nepal, Bhutan, Myanmar or other? Other. But he is a tourist of foreign origin. As he is a tourist of foreign origin, the applicable amount of general free allowance will be up to 15,000. So now, how to present this in exam? First, we need to prepare a table, particulars, then eligible for GFA, eligible for general free allowance, not eligible for general free allowance, not eligible for general free allowance. In this eligible for general free allowance, what is the rate? Always 38.5%. Not eligible for general free allowance divided into 2. Rate will be 38.5%, some articles are there, and 110% also some articles are there. Okay. Now, what is the first article that we have? Travel souvenirs. Travel souvenirs is exempted. So, we don't have to bother about this. And other articles 1,50,000, but it is eligible for GFA. You put it under eligible for GFA. And next, what we have is cigarettes. Cigarettes 12,120 sticks. So cigarettes, 100 sticks will come here. 100 sticks into, what is the price? 100, that will be 10,000 eligible for GFA, correct? And remaining 20 sticks, where it will come? 110 or 38.5? 110. So 20 into 100, that equals to 2,000. Understood, pa? Next, what is the next one? Firearm. Already we know the firearm value will be 50,000. Where it will come? Not eligible for GFA, 110%. Cartridges of firearm. Cartridges of firearm, 50 cartridges into, so 500, that will be 25,000 eligible for GFA. Remaining 50 cartridges not eligible for GFA, 25,000. Now, anything that is left in this question? That's it. So now we need to do the total of these 3 columns. First case, 1,50,000 plus 10 plus 25,000, that is 1,85,000. Here 0, whereas here 50, 25, 75 plus 2, 77,000 minus general free allowance. What is the general free allowance? Only 15,000. But here we don't have any general free allowance. And is there any other allowance possible? Jewelry allowance is possible. Jewelry allowance is possible in this case? No. Jewelry allowance is only for the Indian passenger. And whether transfer of residence is applicable in this case? No. Because that is also for the Indian passenger. So both are not applicable. So therefore this is the allowance that we have. So what is the dutiable value? Come on here, 1,70,000 and here it will be 77,000. And what is the baggage duty? What is the baggage duty? 38.5%. 1,70,000 into 38.5%, 65,450, and 77,000 into 110%, that is 84,700. You understood? Don't total it, just show this separately. So don't total it in exam, show separately. Baggage duty at 38.5% is 65,450, at 110% is 84,700, because if you see the question, specifically they asked, so what is the customs duty payable if the effective rate of customs duty is 38.5%. So means they are asking only that 38.5% component, that is 65,450. So because if you see the answer for this 27th question, they would have given 65,450. You understood? That 110% they did not give, but they gave it as a note. What we will do, we will total this and we will write, because of which unnecessarily we will lose the marks. For doing perfectly also sometimes they will reduce the marks. Okay. So that's why better not to do that, because the question is asking only about 38.5% rate. So that only we will do. Is it clear? Then another question we will see, one more question on baggage. Look into question number 31. Mrs. X, an Indian resident, 36-year-old, who was on a visit to China, returned after 6 months. She was carrying with her the following items. Personal effects 75,000. What is your answer? Exempted. Laptop, computer 60,000. Exempted. Why? 18 years and above. So exempted. Jewelry 25 grams purchased in China 75,000. What about that? Whether she will get jewelry allowance? No, because her stay in abroad is not more than 1 year. So she will not get the jewelry allowance. So general free allowance she will get? Yes. How much general free allowance she will get? 50,000. So that 75,000 will be dutiable, correct? Then music system 50,000, that is also dutiable. But music system, what if it is used? What if it is used? If it is used, it should have come in the personal effects. But if it is not given in personal effects, means it's a new article. Is it clear? Sometimes they will give mobile phone. Personal effects. Mobile phone is personal effect only. But separately if they have given, what does it mean? It's a new mobile phone that is brought. So that will become dutiable article. So therefore 1,25,000 minus, what is the allowance? 50,000. So 1,25,000 minus 55,000, 75,000 will be taken as the dutiable value in this case. Okay. Clear? 75,000 into 38.5%, 28,875. Comfortable here? Baggage questions. Mostly for 4 marks and all, they will not complicate much. They will give it easy only. But if you know these provisions, that will be sufficient. Okay. Because of late, every attempt, they are asking one 4 marks question on baggage. Every attempt they are asking. So therefore, somewhere in question number 2 to question number 6, somewhere you will find one 4 marks question on baggage. Mostly it will be like this simple question only. But little bit if they want to complicate, they will make a question like this. They will bring in firearms, cartridges of firearms, etc. and all, and they will make the question little complicated. What will come in this second column actually? Not eligible for GFA, but rate is 38.5%. Alcohol, liquor in excess of 2 liters, then gold or silver other than ornaments, and LED, LCD will be coming in the second column. Okay. Next, look into warehousing provisions. Segment 30, page 222. So there are few queries. Let's answer that and move on. Do mobile get covered under laptops for baggage provision? No. Mobile, if it is used, it will come under used personal effect. But if the mobile is separately given, means it is a newly imported mobile, that will be dutiable. So laptop is different, mobile is different, correct or not? Correct or not? Yes. So you should not get that doubt. Further, how do people coming from USA manage to bring more than one iPhone for family and friends? Usually 2 phones will be permitted under used personal effects. Used personal effects does not mean it is like, sir, 10 phones, sir, because I am maintaining 10 people, sir. So therefore 10 phones are like that. You cannot tell like that. Okay. So only one hand phone and one business phone, that is only allowed. So people go there and they will buy one iPhone, throw that unboxing video and all they will do there itself. They will throw that box, they will bring only the iPhone. If they bring along with box, then it will become dutiable and they need to pay. Because lot of people, I have seen in Instagram, they posted videos about iPhone 16. So in Dubai the rate is less, you go to Dubai, buy over there, and flight cost and all also if you add, still the cost of iPhone in Dubai is less. Then baggage duty, whose father will pay? Correct. 38.5% we need to pay when you are bringing it. But if you are not bringing it with box, just the phone if you are bringing, no problem. Already you have one phone, one more phone you are bringing, no problem, fine. You can bring that without box. But if box you are bringing and the customs officer catches, we need to pay the baggage duty, 38.5%. Then for people from Nepal, Bhutan and Myanmar, there is no allowance under customs. Am I right? No, there is allowance. What is allowance for Nepal, Bhutan, Myanmar? If they are coming from other than land route. So how much? Other than land route, up to 15,000 they can bring. Then AIDC to be shown at last after cess or with category 1. I told you already, with category 1. So AIDC, agriculture infrastructure developments, is where it will come. It will come in step 1. Okay. Sir, for insurance, 1.125% of FOB, do we need any deduction like we did for freight calculation? No. For insurance, always we will take 1.125% of FOB. Mine is already considered in FOB like that, we don't have. That is only for freight. Only for freight. Okay. Sir, alcoholic liquor 5 liter. Single bottle 5 liter, hypothetical actually it is. No, really 1 liter only, maximum is 1 liter. Okay, 5 liter and all we will not have bottles, hypothetical situation, but fine. So you are bringing 5 bottles of 5,000 rupees, fully taxable or proportionate, fully taxable, but 2 liters we can claim under general fee allowance. 2 liters we can claim under general fee allowance provided that does not exceed 50,000. So beyond 50,000 we have to, and remaining 3 liters always we need to pay baggage duty 38.5%. Is allowance under transfer of residence to India can be claimed along with GFA of 50,000? Yes. GFA 50,000 is independent of the other allowances. You can claim all the 3 allowances. Jewelry allowance also we can claim, transfer of residence also we can claim, and even we can also claim about that general fee allowance also. Okay. So actually in my regular batch I did one question, as you have asked me, for you I will do that question. So you see this. That is, all the allowances can be claimed by one person possible. That is this question, a very good question. You can see, hope it is visible to you. If you have the resource book, you can see in that page 134, volume 3. Mrs. Sharma, a resident of India and carrying out her profession in USA, returned back to India after 1 year, 3 months of stay and brought used personal effects including jewelry 1,10,000, 55 grams, 1,60,000. Personal and household articles including annexure 3 but excluding annexure 1 and 2, 2,25,000. Other articles not falling under annexure 1, 55,000. Determine duty payable by Mrs. Sharma. Now in this case, if you see, first she has jewelry allowance because she is staying abroad for more than 1 year. So she is having jewelry allowance. How much jewelry allowance? 40 grams subject to a value cap of 1 lakh. Then as she is coming from USA, she is eligible for general fee allowance and she is not a tourist of foreign origin. So therefore how much will be the general fee allowance? 50,000 plus as she is going there for profession and she is bringing even household articles also, so she is eligible for transfer of residence. How much will be the value of transfer of residence? Minimum 1 year in the preceding 2 years, therefore 2 lakhs. 2 lakhs worth of articles she can bring, correct? Now, let's segregate it into respective allowances. Used personal effects. How much is the used personal effects alone except jewelry? Except jewelry, 1,60,000 minus 1,10,000. How much? So where 50,000 will come? Exempted, correct? Remaining 1,10,000 will come under jewelry allowance. Dutiable? Yes, but we have jewelry allowance. Can you calculate the jewelry allowance and tell me how much? 1,10,000 divided by 55 grams into 40 grams, that is 80,000. Value wise 1 lakh, whichever is lower. Which is lower? 80,000. So 80,000 is only allowed, remaining will be dutiable. What is the remaining value? 1,10,000 minus 80,000, 30,000. Understood that part? Then personal and household articles including annexure 3 but excluding annexure 1 and 2. Annexure 1 and 2 will not come, but remaining how much? 2 lakhs, because minimum 1 year stay, 2 lakhs. But how much worth of articles she is bringing? 2,25,000. So 2,25,000 minus 2 lakhs. What is the dutiable value? 25. Already 30,000 dutiable, jewelry plus 25,000. Thereafter, other articles not falling under annexure 1 means dutiable articles. How much? 55. Can she claim general free allowance? 50,000? Yes. So 55,000 minus 50,000. What is the dutiable value? 5,000. So 55 plus 5,000, that is 60,000. Any other allowance left? No. Fully exhausted. So on that 60,000, she is required to pay 38.5%. You understood? Clear here? So all the 3 allowances is also possible. Then if you observe in this question, what has happened is that they have given jewelry brought in China, purchased in China, like that one question is given. No, this one. Jewelry 25 grams purchased in China. What if the jewelry is purchased in India? What if in this place it is given purchased in India? What would have happened? Now we need to check one more point in the question, because what happens is that lot of girls in India in the name of marriage will be exported outside India. Correct? Because every father and mother wanted their son-in-law to be settled abroad. What should we do? Then we are all what? Beggars in India. Okay. So because they want only foreign groom, Indian grooms and all beggars here. We are beggars, stupid fellows we are. Okay. So all good looking girls and all will be exported there. And no marriage. Today's situation is that all matrimonial websites is full of boys only. Only gender conversion we need to do, then only marriage will happen for us. Okay. So therefore, these girls when they are going abroad, what will happen is that they will take along with them some jewelry there. And after going there, because no marriage means minimum some 500 grams, 600 grams jewelry is must. And when they go there, so 1 week they will stay hardly. Thereafter definitely they will come, because every girl is dad's little princess. How they will be able to survive? So they are alone. So they will be coming back here. When they are coming back here, definitely they will bring the jewelry. Whatever they have taken from here. Clothes also they will not be bothered. But jewelry definitely, because that is costly. So they will bring that bag full of jewelry. Whether baggage duty payable on the jewelry? Yes. Provided they have not given any declaration at the time of going abroad. So at the time when they are going abroad, they have to submit all this jewelry with the customs, so that the customs will take a record of it. And at the time of returning back to India, if the same jewelry is brought, we don't have to pay baggage duty. Otherwise, we need to pay the baggage duty on the jewelry. So therefore, when the question says purchased in India, you need to check out whether this is declared with the customs at the time when it is taken from India. You understood? If it is declared with the customs at the time when it is taken from India, don't put it as dutiable, you make it like exempted. You got it? Because logic is simple. Those articles which are taken from India to outside India, at the time when we are taking it, if you give the declaration, same articles when you are bringing it, you don't have to pay baggage duty. But sir, lot of times we go abroad, we will not declare about our laptop, our clothes, etc. That is anyhow exempted. Nah? That's why we will not declare. So clothes will be exempted under used personal effects, laptop will be exempted under a separate point. That's the reason why we will not do the declaration. Otherwise, all dutiable articles which are taken from India, because these producers and all who are going abroad for shooting purpose, they carry the equipments, production equipments, cameras, etc. and all. Everything needs to be declared. And when they go abroad for shooting, again when they are bringing the same articles, they are not required to pay baggage duty, provided the declaration is made at the time of export. Okay. Yes. So all these questions completed. Now come back to warehousing. Page 222. Segment 30, warehousing under customs. Already we know some points that imported goods can be kept in the warehouse without payment of customs duty, and all these warehouses are licensed by customs department. What are the types of warehouses that we have? We have three types of warehouses: public warehouse, private warehouse and special warehouse. Public warehouse means goods belonging to any person can be imported and kept in that warehouse, that is public warehouse. Private warehouse means goods belonging to the warehouse keeper can only be imported and kept in that warehouse, that is private warehouse. Whereas special warehouse means there are some notified goods like gold, silver, precious metals, etc. that can be imported and kept only in the special warehouse. So these are the three warehouses: public warehouse, private warehouse and special warehouse. In public warehouse, goods belonging to any person can be deposited, but in private warehouse only goods belonging to the licensee, that is the license holder or the warehouse keeper, those goods only can be deposited. Only notified goods. What are those notified goods? Actually that is not applicable for exam, you don't have to remember what are those notified goods. So but that notified goods can only be deposited in a special warehouse. What is the difference between public private versus special warehouse? Public warehouse, private warehouse will not be under physical control of the customs department, which means there is a record based control. So therefore they will be just asking the warehouse keeper to maintain essential records as to what goods are brought and kept, and whether they are filing the ex-bond bill of entry, and then only the goods are cleared, like that, records based control. But in case of special warehouse, as the notified goods are of precious articles and high value articles, due to that reason it will be under the customs lock and control, which means that there will be a customs officer present in the special warehouse, so which is under customs lock. Suppose if the warehouse license is cancelled, who will be giving license to operate a warehouse? Customs department, that is commissioner. Principal commissioner or commissioner under customs will be giving the license. Sometimes when we breach the conditions of license, then the license will be cancelled. So whenever the warehouse license is cancelled on account of breach of conditions by the license holder, whatever goods that are already deposited in that warehouse should be transferred to another warehouse, or it should be cleared for home consumption. What is the time limit within which it should be cleared? Within 7 days from the date on which cancellation order is served. And at the time when we deposit the goods in the warehouse, are we paying customs duty or we are not paying customs duty? We are not paying customs duty. Due to that reason, we need to execute a bond. And the bond needs to be executed for what value? 3 times the customs duty payable. See this. So warehousing bond is required for deposit, which is of 2 types. So consignment bond and general bond. Consignment bond means every consignment we will deposit and execute a bond, and the bond value will be 3 times the duty payable at the time of deposit. Whereas general bond as specified by the officer. Upon execution of the bond, the officer will pass a warehousing order. Warehousing order is for what? Permitting us to keep the goods in the warehouse. And whenever the warehousing order is passed, what is the time limit within which we can keep the goods in the warehouse? For a maximum period of 1 year. See there, the time limit for warehousing period will be 1 year. 1 year from the date of deposit in warehouse or warehousing order? 1 year from the date of warehousing order. Can this 1 year period be reduced also? Yes. In case of perishable goods, it may be reduced. But in some cases, this 1 year time limit is not applicable. What are those goods for which this 1 year not applicable? EOU, EHTP, STP, and warehouse where manufacturing operations are permitted. So in these warehouses, there is no time limit. So what are the warehouses here? Wherein like time limit is not applicable? EOU. What is the full form of EOU? Export Oriented Unit. EHTP, Electronic Hardware Technology Park. STP, Software Technology Park. Then, warehouse where manufacturing operations are permitted. What are the warehouses where manufacturing operations are permitted? Whether public warehouse is permitted? No. Private warehouse. So, which means for private warehouse, time limit not applicable. Invalid statement. I did not tell that. You don't interpret like that. I did not say. What I said is that private warehouse manufacturing operations are permitted. If in private warehouse manufacturing operations are permitted, then there is no time limit. I did not say private warehouse no time limit. Okay, private warehouse also time limit is there. But if it is a private warehouse where manufacturing operations are permitted, then there is no time limit. Means we can keep the goods even for 5 years, 10 years also. Got it? Next. And interest will be payable. What is the rate at which interest is payable? At the rate of 15% per annum from 91st day after the date of warehousing order till the date of actual clearance. Sir, you said that we can deposit the goods in warehouse for 1 year. Yes. But in that 1 year also, 90 days will be interest-free period, and remaining that time we need to pay the interest. Why should we pay the interest? Because you are deferring the customs duty liability. When you keep the goods in warehouse, you are not paying customs duty now. You are deferring that. Due to that reason, you need to pay interest. What is the rate of interest in case of customs? 15% per annum. What is the rate of interest in case of GST? 18% per annum. Don't forget this. So 15% per annum from 91st day after the date of warehousing order till the date of actual clearance and payment of customs duty. And manufacturing and other operations are permitted in the warehouse. So we can do the manufacturing operations, and duty not payable on such warehoused goods if the processed goods are exported. So listen, we are importing some fabric, and that fabric is kept in a warehouse. From fabric we made the garments. So in the process of making garments out of the fabric, there will be some waste and scrap. What is the treatment of that waste and scrap? If these garments are exported, for example, we have imported 10,000 meters of cloth, 10,000 meters of cloth converted into garment. So garment, how much is converted? Say out of 10,000, 9,800 meters we converted into garment. So what is the remaining 200 meters? Waste. So now the entire garments are exported. The entire garments are exported. So what is the cloth contained in the garment? 9,800 meters. Should we pay customs duty on 9,800 meters of cloth imported? No, we don't have to pay customs duty. What about remaining 200 meters of cloth in the form of waste and scrap? So whether we need to pay customs duty? No, provided that waste and scrap is either destroyed or that waste and scrap is sold in India as if it is imported in that particular form. Please read this paragraph properly. Manufacturing and other operations are permitted in warehouse and duty not payable on such warehoused goods if the processed goods are exported. However, customs duty payable on waste and scrap at the applicable rate to waste and scrap arising out of manufacture if such waste and scrap is not destroyed within the warehouse. Okay, so this I'll just show you one example, you will understand. Say this. So we have imported some steel. So what is the weight of the steel that is imported? 100 kgs. What is the rate of duty applicable for this 100 kgs? 12%. Using this 100 kgs of steel, we have manufactured utensils and exported. What is the steel present in the utensils that is exported? 96 kgs. And what is the remaining 4 kgs? Waste and scrap. And what is the rate of duty applicable for that waste and scrap? 5%. Okay. Now, what they are telling is that this 100 kgs present in 96 kgs, this 96 kgs is exported. So, on this 96 kgs of steel imported present in utensils, are we required to pay customs duty or not required to pay customs duty? Not required to pay customs duty. Is that part clear? Why we are not required to pay customs duty? Because this is exported. So we don't have to. Imported goods exported. Imported goods only when it is cleared for home consumption we need to pay customs duty. Imported goods kept in the warehouse, and from warehouse it is exported. Why we need to pay customs duty? We don't have to pay customs duty. Are you understanding this? Now, what about this 4 kgs? It is in the form of waste and scrap. This waste and scrap you destroyed. Then on import of steel which is present in this 4 kgs, are you required to pay customs duty or not required to pay customs duty? Not required to pay any customs duty. Is it clear? But suppose if you have not destroyed this waste and scrap, then sell in India. This 4 kgs you sell in India. At what rate? Is it at 12% or 5%? 5%. So customs duty payable at the rate applicable to waste and scrap, that is 5%. But what we imported is steel. Rate is 12. But we are not paying 12%. We are paying 5%. Understood the benefit that is available? That point only I have just given here. So read it again. Manufacturing and other operations are permitted in warehouse and duty not payable on such warehoused goods if the processed goods are exported. However, customs duty payable on the waste and scrap at the applicable rate to waste and scrap arising out of manufacture if waste and scrap is not destroyed within the warehouse. Then, in case of volatile goods means what? Goods which are prone to evaporation. So, like for example, I am importing 1000 liters of whiskey in a cask, in a barrel, and at the time of clearance from the warehouse, I deposited in the warehouse. Because I don't want to pay the customs duty now, I deposited in the warehouse. At the time of clearance from the warehouse, in that barrel, only 960 liters are there. What happened to 40 liters? So whether the customs officer or warehouse keeper, they have drunk? No. It got evaporated, natural loss, it will get evaporated. Should I pay customs duty on 1000 liters or 960 liters? 960 liters, that is this volatile goods. In case of volatile goods, customs duty not payable on the quantity lost on account of evaporation or other natural causes. Okay. Look into the next page. This is the overview. So whenever the goods are imported and kept in the custodian's place, I told you all goods imported in the port or airport will be kept under the control of a custodian. What is the period for which the imported goods will be kept under the control of custodian? For a period of 30 days. And from there, we will be clearing the goods to warehouse, for which we need to file one bill of entry. What is that bill of entry known as? Bill of entry for warehousing or into bond bill of entry. And we need to clear it with payment of duty or without payment of duty? Without payment of duty. And we also should require to execute a bond. And to which warehouse we can take? Either we can take it to public warehouse or to private warehouse or to a special warehouse. When public warehouse, so goods belonging to any person, public warehouse. Goods belonging to the license holder, private warehouse, and notified goods belonging to any person, special warehouse. What is the difference between public, private and special warehouse? Public, private warehouse will be under records based control, but special warehouse will be under physical control, and all these warehouses are licensed by principal commissioner or commissioner. Then next page you see, what is the period for which we keep the goods in the warehouse? So in case of EOU, EHTP, STP are private warehouse where the manufacturing operations are permitted, correct? So in that case, warehousing period is still cleared or consumed. There is no warehousing period. Are we required to pay interest or not required to pay interest? Not required to pay interest. And in case of others, what is the warehousing period? 1 year from warehousing order. And what is the interest free period? 90 days. So from 91st day, we need to pay interest. At what rate? 15%. Now, what is the purpose for which we can clear the goods from the warehouse? For what purpose we can clear the goods from the warehouse? Either for another warehouse, correct, or for home consumption, importer's place, or for export. If you are clearing it for another warehouse, are we required to pay any customs duty? No, because from one warehouse to another warehouse only we are clearing, so we are not required to pay customs duty. So there is no need of any bill of entry, just a transfer request to be made. But already we executed a bond at the time of deposit in the first warehouse. Again are we required to execute another bond? No. Already whatever bond that got executed, that will be remaining in force. So bond will be retained, customs duty not payable. Is it clear? But every warehouse, whether we get 1 year, 1 year, 1 year like that, no. All the warehouses cumulatively put together 1 year. Then the goods can be cleared to the importer's place. For clearing it to the importer's place, what is the bill of entry that is to be filed? Ex-bond bill of entry for home consumption to be filed. And whether we need to pay any customs duty? Yes, we need to pay customs duty, but once we pay the customs duty, the bond executed shall be released. And there is one important landmark judgment, Kesoram Rayan case and SBEC Sugars case. So you have to remember this case name, like how that Rajendra Dyeing and Printing Mills case and Sun Exports case, Kiran Spinning Mills case and Garden Silk Mills case you remember. Same way you need to remember this case also, Kesoram Rayan case and SBEC Sugars case. What does this case says? As per this case, Supreme Court is telling if the goods are not cleared within the permissible warehousing period. What is the permissible warehousing period? 1 year. Or in case of perishable goods, it can be reduced for less than 1 year. If the goods are not cleared within the permissible warehousing period, on expiry of the permissible warehousing period, the goods are said to be improperly cleared, and on that day whatever is the rate of duty, that should only be taken, but not the date when you are actually filing the ex-bond bill of entry. Again I am repeating, carefully listen. Goods are permitted to be deposited for 6 months. 6 months over, still the goods are in the warehouse and you are clearing the goods in 8th month. On expiry of 6th month itself, the goods are said to be improperly cleared, and on that day, whatever is the rate of duty, that only should be taken, even though you file the ex-bond bill of entry at a later point of time. Generally, for rate of duty, we need to take ex-bond bill of entry, but this is like an exception to that point. So, Kesoram Rayon case and SBEC Sugars case, goods deemed to be improperly cleared on expiry of warehousing period. Then, the goods can be even exported. When the imported goods are exported, are we required to pay customs duty on the import? No, we are not required to pay any customs duty, and no bill of entry, but the shipping bill needs to be filed, and the bond will be retained. So, till the time we complete the export, you understood? And once the export is complete, the bond will be released. Then, what are the owner's right with respect to the warehoused goods? So, with respect to warehoused goods, say for example, I am the owner of the goods, I kept the goods in the warehouse. So, I can sort the goods, or I can inspect the goods, or I can show the goods for sale, but I should not sell. Got it? I should not sell the goods, but I can show them for sale. But sir, we discussed one point, sale of warehoused goods under customs. That sale of warehoused goods, I am not selling the goods, I am selling the warehouse receipt, documents of title I am selling, I am not selling the warehoused goods. So, remember, I can show them for sale, but I should not sell the goods. What are the 3 rights that I have? Inspect the goods, sort the goods, show the goods for sale. But while doing this, I have to exercise proper care and caution to prevent the loss, deterioration or damage. Why like that? Suppose if there is any damage that happens in the warehouse, I don't have to pay full customs duty, there is a abatement that is available to me. So, due to that reason, customs department is putting a condition on me that if the damage happens due to your negligence, then we will not give you abatement, you need to pay full customs duty. So, while doing this inspection, sorting or showing them for sale, I need to exercise care and caution to ensure that there is no damage or loss to the goods. So, this is the rights with respect to the owner of these goods. So, this is about warehousing provisions here. Understood? Now, mostly on warehousing provisions, we will get question on interest computation. So, because that 90 days interest free period is there now, beyond that, and connecting that with Kesoram Rayon case, so they will be making one question. Okay. So, that we will see. So, it is there in your study material itself. So, look into this question, question number 4, this is a standard question, very important question, not tested in new syllabus. So, definitely there is a chance of asking this question. Vipul imported certain goods in May. An into bond bill of entry was presented on 14th May and the goods were cleared from the port for warehousing. Assessable value on that date was $1 lakh. So, a person has imported the goods and they filed a into bond bill of entry. And what is the assessable value on that particular date? $1 lakh. The order permitting the deposit of goods in the warehouse is for 4 months is issued on 21st May. What is 21st May? Warehousing order. Warehousing order is 21st May. What is the period that is permitted? 4 months. But usually what is the period that we have for deposit of goods in the warehouse? 1 year. So, but I told you, in case of perishable goods, considering the nature of the goods, they may reduce the period to less than 1 year also. So, in this question, they have reduced it for 4 months. Then, Vipul deposited the goods in the warehouse on the same day, but did not clear the imported goods even after the warehousing period got over. When the goods are, that is to be cleared from the warehouse? 21st September. How 21st September? What is the warehousing order? 21st May, 4 months. So, June, July, August, September. By 21st September, they should have cleared the goods, but they have not cleared it by 21st September. So, means warehousing period is expired. Now, what does the Kesoram Rayon case says? On expiry of warehousing period, the goods are said to be improperly cleared. And a notice was issued under section 72 of the Customs Act demanding duty and interest. But they have not cleared now, deemed to be cleared. They have not actually cleared, but the goods are deemed to be cleared. That's why they got a notice. Vipul cleared the goods on 14th October. What is the date on which they are actually clearing? 14th October, compute the amount of duty and interest payable by Vipul while removing the goods on the basis of the following information. So on 14th May, 21st September, 14th October, we have different exchange rates, different rate of basic customs duty, and integrated tax is exempt. So we don't have integrated tax, that is IGST we don't have. Ignore agriculture infrastructure development cess. Now, can we do this question? So kindly take your book. First I need assessable value. What is the assessable value? $1 lakh, but that should be converted into Indian rupees. So what is the relevant exchange rate? 65.2 or 65.4 or 65.5? What is the relevant exchange rate in case of warehoused goods? Into bond bill of entry. What is the date on which into bond bill of entry is presented? 14th May. As on 14th May, what is the exchange rate? 65.2. So that should be taken. Write down. Relevant exchange rate. Relevant exchange rate hyphen. Relevant exchange rate hyphen into bond bill of entry, that is relevant exchange rate hyphen into bond bill of entry, that is 65.20 per dollar. 65.20 per dollar. Are you understanding this? Then second, what is the relevant date for rate of duty? Next line, relevant date for rate of duty. Relevant date for rate of duty. Usually what is the relevant date? At the time of clearance from warehouse, but because of Kesoram Rayan case we should take 21st September. Write down relevant date for rate of duty 21st September hyphen 21st September, that is 10%. 10% in brackets Kesoram Rayan case. Usually we will take 12% at the time of actual clearance, but because of Kesoram Rayan case we are taking 21st September. Kesoram Rayan case. Now, what is the assessable value in Indian rupees? Assessable value equals to 1 lakh into 65.2. 1 lakh into 65.2. 65 lakh 20,000. And compute the customs duty payable. Basic customs duty. Basic customs duty 65 lakh 20,000 into 10%. 6 lakh 52,000. Next line, social welfare surcharge 65,200. And IGST we don't have. So total customs duty payable 6 lakh 52,000 into 11%, that is 71,000. 7 lakh 17,200, correct? Now 7 lakh 17,200 is the total customs duty payable. Now we need to compute the interest. Now what is the period for which we need to compute the interest? After 90 days. So first you compute from the date of warehousing order to the date of actual clearance. So write down next line, number of days from the warehousing order, number of days from the warehousing order till actual clearance, because we need to pay interest till the date we actually pay the customs duty. When are we actually paying the customs duty? 14th October. So till 14th October, number of days from warehousing order till actual clearance, that is 21st May to 14th October. 21st May to 14th October. 21st May to 14th October. How much? 21st May to 14th October. So in the month of May, 31 minus 21, you count from 22, 10 days in May, correct? And in June 30 days, July 31 days, August 31 days, September 30 days, October 14 days. That will be 146 days, right? 146 days. 146 days minus interest-free period. Minus interest-free period. What is the interest-free period? 90 days. Balance days for which interest is payable. Balance days for which interest is payable, 56 days. Therefore, interest payable equals to, interest is payable on what? Customs duty. Interest payable equals to, that's 7 lakh 17,200 into, what is the rate of interest? Remember, 15%. Don't get confused. Usually you will take 18% because of GST impact. But in customs, the rate of interest will be 15%. Into 15% into 56 divided by 365. How much? 16,505. See the answer in the screen. So first we have computed 7,17,200, and you need to definitely write this Kesoram Rayan case. Okay, Kesoram Rayan case you need to apply. You have to write a note related to that, and thereafter you need to do the interest computation. Interest computation is for 56 days, and the interest payable will be 16,505 rounded off to nearest to 1 rupee. Is it clear? So that is about this warehousing question. This is one important area. Next. So we will see some MCQs also, and then we will take a break and then proceed with the other areas, because I can see your face. I don't want to start the new chapter. So kindly look into MCQs. But don't scold me, pa, that I don't have a space here to speak anything else. Okay, even then I am trying to go out and come back soon, because if it is a regular batch or any other batch, I'll have ample time. But in the given time, I want to discuss many things. Okay, so that's why all important questions also I wanted to cover. That's why I could not. 4 days only, monotonous only, but bear with me. Definitely in these 4 days you are going to complete the entire indirect taxes. Thereafter you can focus on other subjects. Little bit difficult only, okay, but you have to bear. See this page 164. We have completed few chapters in customs, taxable event, valuation. On that we will see the MCQs, just some application based questions, and if there is any extra concepts also we can discuss. There is one query, warehousing sum 556 days, can you explain how we got 56 days? Simple, pa, from the date of warehousing order, that is 21st May till 14th October, actual date of clearance, you need to count number of days. That calculator will tell how many number of days. So that number of days minus interest free period 90 days. So that's where we will get 56 days. Okay. Say this. Question number 1. In the context of Indian customs law, IC gate means, what is the meaning of IC gate? Full form of IC gate. Indian Customs Electronic Gateway. So option B is the answer. Option A was the previous answer. Previously it was called as Indian Customs Electronic Data Interchange Gateway, like that. So I'll show you. So if you see, IC gate full form is now. So here itself they have given in the website itself, because in ICI somewhere in some MCQs they have given electronic data interchange gateway, but they modified that name now. Now the updated name is Indian Customs Electronic Gateway. That is only the correct name. Okay. So therefore option A is not the answer, option B is the answer. Which of the following options is or are correct? Indian customs waters extend up to 12 nautical miles, 24 nautical miles. So Indian customs waters extend beyond 200 nautical miles. Indian customs waters include territorial waters and extend up to 200 nautical miles. Which is the correct answer? 4. So 4, only 4 will be coming under Indian customs waters. That is only correct. First one is wrong. Indian customs waters is not up to 12 nautical miles and not 24 nautical miles. Beyond 200 will not come. So only up to 200 nautical miles. Up to 200 even territorial waters also will be coming. What is the relevant date for determining rate of duty in case of warehoused goods before clearing for home consumption? Which one? Inbound or export? Rate of duty, warehoused goods. Inbound or export? Export. Option B, data presentation of export bill of entry. The relevant date for determination of rate of exchange in case of imported goods is exchange rates. Which document here? Bill of entry. B, date of presentation of bill of entry. not date of deposit of duty or date of examination, date when vessel arrive in India, neither of these. Dash entry of union list has given the power to central government to levy duties of customs, including export duties. So we have 3 lists under 7th schedule to the constitution: union list, state list and concurrent list. And union list talks about levy of taxes or duties by central government. State list, levy of tax and duties by the state government. Concurrent list, we don't have any tax related entries, so these are shared powers between central government and state government. Customs duty is clearly levied by central government only, so therefore it will be coming in the union list. In the union list, actually it will be coming under entry number 83. Entry number 83, actually entry 82 is income tax. Entry 82 is income tax, entry 83 is customs duty. So it will be coming under entry 83 of union list of 7th schedule to the constitution. So the answer is entry 83. Then you can remember it easily, because Income Tax Act is 1961, entry 82, and Customs Act is 1962 next year, so entry 83. Okay. Then goods are deemed to have been imported if the vessel enters the imaginary line on the sea at the dash nautical mile. When it is said to be imported, 12 nautical miles. Then in case of goods entered for home consumption, the rate of duty and tariff valuation shall be the rate on date of presentation of bill of entry, or either A or B, whichever is later or earlier. Later. So option C. In case of vessel or aircraft, it is date of arrival. In case of vessel, it is date of entry inwards. The territorial waters extend to dash nautical miles into the sea from the appropriate baseline, 12 nautical miles. Goods include stores, currency, baggage, all of the above. All of the above. Coastal goods means goods other than imported goods or exported goods, or both imported and exported goods, both. Because coastal goods refers to domestic goods from one port in India to another port in India. Dutiable goods which are chargeable to duty and on which duty has been paid or duty has not been paid. Not been paid. Once the duty is paid, then it will be called as duty paid goods. Foreign going vessel, which of these will come under foreign going vessel? Navy vessel of foreign government taking part in naval exercises, yes. And naval vessel of Indian government proceeding to foreign taking part in naval exercise, yes. Any vessel or aircraft going from India to outside India, whatsoever purpose, it will be coming under foreign going vessel or aircraft. Even foreign country vessel which is coming to India for participating in naval exercise also will come. So the answer is both A and B, option C. Which of the following is treated as import if goods are brought from oil rig and such oil rig is located where? Outside the territorial waters, correct. Because outside the territorial waters, what is the meaning of India? Up to 12 nautical miles. If there is a oil rig outside the 12 nautical miles, and from that oil rig, if the goods are brought into India, the goods are said to be imported into India. So it is not 200 nautical miles, it is 12 nautical miles, because the meaning of India is only 12 nautical miles, territorial waters. Then what is the taxable event for import? But actually it should be outside the territorial waters only. Okay. So outside India, outside territorial waters, both are correct only, na sir. Actually both are correct only. But here outside territorial waters is the exact one, and that confusion, don't worry, in exam it will not be there. Okay. I created these options because of this. I created, okay, human error, okay. But ICI will not do this error. Then taxable event for import. What will be taken as taxable event for import? bill of entry filed or crossing the customs barrier, ARB or none of these. So taxable event is the date on which it crosses the customs barrier. For the purpose of customs valuation, rate of exchange means the rate of exchange notified by dash shall be taken into account. CBIC. What is the relevant date for rate of exchange for the exported goods? Rate of exchange. Shipping bill. Which section provides for rate of duty of imported goods? 15. Rate of duty is given in 15 for imported goods, 16 for exported goods. What is the relevant date for rate of duty when the bill of entry is presented before the date of entry inwards of the vessel? Which will be taken? Relevant date of duty, relevant date for rate of duty, date of presentation of bill of entry or entry inwards, whichever is later. So in this case, which is later? Read the question properly, pa. They already presented the bill of entry before the date of entry inwards. So which is later? Entry inwards. So option B is the answer. So, but if you see here, date of actual bill of entry or date of entry inward, ARB whichever is later, ARB whichever is earlier. So, logically speaking, it should be ARB whichever is later. The date on which we actually presented the bill of entry or the date of entry inward, whichever is later. So, option C is the answer. But here option B also correct, option C also correct. Both are correct depending on the options. Then section dash makes it abundantly clear that importation or exportation of goods into or out of India is the taxable event. This is section, not rupees, section 12. That is the base of charge. Customs Act 1962 extends to whole of India, including Jammu and Kashmir or excluding Jammu and Kashmir? Including Jammu and Kashmir. We don't have any excluding Jammu and Kashmir. So option B. Because in all the other options we have excluding Jammu and Kashmir. Customs Act 1962 not only regulates the levy and collection of duties but also serves equally important purposes like regulation of import and export, protection of domestic industry, prevention of smuggling, conservation and augmentation of foreign exchange. So select the correct answer from the options given below. All A to D are the objectives of Customs Act. It is section 12 of Customs Act that provides duties of customs duty to be levied at such rates as may be specified in which act? Customs Tariff Act 1975. Under the Customs Act 1962, the rule making power is delegated to who will be making the rules? CBIC or central government or respective state government? CBIC and all don't have the power to make rules. CBIC has power to give the notifications and circulars. It is the central government. B. Export goods means goods which are to be taken out of India, to a place outside India, which exporter desires to take outside India, none of the above. So B. Any goods which are to be taken out of India to a place outside India. Which of the following statement is correct? All imported goods are dutiable goods. No. Market price in relation to any goods means goods, the retail price of which in the ordinary course of trade in India. All dutiable goods are imported goods, all of the above. So C, because all imported goods need not be dutiable goods, but all dutiable goods will definitely be imported goods. As per section 2 clause 38 of Customs Act, stores means goods for use in a vessel or aircraft includes fuel and spare parts and other articles, both A and B. A warehouse is a designated area where the goods are allowed to be stored after landing without payment of duty. Designated area where goods are allowed to be stored after payment of duty, no. Designated area where goods are allowed to be stored after landing without payment of duty, and certain cases after payment of proper amount of duty, no. Designated area where imported goods are kept if the importer is unable to pay the proper amount of duty. Imported goods are kept if the importer is unable to pay the proper amount of duty. No, not that, because it is importer without payment of duty, goods are allowed to be stored. Okay. So option A is the correct answer. Question 28. Jet Airways of India has purchased aircraft from a foreign shipping company for transportation of goods or passengers within India. State whether such aircraft is liable to duty under Customs Act. So liable to duty or not liable to duty? Liable to duty, as aircraft is covered in the definition of goods. Next, question 29. Mr. Alex of Mumbai has imported goods from USA. When the goods were on high seas, he sells those goods to Mr. Peter of Mumbai. Mr. Peter clears the goods from customs barrier by filing into-bound bill of entry. Identify the importer in the given case. So who will be called as importer? Mr. Peter, because whenever the goods are sold by way of transfer of documents to title, I told you the one who is filing the bill of entry will be taken as the importer. Then question number 30, Messrs. Saturn Limited has imported sieving machines from Japan. Mr. Arjun, a clearing and forwarding agent who clears the goods on behalf of Saturn Limited from customs port by filing the bill of entry for home consumption by using the import-export code of Messrs. Saturn Limited. Identify the importer. Who will be called as importer? So who is the owner of the goods? So Messrs. Saturn Limited will be taken as the owner of the goods. Okay. So because on their behalf some other person is importing the goods, but if you see whose IEC is mentioned, whose import-export code is mentioned, Saturn Limited import-export code is mentioned, so they are only called as the importer. Okay. Then so see this classification of goods. Classification enables categorizing the goods into groups, subgroups in order to apply a different rate of duty on goods following within the same group. See, actually classification is not for the purpose of categorization. So it is for the purpose of applying the rate of duty. So mainly to arrive which rate of duty to be taken, for that purpose only we do the classification. So enables categorizing the goods into groups or subgroups in order to apply a single rate of duty on each group or subgroup. Okay, that is this. There are dash interpretation rules under the Customs Tariff Act up to Rule 6, Rule 1 to Rule 6. Rule 2A of interpretation rules under the Customs Act states that goods shall be classified under the heading which is closest to the specific description. No. Any reference to heading shall be deemed to include a reference to that article in an unfinished stage too. Yes. So completed goods includes incomplete or unfinished goods. Which of the following example is best suitable to the specific identification rule, that is prefer specific over general? Car without tires or without seats would still be construed as cars but not cars without engines. No, that is not. Natural rubber would include in its mixture with synthetic or other forms of rubber. No, that is also not. If one import liquor gift sets that have both liquor and glasses, it should be classified under the heading liquor. Option C. Specific identification rules means what? Prefer specific over general. And mint tea is not separately classified, but the classification should be tea as the product is closest to one under the heading tea. Mint is only flavor. This is actually any reference to material includes combination of that material with the other material. If composite goods cannot be classified as per rule 3 of interpretation rules, then shall be classified on the basis of material or substance. This is known as essential character rule. Then rule 2b of the interpretation rule states that any reference in a heading to a material or substance shall be deemed to include a reference to the mixture combination of that material with other material. You are required to state which of the following example of this rule. Read that and tell me. Any reference to material includes combination of that material with the other material. Already I gave you this. Natural rubber would include its mixture with synthetic or other forms of rubber, correct? Scooter without tires is classified as scooter, no. Minty is not separately classified, but classified should be T as the product is closest to the one under the heading T. So all of the above. So option A is the answer for this. Dash states that the goods which cannot be classified in accordance with rule 1, 2 or 3 shall be classified under the heading which includes goods that are most similar. What is that rule known as? Akin rule. Which of the following is covered under rule 3 of interpretation rule? So the latter, the better, essential character, all these three. Actually in rule 3 only everything is there. 3A, 3B, 3C. Okay. Under the customs law, electric shaving machine, this example I discussed, is classifiable under the following: shavers and hair clippers with self-contained motor or electromechanical domestic appliance. Which heading it will come? 8510. Which of the following statements are correct as per general rules for the interpretation of import tariff? A durable wooden case, especially shaped to contain a musical instrument and presented with the same, shall follow the classification of such musical instrument, true. Packing materials presented with the goods therein shall be classified with the goods if they are of a kind normally used for packing such goods, provided such packing materials are clearly suitable for repetitive use. Repetitive use means it will not be classified with the goods, so therefore it is false. Repetitive packing means separately we will classify. The heading which provides a more specific description shall be preferred to the heading providing general description, true. So 1 and 3, option A. Fine, we'll take a break and then we will continue with exemptions under customs and procedures under customs, okay? Fine. Okay, say this. Small change in the answer for MCQ pa. This question number 4. Actually, D is the correct answer. I'll tell you why. Because they are asking prefer specific over general. If you see option C, liquor gift set that have both liquor and glasses, it should be classified under the head liquor, which means any reference to an article includes combination of that article with other article. So therefore, this will not come under specific over general, but this mint tea will come under specific over general. So because mint tea, is classifiable under the heading tea itself. So because, mint is only a flavor, option D. So option A is actually any reference to complete goods includes incomplete goods. Option B is any reference to material includes combination of that material with other. Even option C also. Any reference to material includes combination of that material with other. So option D is the correct answer for this. Okay. Because if this is actually not correct, then next one also will be changing. Because mint tea will be coming under any reference to material includes combination of other material. Then both option A and C will be correct. So actually option A only for question number 6, and for question number 4 it is option D. Then one question you asked. So what is that question, ma? Out of customs control. Question number 14. Question number 14. Why won't it be A or B? Because bill of entry filed under 46 means bill of entry for home consumption. And 68 means into bond bill of entry. When you file into bond bill of entry, still the goods are under the customs control. So therefore, A will not come. Only B, crossing the customs barrier. So suppose if it is given as bill of entry under section 46 but not 68, then A or B will be the correct answer. But 68 means still the goods are under customs control. So that is warehoused goods. So that's why B is the correct answer in this case. Fine. Now look into segment 24, page 187. Exemptions under customs. As per section 25, central government by way of notification official gazette from time to time can give exemption from payment of customs duty. So power to grant exemption is with the central government as per section 25. Then we have 4 sections which deals with the exemptions. Section 13, 22, 23 subsection 1 and 23 subsection 2. Look into section 13. What does section 13 says? Read it column wise. Read it column wise. See the table below that chart. Section 13 says no duty on pilfered goods. What is the meaning of pilferage? Petty theft. So when this section 13 is applicable? In case when the goods are stolen. So petty theft. So goods are pilfered. And what is the benefit? Whether we need to pay customs duty or no need to pay customs duty? No need to pay customs duty. For example, you are importing 1000 pieces of iPhone 16 in a box, and that box is imported and kept in the airport. And when you have kept it in the airport, so like you have to keep it in the custodian place till you file the bill of entry. And what happened? Someone over there has removed 3 pieces of iPhone from that box. 3 pieces itself is a big value, somewhere like 1,50,000. 1,50,000 into 3 means 4,50,000 rupees. Whether we need to pay customs duty on that 4,50,000 or no need to pay customs duty on that? No need to pay. But sir, what about value of the goods? Fine, customs duty no need to pay, but what about the value of the goods? Insurance company is there, they will take care, okay? But who will pay customs duty on these 3 pieces of iPhone which is missing? Custodian will pay, okay? And what if the goods are restored? What if the goods are restored? Then we need to pay the customs duty. And whatever custodian has already paid, it will be refunded to him. So see that point, benefit. Customs duty not payable by importer, but payable by the custodian. And remarks, if the goods are restored, then customs duty is payable by the importer. Whether this section 13 is applicable in case of warehoused goods? No. Means when the pilferage should have happened? Before order for home consumption or warehousing. That is, as soon as the goods are unloaded in the port or airport, we will be filing either bill of entry for home consumption or bill of entry for warehousing. Then they will pass an order for clearance. Before that order for clearance, if the goods are pilfered, then section 13 will be applicable. Is it clear? So, if the goods are deposited in the warehouse, whether section 13 is applicable, not applicable. That is about this. Then look into section 22. Section 22 talks about abatement. So, what is abatement means? Rather than paying the full customs duty, we need to pay the reduced customs duty, that is known as abatement. When is it applicable? In case of damage or deterioration of the goods. What is the meaning of damage versus deterioration? Damage means physical damage. But is a product working or not working? Working. But it is not working as original or as specified, but it is functioning. But there is a damage to that. So, means there is a reduction in the utility value, but there is no reduction in the, like functioning. I mean, it's not destroyed, it is damaged. For example, mobile you dropped at the ground. So, glass broken, screen broken, but will it function or not? Yes. So, will you replace the screen? No. You will not replace the screen, because I know that half of your mobiles are broken, screen is broken, but still you will be using, because ultimately what you need, is it functioning or not functioning? If it is functioning, it is okay. You got it? So, that is what damage is. What if it is not at all working? Then it will be called as destruction. If it is destruction, it should not come in 22, it should be coming under 23 subsection 1. See there. If the goods are destroyed, it should come under 23 subsection 1. If the goods are damaged, it should be section 22. What is deterioration? Deterioration means reduction in quality is known as deterioration, not quantity. Reduction in quality. Okay. Then what is the benefit in case of abatement? Customs duty payable or not payable? Payable, but at discount in proportion to the value of damaged goods. For example, if the value of the goods before damage, if the value of goods before damage is somewhere like 8,40,000. This is the value of goods before damage, and customs duty payable on above. Customs duty payable on above is 2,81,000. Now, what is the value of goods? What is the value of goods after damage? What is the value of goods after damage? Value of goods after damage is 4,50,000. Then what will be the customs duty payable? How will you calculate? Simple cross multiplication. For 8,40,000 we are paying 2,81,000. Then for 4,50,000, what will be the customs duty payable? Cross multiplication you will do. That is 4,50,000 into 2,81,000 divided by 8,40,000, that comes to 4,50,000 divided by 8,40,000 into 2,81,000, 1,50,536 is the customs duty payable, correct? Therefore, what is the abatement? Instead of paying 2,81,000, I am paying only 1,50,536. Therefore, abatement will be 2,81,000 minus 1,50,536. So, 2,81,000 minus this, abatement will be 1,30,464. Be careful. When they are asking about how much is the customs duty payable, 1,50,536 is the answer. When they are asking what is the abatement, 1,30,464 is the answer. They will give both in the options. They will give 1,50,536 also. They will give 1,30,464 also. And when you do, you will get 1,50,536. You will think, wow, my answer is correct, and you will select. But the question there is, what is the abatement? So the abatement will be 1,30,464. Okay. Then, see, generally if you see normal exams and all, they will give the question paper to test your knowledge. But ICA will set the question paper that, you should fail. There is a difference actually, okay. So due to that reason only, all these things matters. Otherwise, normal question paper, they will just test your knowledge. So for testing the knowledge, there won't be any problem. But ICAI will prepare the question paper like traps, like Padma Vyuha they will create. Okay. And everyone is not Arjuna to break the Padma Vyuha and come out. We are all like Abhimanyu. We will get stuck there and we will not be able to come out. Okay. So say this. Customs duty payable, value after damage into original customs duty divided by value before damage. Whether applicable in case of warehoused goods? Yes. Abatement is applicable in case of warehoused goods. That is the reason why in warehousing we have that point. Owner of warehoused goods can sort the goods, can inspect the goods and can show them for sale, but needs to exercise care and caution, because if the goods are damaged at that stage, there is a loss of revenue to the government due to that reason. So damage, yes, even in case of warehoused goods it is applicable, but deterioration, no. At which stage the deterioration should have happened? Only before unloading of goods. If the deterioration happens in warehouse, we will not get any benefit. Next, look into 23 subsection 1. What does 23 subsection 1 says? Remission of duty. Remission of duty means first you pay the duty, prove that the goods are lost, destroyed or abandoned, and how much duty you paid, that much you will get as a refund. So, but when the benefit is available, if the goods are lost, destroyed or abandoned, benefit, pay the customs duty, prove the officer that the goods are destroyed, and you will get the refund. And whether applicable in case of warehoused goods? Yes. So therefore these two sections, that is section 22 abatement and 23 subsection 1 remission of duty, is applicable in case of warehoused goods. Whereas 23 subsection 2, relinquishment of title to the goods. Relinquishment of title means what? Leaving the title, giving away the title. So are you required to pay custom duty or no need to pay custom duty? When you don't have the title, why you need to pay the custom duty? You are not the owner of the goods. So you are relieving the titles. Okay. So relinquishment of title to the goods. When applicable, suppose if the imported goods are not according to the specification. Okay. It is like, you ordered something and the product, what you have ordered versus what was delivered is completely different. Now, will you take the delivery of the product? No, you will not take delivery of the product. You will relinquish the title. But remember, you will be able to relinquish the title before the order for clearance. Means before you file the bill of entry, you need to ask for examination of the goods. When you ask for examination of the goods, they will allow you to examine the goods. At the time itself, you will come to know whether the goods are according to the specifications or not. If the goods are not according to the specification, you will relinquish the title. Means the relinquishment of title should have happened when? Again, before order for clearance. Before order for clearance only. Means in case of warehoused goods, can we relinquish the title under this section? No. But we can relinquish the title in case of warehouse goods under a different section, that is proviso to section 68. We will see that also, but look into this first. Relinquishment of title to goods. Goods are not conforming to the specification. Benefit, customs duty payable or not payable? Not payable. But remember, relinquishment is not possible in case of prohibited goods. You are importing some prohibited goods, okay, like drugs or gold, etc. like that you have imported. And when you imported, Customs department, see, you imported cocaine and you are mentioning it as that you have imported some maida powder, like that you have mentioned. But customs officer has it, because both will be in white color only, and the customs officer identified that this is not maida, idiot, this is cocaine. Then you said, okay sir, relinquishment of title. Goods are not according to the specification. I imported maida, sir. How would I know that it is cocaine? So relinquishment of title, not possible, because once it is prohibited goods, you cannot relinquish the title. You have to face the consequences. Then whether applicable in case of warehoused goods? No. But relinquishment is possible under proviso to section 68 in case of warehouse goods. We have a different place where we will get the relinquishment of title. We have three places where we come across relinquishment of title in customs. One is under section 23 subsection 2. Another is under proviso to section 68. Yet another place is under section 26A. That is in case of refund. Okay. So that also I will see, like I will show you so that we can connect all these 3 points. You can see the refunds chapter. In that refunds chapter, refund under customs, you can take section 26A, page number 225. Page 225, you can see refund under customs, section 26A. So you have imported the goods. That imported goods are not conforming to the specification or defect. So what you can do is that you can abandon, means you can relinquish the title. Here also you can relinquish the title, but this is when here you have cleared the goods from the customs, means you have paid the customs duty and you clear the goods from the customs, and thereafter you want to relinquish the title. You can do it under section 26A. So, but what is the differences between these three? Kindly write down somewhere. In the next page, in the refunds chapter itself, next page you have some space. There itself you can write down. So, we have relinquishment of title. So, relinquishment of title is possible in three places. First, what happens is that goods are unloaded. Goods unloaded. Where goods are unloaded? In port or airport. After the goods are unloaded in port or airport, then the goods will be cleared for either home consumption or for warehouse, and they will be passing a warehousing order. Okay. So, order for clearance. Order for clearance. After order for clearance, the goods will be deposited in warehouse. Deposit in warehouse. After the goods are deposited in the warehouse, we can clear the goods from the warehouse upon payment of customs duty. Clearance upon payment of customs duty. Clearance upon payment of customs duty. Now, at which stage the relinquishment should have happened, or that which stage you came to know? Say this: if before the order for clearance, you came to know that the goods are not according to the specifications, then you will go for section 23 subsection 2. Suppose if you came to know when the goods are deposited in the warehouse, that is before clearance upon payment of customs duty, at this stage, if you know that the goods are not according to the specifications, then also you can relinquish the title. After you clearance the goods from the warehouse upon payment of customs duty, if you know that goods are not according to the specification, then also you can claim the relinquishment of title. Okay. So, first we will see this stage. You have written this. So, goods are unloaded in the port or airport, thereafter order for clearance, and thereafter deposit in the warehouse, thereafter cleared upon payment of customs duty. Now, at this stage, goods are not according to specifications. Goods are not according to specifications. Goods are not according to specifications. Then relinquishment of title under section. Relinquishment of title under section 23 subsection 2. So, suppose if you came to know that the goods are not according to specifications when the goods are deposited in warehouse, during that stage, goods are not according to specifications, because you can check any place, na? Goods are not according to specifications. Then also you can do relinquishment of title, but it is in a different section. Relinquishment of title under section 68. That is warehousing procedures. Suppose at a later point of time you have cleared upon payment of customs duty, clearance upon payment of customs duty. At this stage, that is after clearance, you came to know that goods are not according to specifications. Not according to specifications. Then also you can do relinquishment of title, but this is under section 26A. Relinquishment of title under section 26A. So now at which stage we understood? In the first case, are we required to pay customs duty or not required to pay customs duty? Customs duty not payable. But in the second case, customs duty payable or not payable? Not payable. Why customs duty not payable? Because you are relinquishing the title at this stage. And whereas in the third case, already you paid the customs duty, correct? And therefore you will get the refund. Refund of customs duty paid on import. Refund of customs duty paid on import. That's the difference between these three. So therefore we get the relinquishment of title in all the three places, either before order for clearance or after order for clearance and before clearance from the warehouse, or after clearance from the warehouse upon payment of custom duty, then also relinquishment of title is possible. Okay. Now go back to exemptions. So we completed all these 4 sections, and at which stage which benefit will be applicable. So look into this chart. Goods are lost in transit. First of all, is there a levy? No, there is no levy. Consequently, whether customs duty payable or not payable? Not payable, because first of all there is no levy now. So where from we need to pay customs duty? We are not required to pay any customs duty. There is no levy under section 12. Consequently, customs duty not payable as per Supreme Court decision in the present case. What is that Supreme Court decision, sir? That is Mangalore Refineries case. Mangalore Refineries case. So in Mangalore Refineries case, Supreme Court is telling that first of all, when the goods are lost in the transit, we don't have levy, so payment of customs duty shall not arise. Once the goods are unloaded, thereafter order for clearance, either clearance for home consumption or clearance for warehousing, thereafter clearance from warehouse for home consumption, before order for clearance. So if the goods are pilfered, you will get benefit under 13. If the goods are not according to the specifications, means owner do not want to take delivery of the goods, relinquishment of title. Now tell me, before this stage, whether section 22 as well as 23 subsection 2 is also applicable? Yes, that is both 22, abatement also, remission of duty also is applicable. So you just write down, note, even benefit under section 22 or 23 subsection 1 available at this stage. Available at this stage. Suppose at this stage, if the goods are damaged, we will get abatement or not? Yes. Suppose at this stage, if the goods are destroyed, whether we get the remission of duty or not? Yes. So all 4 sections are applicable before order for clearance. Once the order for clearance is made, thereafter before actual clearance, only 2 sections are applicable. What are those 2 sections? Remission of duty under 21 and abatement of duty under section 22. That's what I told you. Warehoused goods, which 2 sections are applicable? So 23 subsection 1 and 22. Are you understanding this? Then look into section 21. Section 21 talks about derelict, jetsam, flotsam. Derelict refers to the ship which got derailed in the sea with no hope of recovery, and jetsam refers to goods which are thrown into the sea in order to save the ship from sinking, and flotsam refers to those goods which are thrown into the sea will continue to float, that is known as flotsam. All these goods may be brought into India by any person, like fishermen and all will be bringing these goods to India, and they need to pay customs duty as if these goods are brought into India and that is imported into India, unless these goods are exempted. That is what section 21 says. All goods, derelict, jetsam, flotsam and wreck brought or coming into India shall be dealt with as if they were imported into India, unless proved to the satisfaction of the officer that they are entitled to be admitted duty free. Unless they are exempted, we need to pay customs duty on those goods. Okay. Then reimportation of goods, this is given in section 20. What does this say? There are 2 notifications under the section 20. Notification 45/2017 and notification 60/2018. First, what does notification 45/2017 says? First, a person is importing the goods. After importing the goods are exported. and thereafter it is re-imported. Are you understanding what is happening? First we are importing, then we are exporting, and thereafter we are making re-import. At the time of import already we paid the customs duty, and at the time of export we claimed some incentive. So when we claim the incentive at the time of re-import, no need to pay full customs duty. Whatever incentive we claimed at the time of export, that much incentive we need to pay. What incentive we will claim? In case of GST also we will claim some incentives. We will export the goods upon payment of IGST. That IGST paid we will get as a refund. Or under duty drawback, there is a concept of duty drawback, that imported goods when you are exporting, you will claim duty drawback. Again on re-import, whatever benefit you have claimed, that you need to pay. So that is this. And suppose if it is exported, imported goods which are exported for carrying out repairs outside India, then upon re-import of these goods, for example, you imported a car. At the time of import of car, already you paid the customs duty. Now that car is exported. For what purpose? For carrying out the repairs outside India. Again that car is re-imported. Now you don't have to pay again customs duty on the car, because already you paid the customs duty. Now you need to pay customs duty on fair value of repairs plus freight and insurance both ways. That should be taken as a value. Fair cost of repairs including material and labor, freight and insurance both ways. Provided the exported goods are re-imported within the time limit. What is the time limit? 3 years, plus it can be extended for a further period of 2 years. And whatever you have exported, the same goods should be re-imported. Say this. Even IGST is payable on fair value of repairs including material and labor plus freight and insurance both ways. Suppose at the time of export, if you are paying some export duty, so you imported and at the time of export you pay the export duty. Upon re-import, whatever export duty you have paid, that you will get as a refund. If export is subject to export duty, then upon re-importation, refund of customs duty paid on export can be claimed in terms of section 26A. Again I am repeating. First you have imported, you paid customs duty. Now you are exporting. At the time of export you paid some customs duty. The same goods are coming back to India now. So whatever customs duty you paid at the time of export, you will get it as a refund. In addition to this incentive on re-import, actually what is the incentive here? What is the incentive here? Generally when you are re-importing, you need to pay customs duty as if the goods are imported into India for the first time. But we got an incentive here. What is that incentive or benefit? You don't have to pay full customs duty. At the time of export, whatever benefit you claim, that much you pay, that is sufficient. Or you pay customs duty only on fair value of repairs plus freight and insurance both ways. That is the concession we are getting in this case. Then, if goods are exported under duty exemption scheme, that is advance authorization, DFIA, EPCG scheme, then upon re-importation, IGST and compensation cess, if applicable, payable and time limit of re-import is 1 year plus 1 year. So what is this? At the time of export, if you have got any incentive, what is that incentive? Under duty exemption scheme, that is advance authorization or duty free import authorization or EPCG scheme under foreign trade policy. What is AA? Refers to advance authorization. That is, if you have advance authorization, you can import the goods without payment of customs duty, or you can locally procure the goods without payment of GST. And DFIA refers to duty free import authorization. Same. So if you have AA or DFIA, these are two incentives under foreign trade policy. If you have this license, what you can do, you can import the goods without payment of duty, or you can locally procure without payment of any GST. EPCG is also same. AA and DFIA is for raw material and EPCG is for capital goods. Then upon re-importation, IGST and compensation cess, if applicable, payable, and the time limit for re-import is 1 year plus 1 year. Actually in this place we have an amendment. Okay, so see this. I told you we have very few amendments related to customs and GST for November 24 exams. So look into this. It is not loading here. Fine. So let it be. Actually, this point is now omitted. This is not there. So for November 24 exam, they have removed this point. So previously we had this IGST and GST compensations is payable, and the time limit for reimportation is 1 year plus 1 year. So this is now removed. You can remove this point. This is not applicable at present. So this provision, anyhow you did not listen to this provision when I was discussing. So that is not applicable. Okay. Omitted. This is omitted at present. Then look into the next one. If goods exported are not subject to any incentive or exemption and not exported for repairs. Okay, sir, I am importing, I am exporting, I am not getting any incentive at the time of export. Neither I am exporting for repairs. At the time of reimport, should I pay any customs duty? No. You are not required to pay any customs duty at the time of reimport. And exported and imported goods must be same, and the ownership should not have been changed. And concession under this notification is not applicable to 100% EOU, unit in FTZ or public or private warehouse or tobacco and petroleum products. So these are the cases where, because anyhow 100% EOU, import we don't have to pay customs duty, unit in FTZ also we don't have to pay customs duty, when the goods are deposited in warehouse we don't have to pay customs duty. So that's why these concessions are not applicable, because full customs duty we don't have to pay. In case of goods taken outside India for exhibition, upon bringing it back within 6 months from the date of export, customs duty not payable. That is usually when the goods are taken outside India for exhibition. So first of all, it is not export. Why it is not export? Because the goods are temporarily taken outside India, and due to that reason, if it is again brought back to India, we don't have to pay any customs duty in that case. So these are all the benefits that we have with respect to reimportation. How this will be tested in exam? So we will be having a question related to this. So I will show you these amendments. So they have given one statutory update for November 24. Almost all amendments of May 24 only they have repeated. They have not added anything new bearing except for 1 or 2 points. So see this here, in case reference of the chapter FTP amended in case of concessionary, that 1 year plus 1 year under the incentives and all I told you, na? So that is not applicable. So therefore you don't have to bother about that. And remaining wherever that points come, I'll explain there. Next, so we will see one question related to this reimport for repairs, etc. So this is one past exam question, pa. Yes. Have a look into this question. Concon Corp. Question number 9. It's an RTP May 20 question, and thereafter they have not asked this. Kankan Corp has imported a machine from USA for rupees 365 lakhs on payment of appropriate customs duty in February. However, in July, the machine has to be sent back to the supplier for repair. This is the notification which we have just now seen, notification 45/2017. That is, first we have imported the goods. After importing the goods are exported for the purpose of repairs. And again we are re-importing the goods. Then what is the customs duty that we need to pay? So from the factory of Kankan Corp, the machine was repaired and thereafter re-imported by Kankan Corp in the November next year. What is the time limit within which the exported goods should be re-imported? 3 years, and it can be extended for a further period of 2 years. So 3 years plus 2 years. Is the time limit fulfilled? Yes. Then the supplier has agreed to provide discount of 60% of the fair cost of repairs, resulting in Kankan Corp paying US dollars 12,000. Following further particulars are available: bill of entry, arrival of aircraft. You tell me how much should be taken as the fair value of repairs? Can 12,000 be taken as the fair value of repairs? No. 12,000 cannot be taken as the fair value of repairs because 12,000 is after a discount of 60%. So we need to take the fair value of repairs. So means this 12,000 is actually 40%. So 12,000 divided by 0.4. So therefore fair value of repairs will be $30,000. Following further particulars are available. So particulars: bill of entry, arrival of the aircraft. So which should be taken as relevant date for determination of rate of duty? Bill of entry date or arrival of the aircraft, whichever is later. Which is later here? 26th February is the later date. On that date, whatever rate is there, that should be taken. And exchange rate should be taken on the date of bill of entry, that is 62 rupees per dollar should be taken, and IGST will be 12%. And they have given freight and insurance outward as well as inward. So first we need to take fair value of repairs. What is the fair value of repairs? $30,000. So 12,000 divided by 0.4, 12,000 divided by 0.4, that is $30,000, multiply with 62. So 30,000 into 62, that will come to 18,60,000 plus freight and insurance both ways, add these two. So 18,60,000 plus 23,000 plus 93,500 plus 27,000 plus 21,10,000, that will be taken as a value on which we in the IGST we need to take 12%. So assessable value 21,10,000 plus 3,16,500 plus 31,650, 24,58,150 into 12%, that is 2,94,978. If you total this, that is the total customs duty payable. Plus we need to write the conditions. What are the conditions? The time limit for reimportation is 3 years, and the exported goods and imported goods must be same, and ownership of the goods should not have been changed. So that is about this notification, how it will be tested in exam. Okay, that is notification 45/2017. Hope you understood. Then notification 60/2018. What does it says? It is actually reverse. There first we have imported. Here first we are exporting. So these exported goods are imported. Thereafter it is re-exported. Now on this import we don't have to pay customs duty. Generally on import we need to pay customs duty, but in this case on import we don't have to pay customs duty. But for what purpose the exported goods are imported? Either for doing reprocessing, refining or remaking, repairs or reconditioning. If it is imported for repairs or reconditioning, what is the time limit within which it should be brought to India? If it is notified goods, 7 years, other goods it will be 3 years, and if it is from Nepal and Bhutan, whether notified goods or other goods, the time limit will be 10 years. And if it is for reprocessing, refining or remaking, we don't have that much time limit, it is just the 1 year. What is the difference between reprocessing, refining, remaking versus repair and reconditioning? Repair and reconditioning is depending upon the usage. It is not manufacturing defect. So depending upon the usage, the defect will arise. Whereas reprocessing, refining, remaking is with respect to manufacturing defects. So manufacturing defects immediately we will know. That's the reason why the time limit is only 1 year, but in case of repairs, the time limit is 7 years, 3 years and 10 years. Within that time limit, the goods should be imported and we don't have to pay customs duty. But what we need to do with that goods? We need to complete this reprocessing, refining or repairs, and we need to export it back. What is the time limit within which it should be exported back? 6 months, plus it can be extended for a further period of 6 months, and new goods should not be exported the same goods what we have imported, that should be exported. Imported goods and re-export goods should be same, and importer at the time of importation executes a bond. And suppose if export to import, if there is any process loss, import to re-export, if there is any process loss, it's okay, that will be permitted. That is this: if any loss of imported goods is noticed during that operation, such loss shall be exempted from whole of the customs duties. Then section 21 already we saw. Section 24 refers to denaturing and mutilation of goods. In denaturing and mutilation of goods, what will happen? So first we have imported the goods which has twin purposes. Depending upon the purpose, we need to pay the customs duty. Now we will denature the goods and make it unfit for other purpose. So therefore we will pay customs duty for the purpose for which we have imported. For example, so ethyl alcohol, if used in industry, we need to pay 20% basic customs duty. If not used in industry, for medicinal preparations, if it is used, then we need to pay a customs duty of 5%. Like that we have to. Industrial purpose 20%, medicinal purpose it will be 5%. But we are importing for medicinal purpose, means we should make it unfit for industrial purpose. Accordingly, we will pay only 5%. That is known as denaturing the goods. Mutilation of the goods means when we are importing a machinery, that machinery we have to pay 20%, but parts of that machinery only 5%. Then in that case, you can make it like parts of the machine, and the remaining parts like a body of the machine you can break it, and just the parts of the machine you can clear, so that you will pay only 5%. That is known as mutilation of goods. So owner of the goods will be permitted to make a request for denaturing, diluting the chemicals, and mutilation, that is breaking machinery. Central government may make rules in this regard, and duty is payable as if the goods are imported in the denatured or mutilated form. So we don't have to pay the customs duty in the original form in which it is imported. On the denatured or mutilated form only we pay the customs duty. So these are the various sections that we have related to exemptions. So what we saw is 13, 21, 22, 23 and 24. Okay. All the section references in customs I have given at the end of this book itself. So section reference under customs you can see, so that these sections you will be able to remember. So we have whatever sections that I have not given, which means it is not there in the syllabus. So whatever page number references I have given, which means these are all there in the syllabus. So section 12 which talks about levy, section 13 pilferage, section 14 valuation, section 15 relevant date in case of import, section 16 relevant date in case of export. And then we have seen section 19, so different articles, and section 20 reimportation, section 21 derelict jetsam, section 22 abatement, 23 remission of duty, and section 24 denaturing or mutilation of goods, 25 power to grant exemption from duty. Okay. So these are the sections in exemptions that we have seen. So therefore, whenever you have time, you just quickly go through these sections as to which section deals with what, because in exam, when you are presenting the answer, when you write the answer along with the section numbers, you will definitely get good marks, okay, mainly for that reason, okay. So because see, at final level, they expect you to have the command over the section numbers. People will say, lot of faculties will be telling, writing section numbers and all is not important, you have to write the provision. Yes, that is correct. They are right. But if you write the section numbers, that will create a very good impression. Not that they are going to deduct marks because you have not written the section number. But by writing the section number, you are proving that you are a pro in the subject. Okay, even though you are not, but they don't know the reality. What they know is that they see your answer sheet and they will judge you based on the answer sheet. That's why your answer sheet should be perfect. Then we will look into procedures. In that procedures, there is an important area that is assessment and audit under customs. Look into page number 212. Look into page number 212, assessment and audit under customs. In that, we have two sections. Section 17, which talks about self-assessment. Section 18, which talks about provisional assessment. Section 17 says that every importer will be filing bill of entry and every exporter will be filing a shipping bill. In that bill of entry and shipping bill, they will compute how much customs duty they need to pay, and they need to file that bill of entry or shipping bill with the customs officer. So see the first point, duty to be self-assessed by the importer or exporter. Every importer, so who is filing bill of entry, and exporter who is filing shipping bill or bill of export shall self-assess how much duty they need to pay. And once the bill of entry or shipping bill is filed with the customs portal, what is that customs portal called as? ICE gate. And right now we have faceless assessment under customs. Faceless assessment means whenever we file the bill of entry, not necessarily it will go to our jurisdictional officer, it may go to any officer, because that's how right now the faceless assessment is being operated. So in faceless assessment under customs, what will happen? An importer will file a bill of entry with the ICE gate. When he files a bill of entry with ICE gate, it will go to risk management system. In risk management system, we have officers in many jurisdictions. Now, whichever officer is available at that particular point of time, it will allocate the bill of entry to that officer. That officer need not be our jurisdictional officer. And once it is allocated to that officer will verify this bill of entry and will be uploading the details in the portal. Thereafter, we get the electronic clearance to bill of entry upon payment of customs duty. Sometimes during this verification, if they find that whatever details that we have submitted is not correct, the value that we have quoted is not correct, or the customs duty computation we made is not correct, they will reject the bill of entry, and we need to rectify that, and again we need to file the bill of entry. So basically this is how it will work. So bill of entry that is identified for scrutiny is assessed to an assessing officer who is physically located in a customs station, which is not the port of import in the customs automated system. It separates what? Assessment process from the physical location of the port of import using a technology platform. From importer perspective, there is no change in the process of filing bill of entry. So as soon as the bill of entry or shipping bill is filed, what customs officer will do? Come on, respond. He will take up the bill for verification. So that is the second step. In self-assessment, the first step will be importer filing bill of entry or exporter filing shipping bill or bill of export. And step number 2, that bill of entry or shipping bill will be taken up for verification by the proper officer. Whether all the bill of entries will be taken up for verification? No. Selected bill of entries which requires verification based on risk parameter basis. They will have some risk parameters, like that importer might have committed a fraud in the past, or maybe huge imports he is making in the short span of time. Like that, many parameters are there. Based on that parameters, they will be selected. So few bill of entries or shipping bills selected on risk parameter basis. It is like scrutiny assessment. And once they take this return, like bill of entries or shipping bills, if everything is perfect, okay, self-assessment is completed. If it is not perfect, so then they will reassess the customs duty payable. So how they will reassess the customs duty payable? As per rule 4, identical goods, or rule 5, similar goods, or in case of deductive value or computed value, they will compute how much customs duty we need to pay. That is known as reassessment of duty by proper officer. If self-assessment is not done correctly, thereafter importer has two options. He may agree and pay the reassessed customs duty, pay by amending the bill of entry or shipping bill, or he will request for the speaking order. So that is, he will ask the officer to pass the assessment order, and he want to contest that assessment order, so he will go for appeal. So speaking order for reassessment to be passed unless importer agrees with the reassessment within 15 days from the date of reassessment of the bill of entry or shipping bill. What importer or exporter will do with this reassessment order? They will go for appeal, because they are not satisfied with the reassessment which is done by the officer. This is about self-assessment. Mostly it will be a theory question. If at all you get a question in assessment and audit, you will get two types of question. One is a theory question on self-assessment. Another one will be computation of interest in case of provisional assessment. So look into provisional assessment. What are the situations that leads to provisional assessment? Total 4 situations we have. So in case of GST, what is the reason for provisional assessment? If the taxpayer is unable to compute the value or unable to determine the rate of GST, then they will make application to the proper officer for doing the provisional assessment. So only one reason. So whenever the taxpayer unable to compute value or rate, they will make an application. That is in case of GST. But in case of customs, it is not like that. In case of customs, there are total 4 reasons. First one is same, both in GST and customs, that is importer or exporter unable to do the self-assessment. Second case, proper officer deems it necessary to carry out chemical examination or test. You have imported, like what I said, so white color powder, and you are mentioning it as maida. But officer has a doubt that it is not maida, some other product. So for that reason, they want to carry out chemical examination or test, correct or not? So because, you know, they have to carry out the test, they will not eat and see, okay? Really, they will carry out the test. And in one movie also, like Ganesha idol, it was brought. But in that idol inside, there will be cocaine. So what will they do? So in that ethanol, they will dip that Ganesha idol and they will separate plaster of Paris with cocaine. Like that, you know, that will be done. That is known as chemical examination or test. So if the officer wanted to carry out chemical examination or test, then also they will go for provisional assessment. Or necessary documents not produced before the customs officer, and customs officer want to carry out further inquiry, then also they will go for provisional assessment. Finally, necessary documents you have produced, but these are not sufficient with the officer, so he wanted to carry out further inquiry, then also provisional assessment. Again, this can also be given as a theory question. What are the reasons for provisional assessment under customs? Tell me, what are the 4 reasons? Come on. Number 1, importer or exporter unable to do the self-assessment. Number 2, proper officer requires chemical examination or test. Proper officer requires documents which are not produced, or last case produced but are not sufficient, okay? Then in provisional assessment, first they will pass an order for provisional assessment and they will intimate the person to furnish the documents within 15 days. So therefore, first order for provisional assessment for want of documents. Thereafter, 15 days time limit is given to produce the documents, and the person has to submit the documents within 15 days, or it can be extended for a further period of 3 months, or further 3 months by ACDC, or unlimited time by the commissioner to submit the documents. So what is the time limit? 15 days. It can be extended for a further period of 3 months by customs officer, further 3 months by ACDC, assistant commissioner, deputy commissioner, or any time limit by the commissioner. And if the documents are submitted within that time limit, so whenever the documents are submitted, from the date when documents are submitted, within 2 months, they need to complete the final assessment, finalization of provisional assessment within 2 months from the date of receipt of documents. What if the documents are not submitted? There is a time limit not to submit the documents. On expiry of the time limit, within 2 months, they need to complete the final assessment. So what is the time limit within which they need to complete the final assessment after provisional assessment? Come on. Documents are submitted from the date of submission of documents plus 2 months. Suppose documents not submitted, the time limit to submit the documents plus 2 months. And this 2 months can be extended for a further period of 3 months by the commissioner. Now, 3 situations may arise at the finalization of assessment. If the final assessment is more than provisional assessment, should we pay the differential amount or not? Yes, we need to pay the differential amount, and along with interest. What is the rate of interest? 15% per annum. From which date to which date? From the first day of the month in which provisional assessment is resorted till the actual date of payment of the differential amount. For example, if the provisional assessment is passed on 18th of March, we need to compute interest from 18th March or 1st March? 1st March. Read it carefully. Differential duty payable along with interest at 15% per annum from the first day of the month in which provisional assessment is ordered till the date of payment of differential duty. Suppose if final assessment equal to provisional assessment, then in that case any amount is payable or refundable? Nothing. Suppose if final assessment amount is less than the provisional assessment amount, we need to get a refund. And what is the time limit within which they need to grant refund? 3 months from the date of final assessment. If they are not giving refund within 3 months, then they need to give us a interest. What is the rate of interest? 6% per annum. So when we pay interest, it is 15% per annum. When they give interest, it will be 6% per annum. So differential duty shall be refunded within 3 months from the date of finalization of assessment. If not refunded, interest at 6% per annum is payable for the delay period after 3 months. And importer shall execute a bond even for provisional assessment. In case of warehousing, that bond is thrice the amount of duty payable. But in normal cases, they have not given what is the value for which bond is to be executed. Just remember, the bond needs to be executed. And furnish security in the form of bank guarantee. And refund of differential duty upon final assessment is subject to unjust enrichment. What is the meaning of unjust enrichment? We need to prove to the officer that we have not transferred the burden to the next person. For example, provisional assessment duty is 10% and we recovered the 10% from our customer, and thereafter they are reducing the rate from 10% to 8%. Will we get the refund of 2%? No, because already we recovered 10% from the next person, so we will not get the refund. So we need to prove to the officer that we have not recovered 10% from our customer, then only we will be able to get refund. What if we recover 10% from our customer? Who will get the refund? Our customer will get the refund. Okay, so the person who borne the incidence of tax will get the refund of the tax or refund of the duty. Provisional assessment is applicable for both import and export, and remember the common penalty for all the provisions in customs is up to 50,000. Suppose if you get a MCQ on penalty under customs, 50,000 is the option. You understood? Don't say anything, whichever option has 50,000. What penalty, what reason, everything, no. Customs penalty 50,000. You understood? Everywhere it will be up to 50,000 for contravention of these provisions. Then look into audit under customs, section 99A. What we have as audit under customs is a post clearance audit. At the time of clearance, we are not required to get the accounts or books audited. So post clearance audit, that is after we complete the clearances, the customs officer will ask the auditee to either bring the documents to the customs officer's place, or the customs officer will visit the premises of the auditee for the purpose of audit. And who is called as auditee under customs? You can see that auditee can be, like any person, importer, exporter, custodian, or even it can be the warehouse keeper, or it can be the transporter. Any person who is engaged in the imports and exports will be called as auditee. Okay. So post clearance audit, structured examination, post clearance of goods from the customs of business relevant commercial systems, sale contracts. So what and all they can verify? Commercial systems, sale contracts, financial and non-financial records, even physical stock and other assets. And the proper officer may carry out the audit. Where they can carry out the audit? Either in the office of the premises, office of the officer, or in the premises of the auditee. And I told you who will be called as auditee. Auditee means any person engaged in, import or export. In import or export is known as auditee. And we have certain regulations in this regard. Regulation 3 says that records to be preserved by the auditee for a minimum period of 5 years. And in case of GST, this 5 years will be 6 years, 72 months. Okay. So in customs, what is the period for which we need to maintain records? 5 years. In GST, it will be 6 years. And it may be manual or electronic and made available to the proper officer as and when demanded. And selection of auditee is on risk parameter basis. Not that every importer and exporter, they will do the audit. And audit can be conducted at the auditee's premises. A 15 days notice to be given. In case of GST, a 15 working days notice to be given. In customs, it is 15 days. In GST, it will be 15 working days prior notice will be given. And regulation 6 says that CRCMA can be appointed for assisting the audit. But this audit will be done by department, customs department. But if they want, they can take the help of CRCMA on prior approval of the commissioner. And contravention of any provisions of these regulations will lead to a penalty of up to 50,000 rupees. I told you the penalty will be always 50,000 rupees. Then look into interest on account of delay in payment of customs duty. So when we need to pay customs duty, generally, that is in case of imported goods, normal assessment, not provisional assessment, normal assessment, self-assessment, when we need to pay the customs duty. So we have two options here, that is immediate payment option and deferred payment option. Immediate payment option means suppose you are filing bill of entry today. Once you file the bill of entry today itself you will get the acknowledgement for the bill of entry. Then today itself you should complete the payment of customs duty. Otherwise for every day delay you need to pay interest at the rate of 15% per annum. That is known as immediate payment option. On the date of presentation of bill of entry itself you need to pay the customs duty, otherwise interest at the rate of 15% per annum for every day delay. Practically, it may not be possible for them to pay the customs duty on the date of filing the bill of entry. So they will go for deferred payment of customs duty option. So to whom deferred payment of customs duty option is available? To the notified importers and exporters. Government from time to time will be giving deferred payment facility. Under deferred payment facility, what they need to do, they don't have to pay the customs duty immediately on filing the bill of entry. If the bill of entry is filed between 1st to 15th of a month, okay, they need to file, they need to pay the customs duty by the 16th working day of that month. Bill of entry returned for payment from 1st to 15th day of a month. Due date is 16th day of that month excluding holidays. For example, if you take September month, September 1st to September 15, between September 1st to September 15, so we have filed the bill of entries. No need to pay customs duty immediately at the time of filing bill of entries. We need to see the 16th working day. What is the 16th working day? Between 1st to 15, how many Sundays are there? 1, 8, 15. These are the 3 Sundays. And only public holidays and that government holidays will be taken. Festive holidays will not be considered as holidays under customs. So therefore that will be given in the question itself as to what are all the holidays between 1st to 15th, like that. So in this case, say Sundays are the holidays. So 3 Sundays. Now what is the 16th working day? 16, 17, 18. You add 3 Sundays, na? These 3 Sundays you add here. So therefore 19th will be taken as the due date. Are you understanding? So if the bill is filed between 1st to 15th of the month, 16th working day of the month. Suppose if the bill is filed between 16th to end of the month, so 16th to end of the month, next month first working day. What is next month first working day? Excluding the holidays. So between 16th to 13, how many days holidays? 2 days. 2 days holidays, na? So now 2 days holidays you add for the next month. October 1st, October 3rd. So October 4th, because October 2nd is a holiday, na? Public holiday. So October 1st, October 3rd, and therefore the next working day is what? 4th. So 4th October will be taken as the due date for payment. Are you understanding here? So tell me these 2 points. If the bill is returned between 1st to 15th of the month, the due date is 16th working day of the month. If the bill is returned between 16th to end of the month, next month first working day, that is excluding the holidays. And in case it is 31st March, the due date will be 31st March. And we need to pay interest at the rate of 15% per annum for every day delay beyond the due date, if you have not paid by this due date. And suppose if the duty is payable on account of reassessment or provisional assessment. I told you, we will make application for provisional assessment, or proper officer under customs will order for provisional assessment. He will ask us to pay some provisional duty, na? By when that provisional duty we need to pay? Within 1 working day. Also in self-assessment they will do reassessment, na? That reassessment duty by when we need to pay? Within 1 working day from the date of reassessment. So the provisional assessment duty and reassessment duty we need to pay within 1 working day from the date on which bill of entry is returned by the officer for payment of customs duty. Otherwise, we need to pay interest at the rate of 15% per annum. Whereas differential duty, that is when provisional assessment gets finalized, we need to pay differential duty. In case of the differential duty, what is the interest that is payable? 15% per annum. From which date to which date? From the first day of the month in which provisional assessment is passed till the date of payment of that differential amount. Are you understanding this here? Now, mainly on this interest computation, we will be having some questions. So, we will see that. Yes, say this. Maurice Lal has imported goods from Germany and is finally reassessed under section 18. Means what? Provisional assessment. Section 17 is self-assessment. Section 18 is provisional assessment. Section 18 of the Customs Act, for 2 such consignments, particulars are as follows. Date of provisional assessment is 12th December. Date of final reassessment is 2nd February. Duty demand for first consignment 1,80,000, refund for second consignment 4,20,000. Date of refund made by the department 28th April, date of payment of duty demanded 5th February. So now determine the interest payable and receivable. For the first consignment we will see. For the first consignment, what is the differential amount payable? 1,80,000. And we need to compute interest from which date to which date? What is the date of provisional assessment? 12 December. But we need to compute interest from 1st December till the date of payment of the duty, that is 5th February. So from 1st December, December 31 days and January 31 days and February 5 days. So we need to compute interest for 67 days. That is 1,80,000 into 15% into 67 divided by 365, 4,956. Whereas in case of refund, what is the time limit within which they need to grant the refund? So 3 months from the date of final assessment. So what is the date of final assessment? 2nd February. From 2nd February, you count 3 months. 2nd March, 2nd April, 2nd May. And when are they giving the refund? 28th April. Is it within 3 months? Yes. So whether they need to give us any interest or not required to give interest? Not required to give interest. Got it? So mainly like this, on this provisional assessment, etc., we will get questions like this. Otherwise, theory question. So like state the due dates for payment of deferred customs duty under clear first pay later scheme. Clear first pay later is actually deferred payment. Okay. Next. Look into the previous part, procedures. Page number 202. Mainly this will be for MCQ purpose, whatever procedures that we are going to discuss now. So look into this, import procedures. So in case of import procedures, these 12 points you need to understand. What will happen is that first the exporter will hand over the cargo to the shipping company, and the shipping company will give bill of lading. Bill of lading is a document of title. Whomsoever is holding bill of lading, that person is the owner of the goods. Now what exporter will do, will be sending that bill of lading to the importer, and importer, when he submit bill of lading, he will be able to prove that he is the owner of the goods. Now fourth step, the master of the vessel will bring the vessel to India, and he will be filing import manifest with the customs officer. Arrival report and import manifest, and the customs officer will give grant of entry inwards. But grant of entry inwards is not applicable in case of aircraft and in case of vehicle, but in case of vessel only it will be applicable. So once grant of entry inwards is given, the master of the vessel will unload the goods with the port trust authorities, delivery of cargo. So up to this, the master of the vessel job is over. Thereafter, importer will file the bill of entry with the customs officer, either bill of entry for home consumption or bill of entry for warehousing, and customs officer will give out of customs charge order. If the bill of entry is for home consumption, upon payment of customs duty, the customs officer will pass out of customs charge order. Suppose if the bill of entry is inbound bill of entry, the customs officer will pass warehousing order. So here out of customs charge order means what type of bill of entry he would have filed? Bill of entry for home consumption. And out of customs charge order means that importer has paid the customs duty. Thereafter, importer will submit bill of lading with the master of the vessel, and the master of the vessel will be giving the delivery order to the importer, which means he is the owner of the goods. So these two order copies, what are the two order copies? Out of customs charge order and delivery order, he will submit to the port trust authorities. Port trust authorities are the custodian of the goods, and they will release the imported goods. So these are the various steps that is involved. Now, in case all the import and export procedures are through customs portal, I told you icegate.gov.in. In case of import by aircraft, so wherever this bill of lading comes, this bill of lading is replaced with a different document called as airway bill. Okay, so see this, in case of import by aircraft, 2, 3 and 9, 2, 3 and 9, this and this will be called as airway bill. Same way in case of import by vehicle, these documents will be called as lorry receipt or railway receipt. And in case of aircraft and vehicle, grant of entry inwards is not required for arrival, but it is required for unloading of the goods. This point also I stressed. Now, what are the compliances to be followed by person in charge of the conveyance? So who is person in charge of the conveyance? Already we know. In case of vessel, master of the vessel. In case of aircraft, it is pilot. In case of vehicle, it is driver or conductor or any other person. And place of arrival, at which place they need to come? Only to the customs port or customs airport or land customs station. In case of vessel, it is customs port. In case of aircraft, it is customs airport. In case of vehicle, it is land customs station. Not all ports and airports will be called as customs port or airport. Only notified ports and airports will be called as customs port or airport, where import and export is permitted. And then they need to file import manifest, import report or arrival manifest. In which case import manifest? In case of vessel, import manifest. In case of aircraft, arrival manifest. In case of vehicle, it will be import report. When it should be submitted? Import manifest should be submitted before the arrival. So any time prior to the arrival of the vessel. Arrival manifest also any time prior to the arrival of the aircraft. But import report, when it is to be submitted, within 12 hours after its arrival. And how this should be submitted? Import manifest and arrival manifest will be submitted electronically, whereas import report will be submitted manually. But in case when it is not practically possible to submit electronically, commissioner may allow manual filing also. And what is the penalty for belated filing? Come on. 50,000, up to 50,000. And file passenger name record information, that is along with the import manifest, arrival manifest or import report contains the details of the goods present in the conveyance. They need to also submit passenger name record information as to who are the people who are coming in the conveyance along with the goods also. They need to submit the details. And in case of import by vessel, goods can be unloaded only after obtaining grant of entry inwards, only in case of vessel. And goods will go into custody of the custodian as per section 45, and the custodian will ensure safe custody. What if during this stage, if the goods are pilfered, who will be paying the customs duty? Already we discussed. In case of pilferage, custodian is liable to pay customs duty. Only those goods which are mentioned in import manifest, arrival manifest or import report should be unloaded, and other goods should not be unloaded. And these unloaded goods should be kept only in the approved place. And goods should be unloaded under the supervision of the proper officer. And for unloading, if small boats are required, what is this? Sometimes when the ship cannot come, the ship will be anchored. From there to shore, the goods will be brought through boats. So these goods should accompany a document called as boat note. Read this. For unloading, if small boats are required, then they shall obtain boat note from the customs officer. Suppose if unloading is on holidays and after office hours, they need to pay some extra charges. What is that extra charges? Known as MOT charges, merchant overtime charges. These are the various sections that we have for the complaints to be followed by person in charge. Then, what are the compliances to be followed by the importer? Imported goods, whatever is unloaded, will remain in the custody of custodian, who shall be responsible for imported goods till clearance, and the importer should be filing a bill of entry. That bill of entry will be filed electronically through ICE gate. What are the three types of bill of entries? Already we know. Bill of entry for home consumption, for import goods cleared for home consumption, bill of entry for warehousing or inbound bill of entry for keeping the goods in the warehouse without payment of customs duty, exbound bill of entry for home consumption for clearance of goods from the warehouse upon payment of customs duty. When this bill of entry should be filed? Bill of entry should be filed before the date of arrival. Can I file it 3 days before the date of arrival, or 5 days before the date of arrival, 10 days before the date of arrival? Yes. So up to 30 days prior to the date of arrival, we can file the bill of entry, but not beyond that. For example, I filed a bill of entry and within 30 days, the vessel or aircraft has not arrived, which means the bill of entry that I have filed will expire. So what is the validity of the bill of entry that is filed? 30 days. 30 days. If it does not arrive within 30 days of filing bill of entry, a fresh bill of entry is required to be filed. What is the late fee for delay in filing bill of entry? Already we discussed. If the delay is up to 3 days, 5,000 rupees per day. If the delay is beyond 3 days, 10,000 rupees per day. And what is the maximum late fee? 100% of customs duty payable. And in case of exempted goods also, we need to file bill of entry, but maximum penalty will be 50,000. Okay. Then whenever we file the bill of entry, suppose if the bill of entry is for home consumption or export bill of entry, we need to pay the customs duty also, and the customs officer will pass out of customs charge order. What is the time limit within which we need to file bill of entry once the goods are unloaded? Say we could not file the prior bill of entry, we missed it. we want to file a later bill of entry. What is the time limit within which we need to file that? 30 days. Once the goods are unloaded, within 30 days, if you are neither filing a bill of entry for home consumption nor filing bill of entry for warehousing, the goods will be either be auctioned by the customs officer, or the customs officer will deposit the goods in the warehouse, and this warehouse is not done by you. This warehouse is done by the customs department. So please read the next paragraph. If the goods are not cleared for home consumption or warehousing within 30 days after unloading, such goods may be disposed of by the custodian, or officer may deposit such goods in a warehouse for 30 days, and beyond 30 days for a further period of 30 days, commissioner should approve. So 30 plus 30 plus 30 like that. So every 30 days if they want to extend, they need to get a permission from commissioner. And export procedure, see this. Export procedure, we don't have that many formalities. So first what will happen, exporter will bring the shipping bill along with the goods and will file with the customs officer, and when the shipping bill is produced with the customs officer will verify the shipping bill and pass a let export order. Thereafter the goods will be handed over to the person in charge along with the shipping bill, and person in charge will obtain grant of entry outwards, and then he will load the goods into the ship. But in case of baggage, it can be loaded without permission, and this step is not applicable in case of aircraft or vehicle, because in case of aircraft or vehicle, we don't have grant of entry inwards or grant of entry outwards. Then the person in charge will submit the export manifest. This export manifest is called as departure manifest in case of aircraft and export report in case of vehicle. And what are the complaints to be followed by person in charge? Loading of goods only at approved place. They are unloading only at approved place, here loading at approved place. Loading only under the supervision of proper officer. They are unloading under the supervision of proper officer, here loading under the supervision of proper officer. Loading with the help of small boats. They are unloading with the help of small boats, boat not required. But here loading with the help of small boats, boat not required, because shipping bill itself will be sufficient. Loading on holidays and after office hours, merchant overtime charges, same point there also. And shall obtain entry outwards from customs officer before loading the goods, but this is applicable only in case of vessel. And they need to file export manifest, departure manifest or export report, and they need to file passenger name record information, and should obtain permission to leave India from the customs officer. Actually all these points from the context of import if you see, so that you replace it from the context of export, that is this. Then what are the compliances to be followed by the exporter? They should submit shipping bill in case of vessel or aircraft, bill of export in case of vehicle by electronic mode, and they need to self-assess and pay the customs duty either under section 17 or 18, and they shall pay customs duty if applicable immediately on filing shipping bill or deferred payment facility. But basically deferred payment facility is not yet enabled for exporter. We have deferred payment facility only for importer. And they shall obtain the late export order. These are the compliances to be followed by exporter. Clear? Then we have transit and transshipment of goods. So before that, few queries here. Let me answer. Sir, in case of application of Kesoram and case, will there be any interest implication on IGST amount? Yes. Like how we pay the customs duty, even IGST also will be part and parcel of customs. Rule 10 is there in which chapter? In That's It book, valuation chapter. Sir, in case of consignment bond, isn't it better to pay the duty and release the goods instead of paying 3 times the duty? Actually in bond we will not pay the duty. Please don't have that misconception. Bond when we are executing, it is a document, stamp paper. We are not paying that amount. We execute a bond. For example, we execute bond for 10 lakhs means are we paying 10 lakhs? No. 10 lakhs related stamp paper. What is the stamp duty? In Tamil Nadu say 2.5%. So 10 lakhs into 2.5%, that is 25,000 rupees worth of stamp paper we will sign. Okay. So that is what we do. So not that we will pay 10 lakhs and all. And next, abatement of duty available for warehoused goods. But in suggested answer of test 6, you mentioned that abatement of duty is allowed on any imported goods other than warehoused goods. Is it? I don't know here. Let me check that. Sir, in Ganesha example, wherever test performed by the officer, if the test fails, then it considers as remission of duty. First of all, what happens is that they are doing a test. So they are asking us to pay the provisional duty. Suppose if the test fails, then we don't have to pay duty, and whatever duty already paid, we will get it as a refund. What is the time limit within which we need to get the refund? 3 months from the date of final assessment. That will be applicable. Okay. Now, look into this question. Yes, question number 16, you can see here, it's a December 21 exam question. For 5 marks they have asked, Supreme car decars imported car music systems and GPS devices from Germany. The importer submits the following issues for your consideration. 7 music systems were pilfered before unloading and before the proper officer has made an order for clearance for home consumption. Actually, pilferage should have happened after unloading and before order for clearance. But before unloading itself, if the pilferage has happened, actually there is no levy for payment of customs duty because of that Mangalore refineries case. Is it clear? But in that suggested answer, what they are telling is that pilferage can be claimed like that they have mentioned. But this is actually the answer as per suggested. But reality, suppose if the same question you get now, what you need to write? First you need to write for this, if the pilferage has occurred before unloading, there is no levy of customs duty under section 12 as held by Supreme Court in Mangalore refineries case, accordingly customs duty not payable. However, if the customs department insists on filing bill of entry for all the goods, then in that case we can claim the pilferage under section 13. Like that you need to write. Don't write directly pilferage. Mention about that Mangalore refineries case, and thereafter if the customs department insists on filing bill of entry for all the goods, then we can claim the pilferage under section 13. Then 10 GPS devices were pilfered after unloading and before the proper officer has made an order for clearance for home consumption. So can we claim pilferage? Yes. Here we don't have to write about Mangalore refineries case because after unloading, before order for clearance. And 30 music systems were damaged. See the wording? Damaged. So after unloading and examination for assessment by the customs authorities, but before actual clearance. In this case, can we claim pilferage? No. In case of damage, we need to claim abatement. So therefore, we need to write about the provisions of abatement. So like that, depending upon the situation, you need to apply the relevant section. Okay. Then say this, on definitions, we may get questions like this. Examine the validity of the following statements. A beneficial owner of imported goods is a person on whose behalf the goods are imported. True or false? True. Customs area does not include warehouse. False. Customs area includes warehouse. Customs station includes international courier terminal. Yes. International courier terminal means in airport, whenever the goods are imported by courier, So one terminal will be dedicatedly given to the customs authorities, that is known as International Courier Terminal. Okay, fine. So with this we will stop for today. I am leaving half an hour early. Okay, so the remaining portion, what we have, few areas only in customs that is left, that is stores under customs, and then in procedures few points, and then we have refunds and FTP that we will discuss tomorrow, and we will continue with GST. So mostly by first session we will complete all these things, because I told you FTP fully not required, only some selected areas, important areas we will see. And in our second session we will be starting with input tax credit. So tomorrow agenda is that we will discuss input tax credit, and even if time permits we will also be covering exemptions, RCM. Okay, so very important areas I wanted to start first, so that's why tomorrow that is the agenda. Day after tomorrow we will be discussing about place of supply and this volume 2 topics, refunds, search, seizure, offense and penalties, demand and recovery, those things we will see, and on the last day the remaining topics in GST. Okay, so that's how we are going to discuss. Fine, and tomorrow we will meet. Tomorrow class is from 9:30. Today I started at 10 o'clock because being the first day. Tomorrow the class will be at 9:30, and mighty 50 questions. So the top 50 questions, usually every attempt I will be giving. So this attempt also I will give, but I am not able to give it now because I have to analyze the MTPs. So ICI has not yet uploaded the MTPs, series 1, series 2, etc. So due to that reason I need some time. By end of this month I will give you mighty 50, and even I will record that in the YouTube and I will post it in that. Okay, don't worry, that will be there in that. Fine, we'll meet tomorrow. Yes, fine, thank you.